the Indian market. Brent crude settles about 1% higher at about $75 a barrel on Friday, but oil prices have now declined for the fourth straight quarter. Expectations of further rate hikes also see gold register its first losing quarter in the last three. Maruti's compact car sales and Hero Motors June deliveries miss estimates with stress seen in the rural segment, while exports also slump. Tata Motors delivers its best ever quarter for EV sales, although commercial vehicle sales remain subdued. Eicher's Royal Enfield sales comfortably beat street estimates. The mega banking merger is finally complete as HDFC folds into HDFC Bank from the 1st of July. The merged financial behemoth now commands a market cap bigger than Morgan Stanley and ranks fourth in terms of global equity market capitalization. Senior Nationalist Congress Party leader Ajit Pawar takes oath as the second Deputy Chief Minister of Maharashtra. Reports suggest he has the backing of 40 MLAs and 8 members of the Legislative Council. NCP Chief Sharad Pawar denies support to the rebels and says he remains the face of the NCP. Good morning in the Mumbai News Centre. I'm Sonal Bhutra. You're watching Power Breakfast. A fresh new week. It's a Monday morning. We do have a lot of global cues to talk about as well and our own cues. But first up, as always, let's take a look at what the Asian markets are doing. Largely mixed in trade despite a strong handover that we got from Wall Street, where we do have strong moves coming in for the Hang Seng market, which is up around 300 points. The Taiwanese index is up around 165 points as well. We do have the Nikkei, which is high by 1.5%. So across the board, it is looking good as far as the Asian markets are concerned, barring Straits Times, which is lower in trade as we speak. We did get the Caixin data right now, and that suggested that the Chinese economy grew slower in the month of June. So that is one of the macro data that we are looking at. But let's go across and talk about GIFT Nifty, because GIFT Nifty is replacing SGX Nifty now, and that one is indicating a higher start for the Indian markets, comparing it with Friday's Nifty futures close, and that one is trading at a premium as we speak. So 19,354 on the GIFT Nifty right now. So that's a new transition that we are talking about. But let's go ahead and talk about the US markets. Wall Street ended Friday's trading session higher, with the Dow Jones surging over 280 points, while the S&P 500 and Nasdaq Composite settled with strong gains of over 1%. The three major averages also notched winning weeks, gaining more than 2% each. Apple's market cap closed above $3 trillion for the first time ever on Friday. This is the second time Apple has hit the $3 trillion market cap, but the first time it held onto the market through the close. Tesla tops expectations as price cuts and manufacturing ramp up lift deliveries in the second quarter. Deliveries, in fact, rose over 80% year over year for the company. Okay, let's also listen into some important voices on rate hikes expectations and the way forward for the US markets.
They should hike. In fact, Chair Powell told us yesterday that a majority of the FOMC expects at least, he used the word at least, 2 more hikes. So if they are serious about 2%, they should hike. Because the Fed was late, inflation has gotten embedded in the service sector. And to get to inflation in the service sector via interest rate, you undermine the goods sector. So that is the trade-off they need to make. They want to maintain optionality right now. That's why they paused at the last meeting. But let's hope that's not the muddled middle, because getting to service inflation is tricky.
Meanwhile, getting you some more global updates, US Treasury Secretary Janet Yellen will head to Beijing for a 3-day visit starting Thursday. She will hold discussions with senior officials on a series of macroeconomic and financial issues. Deepening of communication between the two countries is also on the agenda. Okay, that's the global market action, but how will these overnight cues impact our own markets? We have our research team joining in to tell you just that. The trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Let me go across to Vivek first up, joining in with what the market setup is looking like today. Hey Vivek.
Well, good morning. It's a fresh start. It's a new week. It's the second half of 2023. And, this time around, we'll no longer be talking about the SGX Nifty, rather it's the GIFT Nifty, like we've been mentioning. And the GIFT Nifty, starts off on a record note. First half, all of the Indian indices, the Nifty, Nifty Bank, Nifty Midcap, all of these ended at lifetime highs. The Qs too overnight are very strong. So looking at the US markets, all of the US markets ended in the green and posting very strong first half. In fact, the Nasdaq gained over 31% for the first half of the year. Along with that, some positive flow coming in from Tesla as well, given the fact that the company has delivered a very strong production and delivery numbers, beating expectations, leading to a further rally as far as the US markets itself are concerned. Both European markets too ended with gains, and oil prices continued their fourth straight quarterly decline. But now coming to the Indian markets, like we mentioned, trading near lifetime high, the key question now is that whether this particular rally can sustain post Q1 as well. Now, talking about some of the key trends, number one, auto sales numbers. Most of the heavyweights have declared their auto sales for the month of June. Maruti, Hero, Escort, Tata Motors, Eicher Motors, all of them will react to these numbers. Quarterly updates coming in from key companies as well. So Ultratech Cement, CSB Bank, Karur Vysya Bank, all of them posted their quarterly updates. Watch out for Ultratech Cement, good set of numbers, good volume growth, as well as market share gains. And lastly, watch out for primary market activity trends as well in this particular week itself. Idea Food, signs of very strong subscription, and a couple of other smaller SME companies too coming to get onto list to the bourses.
Okay, thank you so much. So a lot of action in the primary markets as well. But of course, the big news is that the SGX Nifty has now transitioned to the GIFT Nifty index. All futures trading on the SGX Nifty will be routed through the GIFT Nifty. Yash is joining us now from Gandhinagar to tell us more about the new index and what it could mean for investors. Yash.
Well, Sonal, it's essentially time to say goodbye to SGX Nifty and hello to GIFT Nifty. But is it just the name that changes? Absolutely not. Because starting today, what will happen is all futures trade on Nifty, which were placed on SGX Nifty earlier, will be routed to GIFT Nifty, this exchange NSE IFSC here in GIFT City of Gandhinagar. Not just that, the settlement and the matching of these trades, like you can see on the screen behind me, which is currently ongoing, will also happen here at the NSE IFSC index exchange under SGX India Connect IFSC or SGX ICI. Now, as far as the trading hours are concerned, 21 hours of trading each day. The first session between 6:30 a.m. to 3:40 p.m. and the second session from 5 p.m. to 2:45 a.m. In total, about 21 hours. What does this entail? As far as the transition is concerned, $9.5 billion of open interest makes its way to GIFT Nifty. Also, the management expects $1.5 to $2 billion of average traded daily volume as far as GIFT Nifty is concerned. As far as GIFT Nifty and the products are concerned, in this series, there would be 4 products which will be traded. First one, GIFT Nifty 50, then GIFT Nifty Bank Nifty, then GIFT Nifty IT, and financially, GIFT Fin Nifty. As far as who can trade and who cannot trade is concerned, retail Indian investors are still kept out of trading as far as GIFT Nifty is concerned. But as far as people who can trade are concerned, Indian brokers and subsidiaries can sign up funds, high net worth individuals, non-residents, Indians, family-owned offices, and they can take proprietary as well as client-based trades towards this particular route.
Okay, all right. Thank you so much, Yash, for joining us from Gandhinagar and giving us all those details. So that's about GIFT Nifty. But let's talk about some stocks that will be in focus as well. Surbhi has that list. Hey, Surbhi.
Good morning, Sonal. So first on my radar is Reliance. Reliance and BP commenced production from the third deep water field in India's KG D6 block. Next is Vedanta. The board considered and approved the strategic review of steel and steel raw materials business. A lot of Q1 business updates coming in. NMDC, their production was up 20% for Q1 and the sales volume was up 45% on a year-on-year basis. Ultratech, the total Q1 sales volume was up 20% on a year-on-year basis. Mazgaon Dock, the Defence Ministry signs a contract worth 27-25 crores. And lastly, a lot of auto companies will be in focus as their monthly sales numbers are out.
Oh yes, that's a long list as well. Thank you, Surbhi, for all those stocks that are on our radar today. Let me go across to Manglam, joining in with all the cues from the F&O space. Hey, Manglam.
Good morning. So as we kickstart a fresh new week, the market's record run continues. In fact, on Friday's trading session as well, the Nifty scaled new peaks. 19,200 is what it touched and closed just below that. The Nifty, Nifty Bank and the mid-cap index, all of them ending at a record high. And this morning, it's a gift that has been given to us by the GIFT Nifty itself. It is a positive start. So that is something we will be watching out for going forward. What stood out on Friday's trading session with the way cash markets were buoyant. The FIs pumped in almost 6,400 crores. The DIIs around 1,200 crores. taking the overall inflow closer to the $1 billion mark. Notwithstanding a lot of the bulk deals that took place out there as well, but this was money in our markets nevertheless. And there was a lot of money in index futures as well, 1,540 crores added by the FIs, and this is day one of July series itself, and they added about 17,000 long contracts to the tune of just around 680 short contracts. So as a result of which, their overall long contracts, which are around 53,000 at the start of the series, have jumped all the way up to 72,400, and 69% of the FII positions are now on the long side. The other thing that stood out was the massive put writing that we saw, and this is again day one of a new series itself. So just 2.2 lakh calls written, versus that we have 3.5 lakh puts written, and the calls that were written were close to around 19,200. We saw a lot of writing at the 19,100 put for a premium of 50 odd rupees. 19,200 call and 19,300 calls were extremely active as well. So what does the option action suggest? Well, the Nifty range is support coming in at 19,000, 19,050. Congestion at 19,270 and 19,330. Important point to watch out for: the put call ratio closer to 1.6 is overstretched, so it'll be perhaps prudent to wait out the first hour of the SGX Nifty opening and watch out for buy only levels closer to 1950, 19,000 itself. A bunch of stocks which saw a long position build up, and then we also saw a lot of shorts added on MCX on Friday.
Okay, all right. Thank you so much, guys, for joining us. Thanks, Mangalam, for all those F&O cues. With that, we'll slip into a break. Up next, we'll get you excerpts from our conversation with CBIC Chairman Vik Johri on account of the GST completing 6 years.
Individual news pieces. So we had ACC lower, Z Entertainment lower, AB Fashion because of valuation, City Union Bank lower as well. But the stars were definitely the small caps. So we saw names like Balu Forge, we haven't heard of, up 160% this year. Titagar up around 125%, Zentech 124% as well. And big gains coming in for Chennai Petro and RVNL too. But with all of this, just keep an eye out on the valuations. The Nifty on a one-year forward basis currently trades at 19 times, which is pretty much in line with its historical average valuations. And going forward, a couple of factors we need to watch out for. One will be the way the global markets pan out, and interest rates globally. Flows into other emerging markets versus India as they pick up is something we'll be watching out for. Monsoons, festive season, all that bodes to domestic demand recovery in the second half. Will that continue or not? And then there are a bunch of state elections in India as well, all of them leading up to next year's central election.
This is H.T. Parekh, the man who brought housing finance to India. This handwritten EMI ledger is the first one used when HDFC began its business, and these are the names of the first Indians who took a formal home loan. DB Remedios was the first of this bunch, taking out a home loan of 30,000 rupees to build his own house in Mumbai suburb of Malad. This H.T. Parekh Legacy Centre has been set up here at the Ramon House in Mumbai, the house of HDFC. It pays tribute to the man behind the housing development finance company, H.T. Parekh, who not only started the company but also pioneered institutional housing finance in the country, allowing the middle class to realize their dream of buying and owning a house. In 1977, H.T. Parekh started.
Welcome back. Well, as we reported over the weekend, the new indirect tax regime completed 6 years on Saturday. Now let's get you the latest on the GST mop-up. The government's goods and services tax collection for June crossed the 1.6 lakh crore rupee mark. This is the third highest monthly mop-up since the GST regime came into force in 2017. At rupees 1.61 lakh crore, the GST collected in June is nearly 20% higher on a year-on-year basis and about 3% higher than the mop-up in May. On the sidelines of an event to mark 6 years of goods and services tax, my colleague Shivani Bazaz caught up with Vik Johri, who is the chairman of the CBIC, and began by asking him about the next phase of reforms. Listen in to what he had to say.
I think it requires some more consultation with the industry. Some of the measures have been discussed internally, and we will take a call in the coming week about whether to place them before the council. But some of the other measures, we are still having consultations with the industry. So we've had one round. We've shared some of the suggestions with them. and we're awaiting their feedback so that.
How's the drive going? Because it's in the last leg now, the 2-month drive. What are the can you shed some light on the numbers?
The drive is going rather well, and it's a combined thing of the centre and the states. And we had identified, a certain number of taxpayers who had to be verified, 6,000 to begin with, and almost 5,000 out of those have been verified. And we find that about 25% have turned out to be bogus. So I think that's a good hit rate. And when the drive comes to an end, we'll take a call about whether we need to continue with it, given our success rate, and given the fact that we still hear of cases of fake billing and fake ITC.
So also in terms of the action taken against these entities, is there a formulation, has there been some action against these entities that you have identified?
So the fake entities, by definition are those that don't exist. So the one good way to deal with them is to purge them from the system. So we either suspend or cancel their registrations, because the principles of natural justice demand that we give them an opportunity to explain their case. But in most cases, there's nobody who turns up. So we just go ahead and cancel their registration and clean the database of our taxpayers by doing that.
So last GST Council also discussed the GST Appellate Tribunal. Is that also something, the blueprint has been in the pipeline for a while. Is there something that is going to be discussed in this meeting as well?
Look, the GST Tribunal was discussed at the last council, but the legal changes that it entails were finalized. If you recall, in the Finance Act of 2023, provisions have already been incorporated in the CGST law for putting in place a tribunal. Corresponding amendments have to be made in the SGST laws. Those are currently underway because different states have, different times at which their legislative assemblies meet. So it's only when both of us are ready with the base law that we'll go into the issue of constituting the tribunal.
But sir, is there a timeline, tentative timeline?
Likely to happen by later this financial year, but I see it happening within the financial year.
Okay, it's time for a short break now. When we return, senior NCP leader Ajit Pawar joins hands with the BJP and Shiv Sena government and takes oath as the second Deputy Chief Minister of Maharashtra. More on that when we return.
With a personal contribution of 10,000 rupees and grew it into a juggernaut of the Indian financial landscape, a legacy his nephew Deepak Parekh has contributed to.
Although many frowned upon HTP's idea, it was the strength of his relationships with bankers and industrialists and the deep respect he garnered from this community that helped him to raise the first capital of 10 crores to start the business. He had personally contributed only rupees 10,000 at that time. When he was due to retire from ICICI, he took the idea of a new housing finance company to Mr. H.M. Patel, the then finance minister, and also a friend. He got a thumbs up to start this post-retirement venture, as no financial commitments were required from the government. At the age of 66, when most people hang up their boots, my uncle's long-standing dream of starting HDFC finally took shape.
The Legacy Centre documents not just HDFC's triumphs over the years, but HT Parekh's struggles too, right from convincing an India that frowned upon debt to avail home loans. This centre also houses snippets of Parekh's personal history, from letters he wrote to his wife and friends to appointment letters he handed out to the first employees, including Deepak Parekh and Keki Mistry.
This Legacy Centre is a humble contribution to HTP, as it showcases one of the most successful startups in an era of socialism.
HDFC will cease to exist come July 2023, and this Legacy Centre is envisaged as a beacon that tells its story. A story of how a small startup grew into a behemoth commanding revenues of over 60,000 crore rupees and has assets under management of over 7.
Welcome back. As promised, let's focus on the big political story from this weekend. Senior NCP leader Ajit Pawar rebelled against the party's top brass and joined hands with the BJP Shiv Sena government in Maharashtra. Ajit Pawar took oath as the state's second deputy chief minister on Sunday. In fact, he has even called a meeting of NCP MLAs at his official residence today. My colleague Sandhya is joining us to get us up to speed with all the developments. Sandhya, tell us more.
So it was last year that we were covering a similar issue in Maharashtra only, and at that time we were talking about and we were covering the split in Shiv Sena. It was on 30th of June that Eknath Shinde, who rebelled against Uddhav Thackeray, and he was sworn in as Maharashtra's chief minister. It's actually slightly a few days above the 1 year, but here we are, and now we are covering and we are talking about a split in NCP, another big regional party in Maharashtra. Now, yesterday was an eventful day. Ajit Pawar took 8 NCP MLAs along with him, rebelled against Sharad Pawar, and was sworn in as Maharashtra's Deputy Chief Minister for the 3rd time since November 2019. Now, you spoke about a meeting which is going to happen today, and that is the most important development which is likely to take place today. So this is a meeting which Ajit Pawar has called, and he has asked all the NCP MLAs to remain present in the meeting. The reason this meeting is important because Ajit Pawar has said that it's not just these 8 MLAs. He has the support of all the NCP MLAs, and they are going to join soon. So this will show if the other MLAs, it will be interesting to see if more MLAs attend Ajit Pawar's meeting, if they join hands with him. If that's the case, it will be absolutely similar to what happened with Shiv Sena. Last night, late in the night, Jayant Patil of NCP said that the party is going to take an action against those who have rebelled. In yesterday's press conference, Ajit Pawar claimed that he has support and blessings of all the senior leaders of NCP. He did not name Sharad Pawar, but he said that he has the blessings and support of all the senior leaders and MPs and MLAs of NCP. But Sharad Pawar said that he did not get any call from Ajit Pawar. So it will be interesting to see how many more MLAs will join hands with Ajit Pawar.
Okay, it is a developing story, and of course we'll keep coming back to you, Sandhya, for more updates on this one. But for now, we'll take your leave on this edition of Power Breakfast. But do stay tuned. Bazaar Morning Call will come up next.
Rupees, and group companies that are global brands in sectors like banking, insurance and asset management. The Legacy Centre will be open to the general public in July 2023. In Mumbai, Shilpa Rani Peta.
So this is the moment of truth. This is the moment of truth. I'm even getting my cameras wrong now. I'm that nervous to try and get started with this. But okay, so this is the button I press?
Yes.
All right, let's go.
This has already been done for you.
Okay.
So you can press the button a couple
Again.
more times. Okay, yeah. Now you need to scan this barcode in.
Okay.
All right, so you press the button a couple of more times. Yeah. Now it'll ask you numbers. You
Scan, so that's the one?
That's one. You scan the barcode, you open it and empty the entire contents. And then you can keep that on the side and press the button.
Quite literally stirring up a storm of Rajasthani paneer.
Yeah, so now you press the button.
I press the button. Add the paneer.
You need to scan it first, otherwise it won't let you proceed.
It hasn't given me any red alerts so far, so I guess I'm doing okay.
So despite all these recipes that we get to try.
Remove output. Okay, that's it. It's done. Wow.
Yeah. So instead of the packaging container, since we're all going to have this together.
Yes.
We're going to put this into.
Add garnish with coriander. So this is it. It's done.
That's done.
That is my Rajasthani paneer, which I have made from scratch with a little bit of help from the cloud chef, food tech, food AI that's been helping me with putting this together. Now the true test is going to be in the eating. So
yes.
we will find out if we've been a success or not. So we're going to head out. Oh, this is good.
腕の特徴はですね、こうやって人の2本の腕以上にたくさん腕を増やせるってことだけではなくて、実はこれ背中のソケットでですね外したりつけたりで、さらに別の人に貸したりということもできるようになるんですよね。
もう一回よろしい？はい。いいです。
Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live this Monday morning from our CNBC-TV18 Motilal Oswal studios. I am Prashant. With me, my colleagues Reema and Nigel. Guys, hi, good morning.
Good morning. Hi, good morning. You know, the first half of the year has been done, and we've all spoken so much about what a sparkling year it's been for the US markets, the Indian markets in the late dash, made it to the finishing line and pretty much came first. It just feels like, one exam is done and you've got another term coming up. And the question is, after this kind of a performance in the first half of the year in our exam, how will we perform next time? Expectations are high.
And the odds are against us. If you look at the last 10 years, 7 times the Nifty has gone up in the first half of the year. And the second half has not been able to match up to the first half. But going by the kind of pace we're seeing on the Nifty, I guess if it had to be a change, then maybe 2023 is the year.
July has some potentially market-moving events, right? Yeah. The earnings season in India, the earnings season in the United States, we will get clarity whether we are finally closer to the end of the US rate hiking cycle. So
there's a lot. Like, for example, I'll tell you, I remember I did a piece on the 1st of January this year. As we started the year, looking at what markets have done in pre-election years. Okay. Now that is also against us. Pre-election years, markets usually are lower, not higher. Yeah. Depends, varies. I mean, the percentages vary. So, I mean, this is seasonality, history. But as they say, right, history does not have to repeat. But it does give us a general sense of, how it is rhyming.
Yeah. Before we start talking about markets, for all those. All our viewers out there, happy Guru Purnima, because today is Guru Purnima, so, positive note.
And markets have been our biggest teacher,
Absolutely.
Right?
Markets have been the biggest teacher, as always.
Absolutely. Well, Nigel, let's kick this off with what we need to know. I mean, what markets are set up like. So, basically, last Friday, we ended on a very, very strong note. Super, super strong note. By the way, for the week, markets were up between 2 and 3%, depending on what index you were looking at. So there was no lack of momentum, right? momentum is the name of the game, has been for the last, especially a few days or so, once we crossed that previous all-time high. I mean, from 900, which was the previous all-time high, round about there, to where we are now, which is 19,200, we've galloped, not risen. The Nifty, by the way, is also closed above the medium-term resistance level. This is nothing but, I mean, if you join a straight line from the 2021 highs to the December 2022 highs, on Friday, we basically went above that level as well. So it puts us technically in a pretty good space. Technicians, chartists like all-time highs because it kind of lets them project because there is no real reference point then. You can project higher based on previous advances, but really blue skies in that sense. Global cues are supportive as well. So the S&P was up about 1.25%. The Nasdaq was up 1.5%. This is Friday's session, so there's no lack of pace in the US as well. The important data point was the US core PCE number, and that slowed down to about 0.315% advance month on month. But I mean, you look at a plethora of what economists, global economists, etc., are saying. No one is really banking on this to say that maybe things are turning down. The previous couple of data points have all actually been very strong. It is what it is. We'll, I guess, get more data. For example, this week we'll get ISM manufacturing. On Friday, we get the jobs data and more. US 10-year yield, it was unchanged. I mean, it did not budge. 3.84. The dollar index came off a little bit, so just under 103 on Friday. By the way, there's a holiday in the US, so expect at least the start to be a little subdued. Tuesday is a holiday, so many would be out for the kind of a long weekend. So price action out of the US later today and of course tomorrow, which is a holiday, will be slow. Just to come back and put levels to where we are and where we might be headed. On the Nifty, the upper end of the rising channel, because it's a rising channel, the levels also change, now stands at 19,315. We left off almost at 19,200, so that's about 100, 120 points out from here. That will be the near-term resistance for the market. So that's point number one. The very short term, I mean, very, very short term kind of supports, if you want to take a look at it. I don't usually talk about the 10-day, but because the 20-day is a little far out, the 10-day is at 18,835, the 20-day is at 18,738. These are short-term downside support levels to work with. Bank Nifty closed decisively above its previous high of 44,499, a level we've kind of spoken about for weeks in end, but it did finally happen in a conclusive way on Friday. In the near term, the next upside level for the Nifty Bank comes in at 45,645. So we'll see how long it takes for the Nifty Bank, because the Nifty Bank caught momentum much later after the Nifty, once it kind of decisively, moved past the 20-day moving average. So, maybe there is a little bit more here on the Nifty Bank as compared to the Nifty. We'll see. Supports come in at the 20-day moving average of 43,965 and then the 40-day exponential moving average of 43,636. These are near-term, short-term support levels to watch out for. I just want to say one thing. We are also, by the way, now going to start talking about earnings, right, for the first quarter, April to June quarter. And first off the block will be IT services. And Rima, with IT services, over the weekend, we've seen so many downgrades, right? I mean, so many brokers pointing out that be prepared for lower earnings, etc., etc., etc. And that's a very important 30-35% constituent of the Nifty. So if that part of the market starts to lag a little bit, I mean, that perhaps slows down what happens on the index as well.
Yes, expectations are that Q1 and Q2 will be very, very muted for the Indian IT companies, and we could see some downgrades for the first half when it comes to the large cap IT names. But just a quick update. By the way, US markets are trading half day today also. So they're shut tomorrow for Independence Day, but today they are trading half day. A quick recap of how the US markets fared in the first half of the year. The S&P 500 popped nearly 16%, its best first half since 2019. The Nasdaq surging 32%, its best first half since 1983. The gains in the Dow Jones were fairly modest. The rally in Nasdaq was led by those magnificent 7 technology names, the mega cap tech names. And just look at those returns year to date. Meta is up 150%, Nvidia is up 200% on that, Tesla is up 150%. Even the others like Apple, where there is a modest gain of 50-55%, still managed to cross the $3 trillion market capitalization. Asia this morning is very, very solid. Japanese markets are at the session high. You've got more than 1% rally on Japan, Hong Kong and the Taiwanese markets. The gift Nifty, right now at least, is trading a bit flat, just up close to about 15 odd points. That said, as Prashant pointed out, we have closed last week on a high note with the key indices gaining close to about 3%. And look at the inflows by the FIs and the DIIs. On Friday, the FIs and DIIs combined put in 7,500 crore rupees. And remember, the FIIs on Thursday had put in close to about 12,000 crore rupees, which means in a span of 2 days, FIs on Thursday and Friday have pumped in nearly 20,000 crore rupees. But these are the numbers by the FIs in the month of May and June. 28,000 crores of inflows. And that's been the big driver of the Indian market rally.
Well, that's right, Rima. And just take a look at the momentum that the Nifty has. The last day of the past series was very, very good. And the first day of the new series as well was splendid. So the Nifty has got the momentum. And this time around, some of those economy-facing stocks you like if they do well, cement, autos, but they don't account for a big chunk on the index. Now the Nifty Bank has come to the party, and that's what's driving the Nifty higher. In the last week itself, after a few weeks actually, you had the Nifty Bank that performed as well as the Nifty, which is rather good news. 2.5% gains on both the Nifty as well as the Nifty Bank. And the FI as well, they're not just showing us the money in the cash market. In the F&O market as well, the index futures, big open interest build up. You had the long positions that were up close to 17,000 contracts. Now they're nearly around 70% long, 69 to around 31%. That's the ratio that comes out for you. As I always say, I like some shorts in the system, but for the time being, that's working for the bulls. On the option side, well, they bought more puts than calls, but the good side is that, in fact, they continue to write puts as well, rather aggressively. So on the Nifty, well, the 19,100 put, 19,000 put between them, close to 1.5 crore shares getting added out there. So big open interest built up and there was aggressive writing being seen out there. Even the Nifty Bank, that one had a very big surge, the 44,500 put, close to 40 lakh shares getting added there, and the premiums around 155 rupees. So going by the writing we have seen at around that 19,000 put and around the 44,500 put, well, you deduct the premiums out there, you get the first support. The support level of around 18,970 on the Nifty Bank, 44,350 approximately. If we break that level, then we move to around the 20 DMA. The only problem for me is the PCR has now moved to elevated levels and it's getting a little bit stretched on the upside. Remember, the broad range has been around 0.7 to around 1.4, 1.45 odd. Now we're close to around 1.6. What that's indicating is that put writing is getting very, very easy. But going with the kind of momentum we have on the index, you need to stay long on the index. I've given you the support levels as well. Maybe we could see some bit of consolidation, but you need to stay long on the index with those stop losses in place. Got the momentum on the upside. Let's see if we can continue to trend higher.
And momentum can do pretty crazy things.
Absolutely.
Nigel. So, but of course, be mindful of the fact that you are in a very strong momentum kind of market. So you need to be watchful. Trading, of course, especially, you need to be watchful. Well, before we go any further, let's quickly tell you what is lined up in the first half hour of the show. We'll get you updates from markets around the globe. Ed Yardini of Yardini Research will join us to discuss the global setup. Our research team will get you CNBC-TV18's list of top 10 stocks for the day. And at 8:30, we'll do a quick fundamental stock check with our market expert, Prakash Diwan. So that's the lineup.
On equities, Venugopal Gare of Bernstein says Indian equity markets have risen 13.2% since the bottom in March, with India among the best performing emerging markets. He says while overall we sit at high valuations, picking stocks and sectors with good earnings and ones that are yet to pick up, like financials, will be recommended as capital moves across sectors and stocks. Venugopal adds even laggards such as IT, despite the weak near term, may also catch up on expectation of new levers such as AI.
Okay, let's get you some money market views now. On the rupee, Samiran Chakrabarti of Citi says persistent favorable inflation differential and the need to manage surging rupee liquidity can prompt the RBI to allow a break of the current range towards appreciation, while balance of payment worries and a sudden change in hedging behavior can force the opposite move. Their view of the rupee at 82 a dollar in 9 to 12 months is predicated more on weak dollar view and implicitly builds in RBI's bias for stability.
On the bonds, Ajay Magnolia of JM Financial says, despite moderating inflation, the future trajectory of terminal policy rates for major central banks remains uncertain, keeping traders cautious. The trend of domestic yields hardening continues, while weak demand at auctions for higher cutoff shows a cautious approach. He expects the bond market to stay firm today in the absence of any domestic cues and US yields remaining elevated on Friday. The 10-year benchmark yield is expected to trade in a range of 7.09 to 7.14% for the day.
Well, we have a lot of stock-specific action to track for you. Get to that in just a wee bit from now in our special Top 10 segment. But let's run you through the list first. Reliance Industries, Gujarat Gas, Ultratech Cement, Vedanta, L&T Finance, Granules. You have Moscow Dock and NCC. All those on the back of positive news flow. While IPCA is the only stock that could be reacting to negative news flow over the weekend, while auto stocks, they could see a mixed reaction.
Okay, well, Ed Yardeni is now joining us, President at Yardeni Research. Ed, good morning. Good to have you with us here. Thank you very much for your time. You know, the weakness in the US data is not showing up. I mean, the core PCE perhaps is one of the many which kind of showed some amount of weakness, softness, but otherwise it's been pretty strong and steady. What does it mean, Ed? I mean, once again, markets have been pricing in hikes in July by the Fed. This week, we've got some data points lined up out of the US. So we get a July hike and then what? More? But the market seems completely unconcerned. Ed, you'll have to unmute yourself.
Ms. Yardeni, you'll have to unmute yourself, sir. We would like to hear what you have to say. All right. Ms. Yardeni, are we audible? Nope. All right.
Okay.
I think we'll just fix that.
Ed, can you hear us? Okay, I think we'll just... okay, I think he is with us. Okay, I think we'll just have him back in just a bit from now. Some technical issues coming up. Let's just quickly take a look at what age... Yeah, Ed, we can hear you. Go on. Sorry, you were on mute, okay, but now we can hear you. Go on.
Okay, and you can see me as well, right?
See you and hear you.
Good. All right. I don't know what happened to the microphone, but anyways,
no problem.
Good to be back. Good to be back with you. Look, I think investors have come around to appreciate that the economy is remarkably resilient, and it's withstood a 500 basis point increase in the federal funds rate. So I think investors are getting kind of confident that even if the Fed does another 50 basis points, that's not going to be a problem for the economy. Meanwhile, we are seeing quite a bit of improvement in the headline inflation. As you point out, the core inflation is still quite sticky, but quite a bit of that is rent. We know that rent inflation is going to continue to come down. Meanwhile, there's liquidity in the economy, enough to keep the stock market moving higher. I hope it doesn't go into a melt-up situation. I hope that we kind of rest this summer and then move higher later in the year. But I don't run the market's playbook. The market has a mind of its own, clearly.
Ed, morning. This is Rima here. How does India stand in the emerging market basket? Investors bet on China at the beginning of the year on hopes of reopening, and money moved away from India into China. But that turned in the middle of, sometime in February and March, once investors realized that the promise of China growth reopening isn't materializing to the expectation, as according to the expectations, and money once again moved back into India, and FIs have been lapping up India. How does India stand in the mind of foreign investors, and how does it compare with the emerging markets?
Well, I think you're right. A lot of investors clearly are looking at China and India as alternative ways to invest in emerging markets in terms of having very large economies, large populations, and very industrious people. And you're absolutely correct that once China eliminated its lockdowns, there was widespread expectation that China would really show a very strong economic growth. But I think what has been revealed is that the underlying weakness in the Chinese economy is very much related to the property market. They've had a property bubble that's burst, and I don't think there's much they can do to turn that around. And that's been an important source of economic growth over in China. Do you know that imports in China have been flat for like over a year now? That's a very telling indicator, I think, that domestic consumers just aren't responding to the end of the pandemics with the kind of enthusiastic buying binge that we saw in other parts of the world, particularly in the United States. So compared to all that, India looks quite good, and especially in a geopolitical context where there's increasing concerns about doing business in China, manufacturing in China, because of the geopolitical concerns. And as we just saw with Prime Minister Modi visiting the United States is reaching out to India and would like to partner more with India and less with China.
All right. Hi, Ms. Yadni. Good morning. Nigel on this side. A couple of questions. You said that we could possibly get a couple of more rate hikes. What are you factoring in? How many more hikes in this year? And by when do we get the first signs of a cut from the Fed? Because the equity markets, they want that. Some said at the end of 2023, but it's more likely now in 2024, going by the commentary that we're getting out from the Fed.
Look, I think we have to be flexible and open-minded here on what the Fed policy is going to do. And we do have to listen to the Fed. There's an old adage, don't fight the Fed. And if Fed officials are telling us that they believe that inflation is still too high relative to their 2% inflation target, and that the Fed funds rate isn't restrictive enough to bring inflation down to 2%, and that they will believe that they need to do another 50 basis points between now and year-end, or even the next two meetings, then we have to take that at face value as the most likely scenario. In my opinion, the economy's resilience doesn't suggest that inflation can't come down on its own. I think a lot of the inflation was related to the shock and the aftershocks of the pandemic. As the pandemic is abating, I think we've seen inflation come down dramatically in goods markets, and it's in services that we are seeing persistence. But I think that will change as well. But I have to factor in that they're going to do another 50 basis points because they're quite adamant about it.
Maybe, I mean, actually, on the flip side, once they start to cut, maybe the market will not like that, right? Because the cut will finally come when the economy starts to weaken. I mean, they're just happy. I mean, 500 basis points and the market is doing just absolutely fine. Right?
Well, you know, there's a lot of moving parts here. We know that there's a lot of enthusiasm about artificial intelligence, and that's been a big source of strength for the technology sector. We also have a tremendous amount of spending going on by the government in infrastructure spending and on incentives for onshoring to bring manufacturing back to the United States. So industrials have done extremely well. And now we're finding out that the financials are doing well because after they got hit quite hard back in March, I think there's a growing sense that we're not going to have an economy-wide banking crisis. And as you know, last week, the Fed reported its latest stress test of the banks, and the banks passed the stress test. However, it was the 23 largest banks. It wasn't the 4,000 small banks that still have a lot of exposure to the commercial real estate market.
But at least the 23 large big banks passed the stress in light of what we had to face in February and March with the collapse of 3 regional banks. Ed, thank you very much for joining in. Need to get into a very short break. There are lots of individual stocks that you need to track in today's trade. Our list of top stocks is lined up next.
離れているところにいるこのパペットマスターがこれを使うことになります。でこれは日本で人形文楽というその3人で人形を操作するような伝統芸能があるんですけれども、それを遠隔からもできるというところにもちょっと近い話があります。
Welcome back. Our research team is standing by with CNBC-TV18's list of top stocks for the day. And first up, let's go across to Sonal to learn more about Reliance Industries and Gujarat Gas. Sonal.
Good morning, Rima. Let's start with Reliance Industries because the third cluster of their KG Basin gas production block has started commercial production, which is the MJ field. And with this, they've completed the production commercialization across all the three blocks. The three clusters are expected to meet 15% of India's gas demand, and peak gas production from all these three clusters is expected to be at 30 MMSCMD. Now, remember, Reliance Industries, it is the operator of KG D6 Basin, where they have 66.67% participating interest, and BP holds around 33.3% participating interest here. This was the next trigger for the oil and gas business, and that has come through, so that is a positive here. For Gujarat Gas as well, there is the positive news because the government has gone ahead. They've increased the import duty on imported commercial use LPG from 2.75% to 19.25%. This is from 1st of July. Now remember, propane prices, they were going down, and it is a competition for Gujarat Gas's product. Now with this increase in import duty, the propane price will need to be hiked by 5 to 6 rupees per SCM, and this will offset the disadvantage that was coming in for Gujarat Gas. Now remember, propane prices were around 32 to 33 rupees per SCM. This is before the import duty hike, and Gujarat Gas at 38.6 rupees per SCM. That's why there was lower demand for Gujarat Gas's product, but now with this hike in import duty, this will be positive for Gujarat Gas, and that's why it will be in focus today.
Thank you very much for that. Over the weekend, we had a trickle of many of these auto sales numbers for the month of June. We're still awaiting numbers from Bajaj Auto. We don't have numbers from M&M, Ashok Leyland yet. TVS Motors too hasn't reported its June monthly sales data. But let me run you through the ones which have come out. On the miss side, you've got Maruti. Maruti's total sales went up by just 2% on a year-on-year basis, but this is lower than Nomura's estimate of 8%. So that's a miss. The reason for the miss is that their lower-end segment, the compact segment, which is Baleno, Celerio, Desire, Ignis, Swift, Wagoner, they constitute about 40% of their overall sales, and that has seen a decline of 17%. So the lower end, the cheaper variety of the cars for Maruti is hurting. Let me move on to Hero MotoCorp. Now, Hero MotoCorp's total sales have fallen by 10% on a year-on-year basis. It's come in at 4.37 lakh units. And again, this is a miss because Nomura was anticipating an improvement of 3%. On the flip side, Royal Enfield, that's owned by Aish Motors, has had a solid June month with a growth of close to about 26%. For Tata Motors, their passenger vehicle segment is doing pretty well. Their passenger vehicle is, dominated by their SUVs and even their electric vehicle segment. So the electric vehicle has posted its highest ever quarterly sales in Q1, and it's doubled compared to the Q1 of last year. So SUV, EV for Tata Motors is doing very well, but the CV business for Tata Motors is a bit subdued because their sales have fallen by nearly 8% year on year.
All right, Rima, I'm watching out for two stocks, Vedanta as well as Ultratech Cement. Let's start off with Ultratech Cement. Brilliant numbers coming in for the first quarter of this year. Well, on such a large base, they're growing by close to around 20%. That's the total consolidated sales volumes. And the bigger focus would be on the grey cement volumes. That as well has grown by close to around 20%. So those numbers look very, very good. Capacity utilization levels at 90% on a larger base. That's encouraging as well. So they've clearly gained market share. We'll have to see at the cost of who. But these numbers look very, very good. So Ultratech Cement gets a thumbs up. Next up, Vedanta. They're considering and they have approved strategic review of their steel business. Now, with the steel business, it'll include their steel, it'll include their iron as well as the Facor business. They're saying that they're looking at, at maximizing shareholder value, and it could include a potential sale of this business as well. To give you a few specifications on this business, it's a 1.5 million ton unit. That's a steel business. They're looking at upping it to around 3 million tons. The total capex that laid out is around 3,500 crores. They've spent close to 1,000 crores, 2,600 crores yet needs to be spent. In the past year, all these three businesses together, that's the ferroalloys, the iron ore as well as the steel business together, they contributed less than 4% of the total EBITDA. And also the net debt is close to around 2,000 crores from this business. Expect the stock to open up in the green, but we'll have to see what the management does from here. Abhishek joins us though to tell us about L&T Finance. Abhishek?
Well, Nigel, there is a management change over there. So current MD and CEO, Mr. Dinanath Dubhashi, will superannuate on 30th April 2024. So Dubhashi will act as, the special advisor to chairman of the board during this period, that is from now to up to April. Sudipta Roy to take over as the company as the MD and CEO with effect from 24th January 2024. So Roy is currently serving as group head at ICICI Bank for the unsecured assets, cards, payment solution, consumer finance, etc. So under Mr. Dubhashi's from 22nd July 2016, that is when he took over till now, the quarterly ROE has moved from 9.78% to about 9.37%, and AUM has seen a total growth of 39.5% in last 28 quarters. Back to you.
Okay, well, that's going to be perhaps one of the stocks of the day as we start today's session, L&T Finance. Abhishek, thanks very much for you for that. Vivek is now joining in with more stocks with news flow. Vivek, hi, morning.
Well, good morning. Quite a few stocks on the radar on the back of news flow that's come in over the weekend. First on our list, Ipca Labs. The regulatory concerns over here continue. CNBC got access to the Form 483 issued to the Pithampur unit. Remember, from June 15 to June 23, the US FDA conducted an inspection over there and issued 8 observations. And some of these observations are quite serious. Key among them being, US FDA notes that the company failed to review discrepancy in batch distribution. So, remember, Ipca Labs is already under the regulatory scanner for 3 of its plants, and at this point of time, looking at the Form 483, it doesn't look like the regulatory woes could lift soon. Also, watch out for granules. Some positive news flow coming in after Friday's news flow, where you actually saw some amount of revenue as well as a profit warning that the company gave. But some positive news flow from the US FDA side. The company has successfully completed the pre-approval inspection as well as the good manufacturing practice inspection for the Visakhapatnam plant. Watch out for Mazgaon Dock as well. The company has signed a contract with the Indian Navy for a submarine, with the total value of the contract being 2,724 crore. Lastly, NCC, the company gave its quarterly update for the month of June, and the company has received new orders worth over 2,000 crores, building division around 1,300 crore, electrical division from 720 crore. Some positive news flow for NCC.
Thanks a lot for that, Vivek. Well, let's do a quick recap of all the top stocks we discussed. Few stocks with positive news flow include Reliance, Gujarat Gas, Ultratech, Vedanta, L&T Finance, Granules, Mazgaon Dock, and NCC. Well, stocks with negative news flow are just Ipca Laboratories, while auto stocks, they could see a mixed reaction.
Okay, the SGX Nifty has now transitioned to the GIFT Nifty index. All futures trading on the SGX Nifty will be routed through the GIFT Nifty. Yash is now joining in from Gandhinagar to tell us more about the new index and what it could mean for investors. Yash.
Well, that's correct. It's finally time to say goodbye to SGX Nifty and say hello to GIFT Nifty. But is it just the name that changes? Absolutely not. That's because starting today, all the trades on the futures, Nifty futures, which were taking place on SGX Nifty in Singapore, will now be routed to NSE IFSC Center here in Gandhinagar, GIFT City of Gandhinagar in Gujarat. Also, not just that, the settlement and the matching of those trades will also happen here in the NSE IFSC under SGX India Connect IFSC or SGX ICI. As you can see on the screen behind me, the matching of trades and the settlement is ongoing as we speak right now. As far as the exchange itself is concerned, 21 hours of trading time each day, 2 shifts as far as trading time is concerned. The first one between 6:30 a.m. to 3:40 p.m. Indian Standard Time, and the second one between 5 p.m. to 2:45 a.m. What does this transition entail? $9.5 billion of outstanding open interest moves into GIFT Nifty today, and the management in an interview told CNBC-TV18 that they expect 1.5 to 2 billion US dollar of average traded volume on GIFT Nifty. As far as the products itself is concerned, in the first tranche, there would be 4 products which would trade as far as GIFT Nifty series is concerned. The first one is GIFT Nifty 50, GIFT Bank Nifty, GIFT Nifty IT, and gift Fin Nifty. Finally, the most important part, who can trade and who cannot trade. As far as resident Indian traders are concerned, they won't have access to gift Nifty. But importantly, Indian brokers and their subsidiaries can sign up funds through non-resident Indians, family-owned offices and wealthy Indians as clients. Apart from running proprietary trades, they can also trade client-based trades for these clients which these funds would have.
Right, Yash, thanks very much for that. So, I mean, if you're basically trading the Gift Nifty, you need to be registered as a separate entity, the target audience, of course, is it remains the same as SGX Nifty. Of course, they'll try and add on a lot more clients, but the fact is, it's not for retail. I mean, if that's what you're wondering. It is for largely institutional investors, but large prop traders, etc. as well, but have to be registered separately at the Gift Nifty at NSE International Exchange. We'll take a quick commercial break here. More on that later. We'll come back and Prakash Diwan will be joining in with a quick fundamental stock check. Later, we'll also connect with the management of Shriram Finance. Morgan, by the way, has come up with a very positive note on the company. We'll also talk to Shriram about their tie-up with Paytm to boost their digital loan distribution business. Stay tuned. Those two conversations up next.
腕の特徴はですね、こうやって人の2本の腕以上にたくさん腕を増やせるってことだけではなくて、実はこれ背中のソケットでですね、外したりつけたりで、さらに別の人に貸したりということもできるようになるんですよね。
もう一回よろしい。はい。いいです。
離れているところにいるこのパペットマスターがこれを使うことになります。でこれは日本で人形文楽というその3人で人形を操作するような伝統芸能があるんですけれども、それを遠隔からもできるというところにもちょっと近い話があります。
Welcome back. Hope you're having a good morning and a good start to the week. The Gift Nifty is suggesting some green to kickstart trade. But let's see how that goes. So plenty of stocks to discuss. And to help us out with that, we have market expert Prakash Diwan who joins us on the show. Hi, Prakash. Good morning. Thanks so much for joining in. Well, Prakash, let's analyze some of the stocks that will be reacting today. From the cement pack, Ultratech Cement on such a large base, they're growing at 20%, which is phenomenal. Higher capacity, good demand on ground, particularly from non-trade, I understand, has helped them. How would you view the stock from here on? Valuation-wise, I mean, for the big daddy, it's still relatively cheaper than some of its peers. And also, who would you be negative on? Because clearly they've gained market share.
Oh, absolutely, Nigel. I mean, the kind of capacity utilization that we've heard from them, 90%, and that one an augmented capacity is commendable. And it also tells you that, the industry is not seeing any kind of a slowdown or any kind of a demand contraction, which was anticipated In fact, what's happening is that the fact that the larger players are growing at such a this thing even clip tells you that there is enough absorption in the market. It's just a matter of at what level do the prices start kind of reflecting all of this. So when that happens, you'll probably have even the mid-sized players starting to benefit. Anybody between that 10 to 25 MT is probably the next phase of growth. You would have to look at some of the winners there. But I think there's also a little bit of a catch-up that Ultratech has done in terms of market share. If you look at the numbers from the ground, very clearly they've been able to expand into some of the geographies which they were not very dominant in. And that's probably thanks to an Ambuja or a Sri blinking for other reasons than market dynamics. So there is a little bit of a shift in the top tier players. But the mid-sized names continue to still offer a lot of salience, and as and when the demand continues to be well established post the monsoon, which is anticipated, and if we have a timely monsoon, it only becomes much more closer. So I think it's a sector that's probably likely to get re-looked at by most investors, and all those doubts that we had seen in terms of raw material impact on some of these players will probably get nullified. So I'm quite positive. I've been positive on most of these names, but one more reason to kind of get some conviction built up. Yeah.
Prakash, hi, good morning. The IT index was up 2.5%, I think, just last Friday. It was a big day. Over the weekend, we've seen many brokers, sell-side brokers coming out with cautious commentary. Basically trying to get the street to say that, well, this is going to be a quiet quarter, it's going to be a muted quarter, almost. What do you think? I mean, you think it's already in the price, or we will get a dip which will get bought in? Because it's well understood that Q1 is going to be weak. But we got, some of these guys, some of these notes out over the weekend. What's your sense?
Good morning, Prashant. So, I think the behavior of most IT names on the market has been more reflective of the caution that came through the March earnings calls, and led by the likes of Infosys and all of that. So, you had an Infosys moving all the way from 1500 to closer to 1200 zones just because, the commentary was tepid. But this quarter, the expectations have been so muted that even if they have a normal quarter, which is usually soft, and the commentary starts turning positive, there could be a race to buy into IT again. And remember, we've got banks and IT as the two large pillars of the Nifty, up move. And banks have already kind of done their bit in terms of starting to move. I think this quarter will probably tell us that companies which have gone beyond just the conventional business models and have started seeing revenue streams build up from other new age streams, if I will. It's like what's happening in the NASDAQ and in the US. It's more AI, more ML that's contributing to this up move. So there is a sense of, very clear sense of, transition that's happening. So what happened with digitization 2 years back could probably happen with AI in probably not this quarter, but in the subsequent quarters this year. So there will be a positivity that will come back because the prices are telling you that it's like, end of the world for IT in that sense. Nothing's going to happen. US is in a recession. But if they were to come up with a commentary and patches where there is improvement, I think the market will probably want to add more. So that's where the setup is positive. We just need to wait probably later this week once the numbers start pouring in, how things look positive. I'm quite positive on the mid-sized names as well. So you have a smattering of smaller names which have done well because of the niche that they've been able to establish themselves in, and those are the ones that probably start bouncing back faster.
Prakash, do stay on. We've got a lot more questions to ask you about auto sales, the oil and gas companies, where there is some news. But we've got a corporate waiting by, Shriram Finance. Now, Shriram Finance was up 2% on Friday. It rallied 24% in June, even as very large blocks from Piramal Enterprises TPG, which totaled more than 10%, got absorbed by the market. This morning, Morgan Stanley has further raised the target price on Shriram Finance to 2,200 rupees, which means from the current levels of 1735, we're looking at an upside of more than 25%, and they say the stock supply was well absorbed, contrary to fears. Separately, the company has also tied up with Paytm to boost their digital loan distribution business. This tie-up is aimed to tap the potential underbanked segment. Umesh Revankar, the Executive Vice Chairman at Shriram Finance, is here with us on the show now. Thank you very much, sir, for joining in. This is Rima here. First, if you could give us an overview of the demand on the ground, particularly in terms of CV financing. Tata Motors reported their June monthly sales numbers. The CV monthly sales are down 8%. How is demand on the ground? And if you could give us some numbers. I think your guidance is for a 10% growth for this year. But could you beat it, do better? Just some colors and number.
Yeah, good morning. See, what we see in CV is last year the growth was, especially in heavy commercial vehicle, the growth was above 40% year on year. This year, it is not grown year on year, but still there is a small growth of around 5 to 7% for the full quarter. And I believe post the monsoon, the demand will pick up because the construction activity normally picks up post the monsoon after September. So the major demand that is coming for CV is because of the huge infrastructure projects and the government spend. So that will be reflected in the second half of the year. Overall, I believe there will be a double-digit growth for the commercial vehicle. By and large, the demand is good. The vehicle prices have gone up a little bit because of the implementation of the Bharat Stage 6 to 2.0. And therefore, people have postponed buying the vehicle a bit. So I think that is the reason. But post the second half of the year, the demand should come back if the everything goes well, like having good monsoon, infrastructure being good. I think the demand will be back. So I think the resale values have improved significantly because of the price going up in the new vehicle. More demand has come for used vehicle. So I feel the demand is good and we should be able to grow double digit very comfortably in CV financing.
All right. Hi, good morning, Mr. Revankar. This Morgan Stanley note that we're talking about, they're estimating that your AUM grows by around 15% for the next 3 years. That is still FY26. And also, they are plugging in a NIMS number of around 9.7%. You're on board for both these two numbers? Very gettable?
Given the guidance of 15% in the last year while announcing the merger, and we are standing by it. And I believe the demand and scope for the credit is very good. Especially, we are also expanding our business loan franchise, which was mostly in the south before the merger of Shriram City, and now across the country. So we are going to grow a little faster in the SME lending. Plus, of course, the small business loan also we want to extend across the country. So there will be a growth, 15% growth. And since the small ticket loans comes with higher margins, higher lending rates, we should be able to maintain good net interest margins.
Of around 9.5 to 10%, gettable?
I can't comment on that now because right now our net interest margins are hovering between 8.3 to 8.5. But the calculation varies from the analyst to analyst. It could be we have to see what they have calculated.
And it'll depend on the mix as well. Mr. Revankar, so we just wanted to get the broad numbers out of the way. But the recent news has been the tie-up with Paytm. Tell us, as a percentage of your total customer base, how many of them are digital linked? If you could break that up for us, because we want to understand how big the opportunity is in terms of this tie-up.
See, I can give broad numbers. Initially, we had 80% of our customer paying in cash. Today, the only 20-25% of them pay in cash. Around 80-85% have migrated to digital or the banking mode. That is the kind of shift we have in the last 7-8 years. So I believe there are so many events that triggered it. that demonetization plus the COVID, that triggered many of them to move on to a digital platform. And we also were every time we were there when the turn happened, and we had all products ready for a digital transition. So this again, we are taking it further up by tying up with Paytm.
Got that. Mr. Revankar, just to go back to the basic fundamental issue, right, which is the cost of commercial vehicles. There was another news report recently where I think Mr. Gadkari was talking about having the driver sort of part of the truck having air conditioning, and how that will increase the cost of trucks, etc. I mean, we've heard it from other CV financiers as well that is perhaps the single biggest sort of in a way impediment to growth. Would you agree with it? And do you think incomes are rising fast enough to support the growth, or you think it'll be a challenge?
No, I really don't agree with this view, because what we have to understand is providing an air condition. Most of the large trucks today, all of them have an air conditioned cabin. It is not that they don't have. So the only thing is the smaller truck like LCVs may not have the air conditioning. So maybe Gadkari is talking about long-haul trucks only. So most of them have the provisioning of air conditioning. And maybe it will cost around 30,000-40,000 rupees more per unit. I don't really think it will be expensive. So I see one thing, what most important thing is there will be less driver fatigue, and he will be able to drive more. So his productivity will go up. If the productivity goes up by 15-20% of each of the operator, then definitely what you bring on the table is much higher. Your revenue per vehicle per day will increase by 15-20%, and that's substantially enough to recover the additional cost. I don't see that is an impediment. It is actually a good, and it will help the road transport industry much better.
Oh, that's an interesting point. We've not heard yet. So thanks for bringing that to light, that the efficiency perhaps will offset the rise in cost as you see it. But we'll see how it goes. So thank you very much for joining us, Mr. Revankar. Appreciate your time here on CNBC TV18. Thanks very much for being here. We'll take a very quick commercial break here. We are back with more. There's just 13 minutes to go for the pre-open session. Anuj is here with how he's seeing things. A little later after that, we'll have technical experts, and we get you the top stocks to watch for the day as well. Stay tuned.
So this is the moment of truth. This is the moment of truth. I'm even getting my cameras wrong now. I'm that nervous to try and get started with this. But okay, so this is the button I press?
Yes.
All right, let's go.
This has already been done for you.
Okay.
So you can press the button a couple
Again.
more times. Okay, yeah. Now you need to scan this barcode in.
Okay.
All right, so you press the button a couple of more times. Yeah. Now it'll ask you numbers. You
Scan, so that's the one?
That's one. You scan the barcode, you open it and empty the entire contents. And then you can keep that on the side and press the button.
Quite literally stirring up a storm of Rajasthani paneer.
Yeah.
Okay, welcome back. There is 11 minutes to go for the pre-open session. Anuj is here with a quick check on things in terms of how the markets are likely to be. Anuj, morning.
Morning, Prashant. You know what? On Friday I said that maybe in 21 days you moved the next 1,000 points.
The market did 200 on that day itself, and at this rate, 5 or 6 days you'll be there. But this is a parabolic move for the market, and the most money is actually made in this zone. And as of now, there's no nervousness sign in the market, and that move to 20,000 has started. And now, this is not a political statement. The market truly has a double engine of sort. Both Nifty IT and Nifty Bank actually set to participate. And my sense is double or triple. Let's not get there, but at least double engine is there. For triple, you will need Reliance also to participate, but as of now, it's Nifty Bank and Nifty IT. Triple would be something else, right? Anyway, small cap index has room for 10 to 15% quick rally. Just a point I would make that this is a rally in which you want to exit the poor quality stocks because everything is rallying, and perhaps stick to your good quality stocks. HDFC Twins could be in focus once again. Now that thesis is playing out. We made this point that more and more brokerages will now start turning positive because now they can write notes. Most of them were advisors to the merger, and now Morgan Stanley has come out with the report with 2110 price target. I think the other big trigger is monsoon. That's progressed really well, and July is said to be normal. And while the auto sales look a bit disappointing, the market will give them benefit of doubt because, in June, at least in the early part, there was deficiency of monsoon. The only worrying point is that the market is now extremely overbought. I mean, the FI net long position is 69% and at 75,000 contracts. Remember, when market bottomed out at around 1 lakh net shorts, and now we're almost getting there on the long side. Anyway, the market hasn't yet given reversal signs. The other interesting thing is put-call ratio, which has gone up to 1.58. There was big delivery buying in HDFC Twins and Infosys on Friday, which is something which stands out. Market structure is 1 step back, 2 step forward. There's some resistance at 19,250 to 19,300. If you take out 19,300, I think you can have a sharp move to 19,500.
Okay, thank you very much for that. Keep your eye on Bharti Airtel as well, because in a block deal which took place on Friday, Capital Group bought the shares. So that's a big investor buying into Bharti Airtel. Let's get in our technical experts, Mitesh Thakkar and Sudarshan Sukhani. They join in the morning. Good morning. We are lapping up gains. It's been day after day, a day of records for our markets. How would you trade the Nifty now, Mitesh, at opening?
Good morning. So, we've maintained long positions for the last 4 or 5 days, and now suggesting trading the stop loss about 19,000, 19,020 odd levels. Slightly deep on the spot, but the run-up has been so fast that the moving averages are slightly lagging behind. So you need to be slow on trading the stop loss, but that's the way to go forward. I think the targets can now be in the near term, closer to about 19,450 to about 19,500. Anuj was talking about overbought situations. I think we are close to getting overbought. So I think another 200 odd points, you will see serious overbought readings on the Nifty chart, and therefore I think a couple of days of pullback or profit can happen. So we will try to take profits as we get closer to 19,450, but for the time being, stay long with the stop revised at about 19,020.
All right, thanks a lot for that, Mitesh. Morning, Sudarshan. What about you? Could you fill us in with your call?
Yeah, good morning. See, the Nifty has been in a strong uptrend, and the last 3 days saw big gaps. But not only were the gaps not filled, the Nifty actually built on those gaps, which means it closed much higher than the open. That tells us that these are breakaway gaps, that trading range of 18,500, 18,800 broke on the upside with significant gap action and promises to see much higher levels. So there is only one trade in the Nifty, and that trade is to buy the dip. Buy every dip, keep a stop under 19,000, and whenever you see some weakness, intraday or otherwise, go long in the index. I'm not so upbeat on the Bank Nifty. While the Bank Nifty had these gaps, it did not build during the day. The opening and the closing prices were the same. So I would say just focus on the Nifty. That itself should give you a lot of rewards.
Okay, all right. Got that. Focus on the Nifty. That's the call from Sudarshan. Sudarshan, fill us in with your calls as well for the day. Stock calls.
Well, BEL is a buying opportunity, Bharat Electronics. The stock had a big rally, a small correction, which is good because essentially you are buying a dip after a rally. So that's a buy with a stop under 116. Then I have Britannia. Britannia has a similar chart, very large, massive rally, then a very small correction and a current consolidation. That consolidation should break on the upside. Buy with a stop under 4,900. Eicher Motors, all these patterns are the same. Big rallies, then corrections. So we are trying to identify stocks that are undergoing minor corrections, assuming they will break on the upside and join the party again. Eicher Motors is a buy with a stop under 34.50. And finally, Tata Motors is a positional buy. It's making new highs and you really want to stay with it. Buy with a stop order 575.
Okay, gentlemen, good morning. Mitesh, what about you?
Yeah. So on my list today, I have 3 buys and a sell. Infosys and TCS and Nifty IT is given some kind of a breakout. So they're on the buy list. Recommend buying Infosys with a stop below 1320 for targets of 1375. TCS buy on mile dip, let's around 3290. Keep a stop at 3250 and 3370 is the near-term price target. Also buy on RBL Bank with a stop at 177.5 for targets of 190. And the solitary sell call is Ambuja Cement, which I would recommend selling for a pullback or a decline to about levels of 405 and keep a stop at 435.
All right, gentlemen, thanks so much for joining in and filling us in with your call of the index as well as individual stocks. For the time being, we'll slip into a short break. You come back, we'll have pre-opening rates with us. We'll also be joined by Amit Anwani of Prabhudas Lilladher to discuss the latest trends in the defense space. Stay with us.
I press the button. Add the paneer.
You need to scan it first, otherwise it won't let you proceed.
It hasn't given me any red alerts so far, so I guess I'm doing okay.
So despite all these recipes that we get to try.
Remove output, okay, that's it, it's done. Wow.
Yeah, so instead of the packaging container, since we're all going to have this together.
Yes.
We're going to put this into.
Add garnish with coriander. So this is it, it's done?
That's done.
That is my Rajasthani paneer, which I have made from scratch with a little bit of help from the cloud chef, food tech, food AI that's been helping me with putting this together. Now the true test is going to be in the eating. So yes. we will find out if we've been a success or not. So we're going to head out.
Welcome back. This is Open Exchange and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, we're almost getting into pre-open, so good time to get in some derivative strategies. Chandan Taparia joins us to tell us exactly that. Hi Chandan, good morning. What do you have for us this morning?
Good morning, Nigel. Thanks for having me. So the index is continuously heading upwards. We have seen good momentum in last 3 trading sessions, especially post surpassing the previous lifetime high of 18,888 zone. So we believe that positionally now 18,888 could act as a major support, and this rally can extend to us 19,500 and beyond. Looking at the data setup, India VIX is holding well below 11. Put-call ratio is heading upwards beyond 1.5. We have seen fresh put writing in Nifty at 19,000, 18,900 put, which also indicates the base of the market is shifting higher. And if you notice the price momentum last 60, 65 days, every time the index comes to 20-day and turns higher. And recently also it tested the same. So till Nifty holds above 18,888, we are expecting further momentum to extend. And for intraday point of view, one can keep the support near to 19,100 to play the swings in the market. Looking at the Bank Nifty index, here also we have given a consolidation breakout of last couple of days. It surpassed the key hurdle of 44,500 zone. So now the 44,444 is the support, and this rally can extend to us 45,250 kind of level. Now looking at the stock wise, first it is buy on M&M. We have seen good attraction in auto sector. Nifty auto index itself has given a breakout, enter into the new high territory. We have seen positive price action in M&M. 89% rollover is clearly visible. The index is moving with buying interest in all the auto stocks. The stock has given a consolidation breakout of last 15 days. So recommending to buy on M&M with a stop loss of 14.15. The stock has potential to head to us 1500 plus kind of level. And apart from M&M, we have positive view on the Maruti, Hero Moto, and other known F&O mid-cap auto ancillaries name as well. Looking at the other name, that is buy on L&T. This stock has seen rollover of 90%. In the last series, the open interest was significant down by 30%, with surge in the price by 10%, which clearly indicates short covering. And now it has given a fresh breakout, so momentum could be there. Selective capital goods stocks are also moving on upwards. So L&T is likely to outperform. One can buy with a stop loss of 24.35, and the stock has potential to rally towards 25.80 to 2600 levels.
Okay, thank you very much for that, Chandan. In today's Momentumizer, I'm looking at TCS. Now, TCS closed out with a gain of 2.7% on Friday. On Friday, it also crossed its 50, 100 and 200-day moving average with the up move that we saw. So those rates will also come up for you on the screen. The stock is still away by 7.5% from its 52-week high. So at a time when the rest of the market is hitting fresh highs, TCS is still some distance away. Also, now most IT companies hit their 52-week lows when Infosys came out with their numbers, because we had two back-to-back week numbers. They fell after TCS reported numbers, and then they fell again when Infosys reported. Since then, all the IT stocks have rebounded, but the rebound in TCS has been the least. Peers like HCL Tech, for instance, have rebounded 17% from their session lows. Now, NASDAQ has been doing very well, particularly over there. It's the generative AI, the promise of generative AI, which has boosted stocks like NVIDIA, etc. But generally, NASDAQ has been up 31%. Can there be a rub-off impact on Indian IT? But that said, Q1 numbers are expected to be very, very muted. For TCS, we're expecting just a flat growth this time. H1 is going to be subdued. Results will be out on 12th of July. That's next Wednesday, I think. Next Wednesday is when TCS reports numbers along with HCL Tech. But watch out for TCS, because on Friday it did pretty well and it crossed all those important technical levels of 50, 100 and 200-day moving average with the up move. But let's get chatting with Prakash Diwan. He's been waiting by. Prakash, we spoke about IT, so don't want to once again touch upon TCS. But your thoughts on what Hero MotoCorp reported in their June monthly sales numbers? Sales are down 10%. The street was anticipating a number of 5 lakh units. This time they've only done 4.4 lakh units. Is this very disappointing, or do you think the markets will be able to take it in its stride because the sentiment has improved since the onset of the monsoon?
So it is disappointing for sure. I mean, their footprint in the tier 3 and rural markets is something which has been troubling them for quite some time. But what confounds the market is that they've not been able to improvise on any of their products to kind of make some headway in that price-sensitive segment. In fact, coincidentally, and anecdotally, they're launching the Harley Davidson, one of the variants of the Harley Davidson today. So, it's a company that has bread and butter business coming from, low entry point, price point bikes. But then they're looking at premiumization just to catch up with the Enfields and Bajaj Autos of the world. So there's a little bit of a mix-up there. I think the distraction also happens to be from the fact that their export markets had started doing well. They've been sputtering and, doing sporadic stuff. So there is a little bit of a concern, and the market will read this as more as a symptom rather than the malaise itself. So it's the problem lies somewhere else, Riba, and I think the market would probably want to relook at that, given the fact that TVS and Bajaj Auto are growing at such remarkable clips. So this is not a market where you can blink for too long. Once in a while, it's fine. You make a mistake strategically. But this is going to cost them a bit in terms of disappointment. Yeah.
Okay, all right. Prakash, thanks a lot for that. Well, time to shift focus now to our defense space. Prabhudas Leeladhar, they're optimistic on the sector on the back of the government's focus here on making things at home and the robust order book pipeline as well. Amit Anwani, research analyst at PL, joins us on the show. Hi, Amit. Good morning. Thanks so much for joining in. Always good speaking to you. Well, tell us, from the defense pack, there's been plenty of interest out there. What's your top pick? Give us a rationale for it.
Sure. So see, we have been seeing defense has been the focus of this government, and we're seeing gradually and slowly the policies have been favoring the sector, including the focus on co-production, transfer of technology, reducing the import component, and at the same time making the robust supply chains for the platform OEMs. And we are seeing a lot of fleets at all 3 services getting aged. So there's a lot of capex which is on the cards for all of these 3 services. And broadly, if we see all the DPSU platform companies are at the cusp of performing and delivering good sustainable revenue in the coming years. And we have seen the price also rallying in past 1 year or more than that. Yeah.
How do investors align themselves with the volatility in earnings? These are very large orders that the companies have won, but they're spread over 10 to 15 years. You don't make fighter jets in 2 or 3 years. These take a very long time to fructify, and in that period, there is going to be a lot of volatility in terms of earnings in the order book, in the pipeline, etc. So what should investors do when you see those dips post earnings? Or how do you measure the earnings cycle for these companies now?
Right. So I think earnings on a quarterly basis will definitely be volatile. So if we talk about the order book of the large OEMs, including HL at 80,000, BL at roughly about 55,000, MDL at 38-40,000. So they're talking about at least, order pipeline or intake in next 2-3 years as similar to what they have as an order book. So there's a lot of sustainability which is going to develop compared to the last decade versus the next 5 years with respect to earning sustainability going forward. At the same time, we are seeing, with the current level of manpower and facilities, they can at least achieve 1.5, 1.7x revenue over the next 2-3 years. I think obviously backed by the robust order intake which they're expecting. So having said that, there's a lot of chance of operating leverage playing on, and we have to make a longer view. As you said, a lot of defense companies are now accumulating a lot of order book, 3 to 4x for companies like BEL, HL, and at least 7-8x for shipbuilding companies where the timeline is very long gestation. But having said that, as there are talk that India targeting almost $25 billion, including $5 billion of exports in next 4 years. That itself indicates there is a lot of chance of good revenue sustainability, maybe double digit for next 4-5 years for large OEM platforms. And at the same time, we are focusing on, as I said, a lot of transfer of technology for the robust supply chain in India for the platform OEMs. I think this will play. But at the same time, we have to keep a long view, and directionally defense spec with a longer term view definitely is for the good, right?
So Amit, hi, good morning. So yeah, the tailwinds are there and well established, well understood now. But with stocks, you would say extend the time horizon. I mean, if you're buying here and your picks are BEL and BEML?
Right. So I think we have rating right now on BEL. So we're positive on BEL. And as we said, obviously the stock has rallied a lot and it's trading at roughly about 22-23x forward. But having said that, because of sustainability, and BEL is largely beneficiary when any order comes into any services, including aircraft, submarine, because of the defense electronics. And we are seeing a lot of sustainability with respect to performance, order intake, and at the same time margins. So I think we can expect some re-rating. At the same time, these companies are talking about at least 2 to 3 years of sustainable order intake, which will also play out. So we have a buy rating on BEL. But having said that, I think HL as well as MDL can also gain in the long term. HL especially, we saw the repair overall opportunity also panning out for HL. And there is a good sustainability, double-digit growth can come in the longer term when they start delivering the LCA aircraft starting FY25. At the same time, there are a lot of, they're talking about 48,000 crore order pipeline for FY24 and at least 80,000 to 1 lakh for next 2 to 3 years, including a lot of helicopter orders, including advanced combat, light utility. So I think HL can also play out in a longer term, despite there's been a significant rally recently. And MDL, I think they got the very good capacity, maybe 10 submarines and 10 warships to manufacture. And they're, I think, currently at 5 each. So there's a lot of traction which can develop post one big order which is expected, in which L&T along with the foreign partner and MDL along with the foreign partner are there for the submarine. So that could be about 45,000 crore large order. So I think these three platforms I expect to perform very decently and sustainably.
Well, BEL, HAL and Mazgaon Dock are the three names which Amit is highlighting could be sustainable picks from here. Thanks very much, Amit. Good speaking with you here on CNBC-TV18. Well, there's 6 minutes to go for the market open. Sudarshan is back with us with his 9:10 call. Sudarshan, morning again.
Good morning. BEL is a buy and we just heard about it with a stop under 116.
Okay. BEL with a stop under 116 is Sudarshan's 9:10 call. Mitesh, what about you?
I'll go with the buy on Infi with a stop below 1320 for targets of 1375.
Okay, thank you, gentlemen. We'll touch base with you later on as the day progresses. For now, L&T Group is eyeing leadership in the realty space and a berth in the top 5 in the IT sector. Lata joins in with the key takeaways from her exclusive off-camera conversation with the MD and CEO of the company, N. Subramaniam, who's soon going to be the chairman of the conglomerate. Lata.
Well, that's right. Actually, it was a conversation and off-camera, so it was not meant to be on revenue growth and margins and, nitpicking on small things, but more strategy chat. And surprise, surprise, the maximum time that was devoted by the CEO was on realty. And the clear mandate is that we want to make it the largest developer in the country in a few years. And they're going about it in a very careful manner as far as capital is concerned. One is their deal with this Singapore-based listed entity called Capital Land. It's an India trust. And what they have done is that it's a 50-50 JV with Capital Land agreeing to buy everything that L&T constructs in a period, in a phased manner over 2 years. So money is not locked up for L&T Realty and they can keep reinvesting and rotating their funds. That's the idea. The initial deal is to build about 6 million square feet of office space in, I think, Bengaluru, Chennai. Those are the main places that they are looking at. The other deal the realty company has is with HDFC Capital Advisors. That is the PE unit of HDFC. And here as well, the tie-up is such that the JV buys the land. So again, not too much of L&T Realty's money is tied up. And the sole developer will have to be, of course, L&T Realty. So that's how they're expecting to become, one of the largest, targeting over 10,000 crores in a couple of years. The other point that the MD mentioned was on LTI Mindtree. They acknowledged that they missed the bus, the big Y2K journey that IT companies, embarked on. But they are now targeting to get into the top 5. Actually, they're already top 5 in terms of market cap. But in terms of sales, they are a good 20,000 crores less than TechM. So perhaps the idea is to get there. And of course, at the moment, older clients are giving less orders, but they're very confident that this will catch up. The other big part of the conversation was on ESG. Remember, MSCI has just upgraded them to BB from B. Now they are doing an audit of every factory of theirs to formulating a plan to make it both water neutral as well as carbon neutral. And finally, the general question on capex growth, he was reasonably confident that private capex is coming up. It's risen from 22 to 27% of their order book. But government capex is what, of course, gives them the bread and butter. Huge projects coming up also in the Gulf on solar, where they are, getting something like 3,000 to 4,000 megawatts is what of solar power is what they are manufacturing over there, along with green hydrogen plants. But he was most triumphant about the two things that we Mumbaikars should be interested in. Completed his part of the coastal road, as also completed the Trans-Harbour Link.
Okay, all right. Thanks a lot for that, Lata. By the way, we have Bajaj Auto's numbers that are flashing for you on the screen. A little bit lower than what Nomura was estimating, but I think the exports numbers as well should come up for you. That's down. It's come in at around 1.41 lakh units. But
so it looks like I think it's the exports which have missed. The domestic should be fine because Nomura was expecting exports to come in at 1.25 lakh units, and I think the export number has come in lower than that. So it looks like the domestic demand is fine. The overall miss on the sales would be driven by the exports amount. But let's go across to Sonal now. She's going to give us talk a little bit more about Gujarat Gas and IGL.
Thanks a lot for that. For Gujarat Gas, there's a positive news that has come about because the government has increased the import duty on commercially used propane to 19.25% versus 2.75%. This is applicable from 1st of July, and this would mean that it will increase the equivalent propane price by 5 to 6 rupees per SCM, which is a positive for Gujarat Gas, of course, because it is a competitive product. And right now, the propane prices before the import duty hike was around 32 rupees, which was cheaper than Gujarat Gas's price of 38.6 rupees per SCM. So the differential will be taken care of, and that would mean better volumes for Gujarat Gas, or at least a competitive price here. For IGL, Citi has written on the company because there was a management meet. They say that EVs are unlikely to pose a threat over the medium term, and management is also keen in exploring some inorganic opportunities and evaluating new phases or new scope of businesses as well.
Okay, all right, Sonal, thanks a lot for that. Well, the first tick is in. The Nifty opens up, gap up. We're getting used to this now. Nifty up close to around 60 points, half a century straight off the bat. Let's focus on a few winners. Wipro is up close to 100%. That's one of the winners. Mahindra & Mahindra is up close to 100%. And Ultratech posted good quarterly update. The street likes it. When you grow 20% on that sort of a base, it's telling you that they've gained market share as well. So that stock has opened up in the green. Hero MotoCorp on the flip side, well, those numbers were a little bit disappointing, and that's down close to around 1.5%. Maruti Suzuki as well down close to around 0.5% odd. But the breadth of the market is looking very, very good. Close to around 2,000 stocks are advancing in comparison to close to around 200 stocks, 250 stocks as well that are declining. The big movers, though, from the broader markets, which Rima will take forward. Gujarat Gas flying away. The additional duty on propane being pulled into the country, well, that could give them a competitive advantage. So that's up close to around 4.5%. And Strides is flying away. Strides is up close to around 6% as we speak. But Rima, run us through the list.
Well, L&T Finance Holding is also a big mover with a change of guard there. The stock is open with a gain of 3.5%. Ashok Leyland has reported their monthly sales numbers. CV volumes have gone up by 5% on a year-on-year basis. The domestic CV volume growth is at 10%, and that's something the street likes. And the stock has been given a thumbs up, opens with a gain of 2.5% on that. In other auto sales numbers, Tata Motors has opened up with a positive bias, but no big gain, just up close to about 0.1%. On the losing side, you've got Maruti with a cut of 1%. Again, the street is disappointed by the June sales numbers, and Bajaj Auto sales are also out. Total two-wheeler sales are down 2%, and the stock is open with a cut of 0.5%. That's about the auto sales numbers. Some other gainers and movers include NCC. They won orders worth 2,000 crore in the month of June. There is some news on granules, which has pushed the stock higher by close to about 2%. On the losing side, softness seen in AMC companies. Remember, they had a double-digit rally on Friday. So today, profit booking seen in Nippon, HDFC, AMC, UTI, AMC, down 1 to 2% on all these names. Apollo Tyres, where Morgan Stanley has downgraded the stock to an equal weight. The stock opens with a cut of close to about 0.5%. So all in all, it's a pretty good opening. The mid-caps are moving in step with the frontliners, and look at the advanced decline ratio. I know it's only 2 minutes, but looking good.
Oh, it's looked good for a while, Rima, absolutely. And 0.5% again once more as we start another week of trade. Let's just have the Nifty up. So 80 points, I mean, galloping ahead. And you know what typically happens once you make new all-time highs also is the fact that, you know, you've got to be willing. I mean, if you are trading, you've got to be able to you've got to be willing to buy breaks higher as well, not just buy the dips, which basically has been the strategy all through, you know, the last 300-400 points when the market was in the range. But, you know, things pick up, pace picks up, momentum picks up a little bit. And you got to be willing to buy gap ups, etc., which is harder to do psychologically, mentally, but it's a bit of a change as compared to what we've seen earlier. So, you know, I think the Nifty Bank will come up on your screen where we hit 44,995 on the Nifty Bank. That's about 0.5% higher. And we were saying this earlier, maybe the Nifty Bank, which basically saw a bit of a later breakout as compared to the Nifty, has got more catching up to do, so keep an eye on that. We're, of course, with this kind of open once again at a fresh all-time high. Manish Gunwani is with us. He's head of equities at Bandhan AMC, a veteran in the institutional money management business, really. Manish, good morning. Great to have you with us here. Thank you very much for joining us. How are you feeling, Manish, on about markets with the new highs? You know, you guys at Bandhan are... You've got, in a way, you're growing the business, you're getting inflows, and you've got to deploy. And that's at all-time highs, always a bit of a challenge. How are you doing it?
Yeah, Prashant, I know it's all-time high, but if you see on a 2-year basis, the market hasn't really done all that much. So I think it's a fairly interesting time in the macro, in the sense that globally, if you see two surprising things are happening. One is everyone, or a lot of people thought that given the monetary tightening, we will see a big slowdown in global growth. Now, that surprisingly is not happening, especially the services side of the global economy is firing fairly big time. And we are seeing that global growth has surpassed expectations. That's the first point. The second point is that we are in a fairly peculiar configuration where the Fed is hiking rates, commodities are correcting, but at the same time, EM currencies are doing well. So I think the story of this year is actually the fall in the dollar, because if you see typically when the dollar falls, commodities go up. So the surprising part is commodities are falling, but yet emerging market and emerging market currencies, they're doing pretty well. So that's the peculiar configuration we're facing, which is kind of, I think, being the main contributor to this bull run of recent times. And I think it's difficult to see that changing, in the sense that the dollar is obviously very expensive on a fundamental basis, because it's done very well last 10, 12 years. A lot of EMs have good macro stability, whether it's India, Indonesia, and even the commodity countries like Brazil, etc. They've been beaten down over the last 10, 12 years. And we're also seeing central banks sell dollar. So I think that's the interesting point about this year, that I think the dollar trajectory is kind of driving a lot of movements.
Manish, morning. So in terms of fresh capital deployment, now banks is a consensus overweight. Earnings growth outlook is fairly resilient, robust. The valuations are reasonable. But what about the other two pockets where the growth outlook is still a bit uncertain or cloudy? One is IT and the other one is the rural economy, because the rural economy has gone through a long stretch of stress. Can growth pick up in these pockets? So if you would like to talk about and tell us, would you deploy capital in IT and rural, and how much of an overweight should banks be at current levels in our portfolio?
So as a fund manager, I think a bet on rural makes sense. Overall, our view is that the domestic economy is poised better than the global economy, because while we are seeing emerging markets do well at this point of time, the intensity of monetary tightening is such that you have to be prepared that at any time some big global event may happen, whether it's in credit or geopolitics, etc. But I think the domestic economy is on strong footing. Current account deficit, inflation, etc. I think India has done very well related to global peers. So our focus or our overweights have been more in domestic sectors, which include financials, as you mentioned, cement, real estate, industrials, auto, etc. So to that extent, I would probably bet more on a domestic segment at this point of time. Although I think that the capital that's flowing into emerging markets can drive a bit of global reflation. And for some time, given that India has outperformed a lot of the EM markets, we may see, especially China, I think we may see a phase where Chinese market bounces back and Indian market kind of underperforms China. But I still think that from a medium perspective, I would bet on rural versus IT at this point of time.
All right. Hi, Manish. Good morning. Manish, some of these new age themes, they listed and they bombed out. Some of them became half, some of them became a third. But in the past quarter, they came back in style from those beaten down levels. Do you think bulk of the, of the good news or any kind of recovery, management commentary, that's all in the price, or is there more room?
I am quite positive on a few of them. I think you have to be obviously selective, but I've always maintained that there can be companies which are temporarily loss-making, but that should not preclude you from taking a 5-10-year view and looking at these companies. Now, you will obviously need a higher margin of safety to weather the next few years of losses. But I do think that a couple of them look fairly healthy to me from a long-term perspective.
Fairly healthy from a longer term perspective. You know, just a quick word on the asset management businesses, if you have a view, Manish. I mean, you're intimately aware of how they work. I mean, what are the profitability levers, etc. On Friday, these stocks were very large gainers, you know, 10, 12, 15% kind of movers. What's the road ahead, according to you? And would you want to own any of these businesses?
So I think clearly this industry's market cap has suffered a lot over the last 2-3 years. You have a mix of different things, and some of those challenges still remain. So one part is the regulatory part, which obviously we saw change for the better in recent announcements. But I think that, and long term, we all know that financialization is a big theme. We think AUMs will definitely grow. A lot of these companies will become very large companies. The challenge is in terms of margins and competitive pressure. I don't think that really goes away. So we will have these cycles where people become very pessimistic on margins, yields, etc. And there'll be phases where people become overtly optimistic. So you have to be a bit of trading around these sentiments. See, this is a sector which has great ROE, ROC. It has good AUM growth. But it's a sector you have to remember that where a lot of people want to enter, and it's easy to enter in one sense. So I think again you have to be very cognizant of valuations. You have to be clear about which player is going to get market share. So I would think that if the stocks have done very well and let's say they continue to do well, you have to be a bit cautious on the sector.
Manish, I know it's impossible to predict the market, but do you see a scenario in the next 6 months where markets could decline 15-20% at the index level? Are there any such risks on the horizon?
Well, I think given the quantity of a correction, obviously prone to a lot of risk. We all know that short-term markets are difficult to predict, but I think we should not lose our bearings. We are still in the midst of a global tightening of monetary policy. I guess what has happened is the fiscal policy globally has been a bit loose, which is why probably growth has surprised. But I think clearly a lot of central bankers are very keen to get inflation down from even here, although inflation's fallen a bit. And when you are in that phase, clearly there's always a chance of a big credit event or some geopolitical action happening. So I think volatility in second half will be quite high. Second half of this game.
All right, Manish, just hold on to that thought. You know, we are getting some news coming in from Money Control. They are saying that Concord, the wheels are set in motions, and initial bids for Concord could be invited by August 1st. So we'll try to get you more on that story. But Concord is holding steady with a gain of around 2%. So just keep an eye out on that stock. And the other one that's moving very, very well is Suzlon. Now it's at close to around 16.5 rupees. I remember the stock in single digits. So Suzlon is moving higher on very large volumes. Manish, this renewable theme has come back in style. Some of those power-related stocks as well. Are you looking out for this renewable theme? And if yes, how to play that? Because there's very limited, choice out there.
No, I think power in general is a good theme because stocks are cheap. Between 2010 and 2020, we had a very big down cycle for this sector. And clearly, if we take a medium to long-term perspective of the power sector, most of the action will be on the renewable side. Now, as I said, obviously, there's not too much of directness, but the other thing you can also look at, because we've seen this happen in Europe, for example, is that when renewable becomes a bigger part of generation, you also need a lot of investments in distribution and transmission. So that entire value chain of renewable generation, transmission, distribution, I think there are a fair amount of stocks there, and also the funding of that through financiers of power capex. I think there are a fair amount of stocks which can be used to play that theme.
ICICI Securities, I think on Friday morning, last Friday morning, I think initiated coverage on Suzlon. So it's interesting, right, that this is also happening. And I think they have a price target of 24 rupees on Suzlon. Stocks up about 7.5%, very large volumes for this point in the day. Manish, just a quick word, if you will, on insurers. You know, you were talking about financialization. That's the other big, large space where which was hurt. And again, for stocks have done well this year, but if you take a slightly longer view, 3-4 years, they've not really done very much. What's the view?
So structurally, first of all, I personally am bullish more on general insurance than life insurance in terms of premium growth over 5-10 years. But having said that, I do think that both offer decent risk reward. Life insurance, as you alluded, basically saw a lot of regulatory actions which went adverse for the stock movements. But I think the good part of that is that it's a fairly consolidated sector. You obviously need a fair amount of capital to enter. You need a brand where people who are buying policies for 10-20 years can trust that brand. So there is a moat to that sector. The second thing is, if you see the traditional experience of large economies, it tends to grow faster than GDP because it's a discretionary product. It's a very urban, affluent product. So in that sense, the top-down scenario on life insurance is great from a 5-10 year perspective. We've seen some regulatory challenges, and it's anyone's guess if those will aggravate. But definitely, I think there should be some exposure in your portfolio to this.
Manish, we'll leave the conversation here. Thank you very much for joining in and look forward to chatting with you more frequently. By the way, for the markets, we've hit 19,300. We opened with a gain of about 50-60 points, but quickly have scaled up and added on more than 100 points. The Sensex too is up close to about 400 points. The corporate on our radar right now is Bajaj Auto. The June auto sales have come in slightly lower than what the street was anticipating. On the whole, the total sales have seen a decline of 2%. The domestic sales have gone up 45% at 2 lakh units. While it's up handsomely on a year-on-year basis at 45%, on a month-on-month basis, the domestic sales have fallen by 12%. There you have it. 2 lakh units in the month of June, which compares with 2.28 lakh units in the month of May. Coming to exports, the other piece of this puzzle. Exports are down 32% on a year-on-year basis. They've come in at 1.41 lakh units. But as this chart would show you, it's gone up for the third consecutive month on a month-on-month basis. So exports are seeing some green shoots and they are rising, and month-on-month, the exports are up 11%. Rakesh Sharma, the Executive Director at Bajaj Auto, is now with us to discuss more on their June performance. Mr. Sharma, morning, and thanks for joining in. This is Rima here. First, if you could talk about this 12% decline in the domestic sales on a month-on-month basis at 2 lakh units, and what's the trajectory? Could you pick up from this number?
Good morning, Reena. The June domestic sales in motorcycles being lower than May is inevitable because, in the north, there is a mini season of sorts during the period of May to early June or mid-June, which is driven by marriages. And therefore, there is nothing unusual about June being lower. And I would say that July, with the onset of monsoons in most parts of the country, would be lower than June. So it's as expected, actually.
So you're saying July will be even lower than June for the domestic sales?
Yeah, yes, because, mid-April to almost early June is the marriage season in the north that drives up the sales. And then, you have the monsoons in July. And then, late August, September, sales start to improve.
So this decline, sir, this decline that we are seeing is in line with historical seasonality, right? It's not that there is some other stress that we are seeing, underlying stress in the domestic market.
Absolutely. It's in line with the trends, though I may add that on a retail basis, the industry is now in low single digits. So the industry performance in quarter one, if you look at the Vahan retail data, which is coming in, which had perked up really in quarter four, which is the final quarter of last year, to double digits, about 13-14%, has now in this quarter come down to about low single digit performance. So that's an important point to note.
All right. Good morning, Mr. Sharma. Nigel on this side. Let's talk about exports, because that's the bright spark, right? Whenever you've been joining us, you're telling us things are gradually improving out there, and it's evident in the numbers. Now you're clocking 1.4 lakh odd, and some brokerages are estimating you cross that 1.5 lakh odd in the coming months. That said, could you tell us, will exports on a month-on-month basis continue to improve? And also, since we have been focusing on Nigeria, and the last recorded number I think you told us was around 30,000 units for a month, what was it in the past month?
So exports, like we've been saying, is going to be, is now on the recovery path, but the recovery is going to be gradual. I cannot precisely pin down when we will cross 150,000. But yes, that is the next milestone to hit at. For the moment, we will try to see that July is better than June, even if it is marginally so. A lot, of course, depends on Nigeria because it is the largest market. And Nigeria, post-elections, post-transition to the new government, is now dealing with, new set of policies, which I think are all aimed in the right direction, whether it is to do with forex management or reduction of fuel subsidies, which are causing momentary short-term pain, both in terms of availability of foreign exchange and driving up the prices on the street because subsidies are being rationalized. These things will, I think, get digested over a period of 2-3 months. People will get used to new ticket prices for commuting, and hopefully that would see Nigeria come back in a more stable form.
What was the number, Mr. Sharma, for June for Nigeria, sir?
Our retails are at the similar levels. I'd not said 30,000 if I'd said 28,000. And they're around the same region. I don't have the exact number because we'll get it by tomorrow. But we expect it to be in the similar region.
So around just under 30,000 odd. And you told us that the peak used to be about 50,000 in Nigeria.
Yes.
Do you have visibility for those kind of numbers? I mean, a few months down the line? Or you think there is still some distance off?
Yes, so that's what I said, that, the key thing is that there has been a 24% inflation in Nigeria driven by the removal of subsidies in the fuel prices. That has to translate into the ticket prices for the riders going up, the commuters going up, which will bring back the payback and again make buying a motorcycle as a taxi a very good business option. So now that would take a little time, I guess. And once that is done, I think the policies are aimed at getting some sanity in the foreign exchange because there was a parallel market for foreign exchange that is converging to single window clearance. The subsidies are being rationalized. Fuel prices are being set. So they're taking actions to put the country on a stable wicket, and which is very good for us. And I don't know how much time it will take to stabilize, maybe 3-4 months, but the trends are good.
Sir, your peer Hero MotoCorp announced a minor price hike of 1.5%, up to 1.5% over the weekend. Are you looking at any price increases?
Yes, we have been looking at costs and prices based on inputs for Q2 projections and some of the regulatory changes, and of course, monitoring competitive price hikes. So we will be looking at, looking at our numbers and see if there is a reason to take price hike.
Okay, all right. Mr. Sharma, what about the EV focus? You are gradually ramping up there towards 10,000 units a month. There has been a pullback on some of the subsidies. Have you seen demand taking a bit of a knock? And also, what kind of a number are you clocking on a month-on-month basis?
Yeah, so, it was a very big jolt when the subsidies were removed, or not removed, but subsidies were reduced.
Pullback.
And therefore, we as an industry saw the month of May rocketing because the news had spread that the prices are going to increase because of the reduction of subsidies. So an industry which was generally doing about 65,000, I'm talking of the high-speed electric scooter industry, which was generally doing about 65 to 70,000 units per month, rocketed to about 1 lakh in May, and it has fallen to 40,000 in June. But if you sort of take average of May and June, which is 1 lakh plus 40, we are back at that 70,000 unit. Now, prices have increased, but we expect the industry to come back to 65,000 in the least. And our plans after, sort of overcoming this little blip, continue to expand our geographic footprint, build our brand, and drive to.
What is the number, sir? What is the number for Bajaj Auto? We got the industry number for you. What was it?
We build about 7,000 units.
Okay. Mr. Sharma, on Triumph, do you have a better sense of what kind of, could you make a projection numerically, volume-wise? What would you expect the bike to do? How many?
Well, I'm going to send you a YouTube link for day after tomorrow, which is when we launch in India and we reveal the price. And I think you, along with a lot of people, can make a judgment on that. We'll see how it goes. But I can tell you that after the unveiling in London last week, there's palpable excitement. And without the price being there and without people having seen the product physically, we already have bookings which exceed our production capacity for July. So there is a lot of excitement, and let's see.
What is your production capacity, sir?
Well, the production capacity is a movable figure. We've just launched, we've just inaugurated our new plant. So that sort of will be ramped up.
What is on an overall steady basis, what would be the capacity for this product?
See,
once you've ramped up
that this is a sort of a futile question, that what is the capacity, and because these
you would start with, Mr. Sharma, you would start with something, right? You would have, or you wouldn't go in without any numbers in mind, right?
See,
and then, of course, you would ramp up if demand picks up, etc.
I would invite you to understand how automobile capacities are determined, So I keep getting this question, and that's why I ask. It's an inconsequential question. I mean, if tomorrow if let's say in 3 months we had a demand of 10,000 units, we would be able to beat it, because the capacity is a collective of many components from vendors, and the Bajaj Auto capacity in itself is really around the assembly. And therefore, as the demand ramps up, it's quite possible to increase capacities.
So, but you've still not put a number to it.
There is an Amura note which says the initial...
In a few months' time, I told you, in a few months' time, it's 10,000, we'll do 10,000. I don't think it serves any purpose to say at this point of time what is the capacity.
Okay, got it.
So there is an Amura note which came out last week, and they're saying the initial planned capacity of Bajaj Auto Triumph is 6,000 to 8,000 units.
No, I think Mr. Sharma is now telling us...
because it's fungible, I think, from what
it's fungible, and we'll get the more intricate details in the next couple of days, Mr. Sharma. We'll wait by for the pricing, and analysts will be working on the numbers. I'll be visiting your showroom and
with the check.
First we'll test ride it, and then pricing is important, right? And then, but all the best, Mr. Sharma. Thanks so much for joining in.
Nigel, I see a weakening in your resolve. You know, you were ready to sign the check, and now you're saying
no. The bike.
Better
is
bang in your
check,
application fast.
The check is in. I mean, and everyone is focusing on the capacity, sir. I just want to get the initial feelers about booking because I want to know how far in the line I am. So, all right, all the best. Thanks so much for joining in. Well, for the time being, though, we'll slip into a short break. On the other side, Mr. Vinod Agarwal of Eicher Motors will be joining in to talk about their June auto sales numbers. And later on, we'll connect with Abhishek Agarwal of Godavari Power and Ispat to talk about the large trade that happened on June 30th. Stay with us.
Welcome back. It's the day of the auto sales numbers, and we've got another management waiting by to chat with us. It's the Eicher Motors CV business, VECV as it's called. The domestic sales are up 12%. And the CV sales in that are up 6.5%. But exports are a bit subdued. Vinod Agarwal, Managing Director and the CEO of VE Commercial Vehicles at Eicher Motors, is now with us on the show. Mr. Agarwal, thank you very much for joining in. While your total sales are up 6.5%, I'm looking at the domestic numbers. And the domestic number is very strong. It's gone up by 12.5% on a year-on-year basis. And for Q1, that's April, May, June, the domestic volumes is 18.5%. So do you think can you continue with this kind of a run rate? And if yes, will you be able to perhaps beat your guidance? Your guidance was for a double-digit volume for this year. Do you think maybe you can push it closer to high teens?
I think that's what we will attempt at. If you go by our first quarter performance, definitely our growth has been very good, and we would like to maintain that. And if you look at the industry, the growth is very good in, you can say, in the buses segment and in the heavy duty segment. But light and medium duty trucks are down a little bit. So exports are down quite a lot. So overall we have grown, and that's what is reflected in our numbers.
So heavy duty and buses is strong, but on the flip side, LCV and exports is a bit subdued. So can you talk about exports a bit? You had, in our last interaction, told us about the weakness in Bangladesh, Sri Lanka. But are there any green shoots? Do you think exports has bottomed out, or does it get worse from here on in the subsequent months?
It seems that it is at the rock bottom right now, because we have dropped to almost, I'm talking of the industry. The industry exports out of the country has dropped to almost 2,000 units per month for 3.5 ton and above, which used to be around 6,000. So it is 1/3 of the peak numbers in exports. And it is largely led by Bangladesh, because Bangladesh is the large market for us and for the entire CV industry. So therefore, it seems that it's at the rock bottom. And from here on, we should see some growth as we go forward.
You have plans to export to Latin America, right?
We are planned. Yes, we have.
When will that take off?
It has started. We have started with Ecuador and maybe one or more countries. So it will happen slowly and steadily. It is not going to reflect in numbers very soon, but it will. Once it starts happening, then it will happen step by step.
All right. Hi, good morning, Mr. Agarwal. Have you all altered the pricing? Because some costs have gone up, right, as you all transformed to BS6. Could you give us a quantum this year so far?
Pricing has been basically, it is coming in from two sides. One is that there is some price increase. The other is there is, I think, big resolve across the industry to get the discounts at the right levels. So therefore, from both sides, the price management has to improve. It has improved a little bit, but it has to improve more. Let's hope that this should happen.
Buses, that's also another very strong segment for you. In Q4, you had, I think, delivered to the city of Chandigarh. What are the other big bus tenders that are out which could drive bus sales from here on for you?
I think there are a lot of tenders which are in the pipeline.
Which you are participating in, sir, and could fructify.
And I'm sure the payment security mechanism, which the industry had been talking on the electric buses, that should happen. Once that happens, I think the entire industry will participate. As you all know, that last time the tender which came in for 5,000 odd buses, no one participated from the industry because of the tough conditions on the security mechanism, payment security, because we are supposed to give the buses for 12 years on per kilometer basis without any guarantee on payments. So hopefully that will resolve. That has to resolve before the next tenders come in. And that's why the tenders are getting delayed, because it is still not resolved.
So if bus tenders are getting delayed, do you think the bus sales will also be under pressure, right?
Not because of that. Bus sales are also dependent on a lot of other segments. The other segments are doing extremely well, like the demand from schools or demand from staffing segment or demand from intercity segments from private operators. The only delay in the state transport undertaking orders or the state government orders, which are dependent on this, the entire government backing the payment security mechanism. So I think the demand from state transport undertakings, that is long overdue, because they have very, very aged fleet now, and they have to replace that fleet, and hopefully that should happen soon.
So your heavy-duty truck market share was at 8.3%. It had increased to 8.3% in FY23, and this includes Volvo and Eicher. As of Q1,
Volvo and Eicher put together, it is more than 9%.
More than, as of Q1, it's 9%?
Yes, 9.5%.
9.5%. And as of FY23, that number was?
FY23, it was around 8.5%. So we are up by 1%.
So you've added 100 basis points in your heavy-duty truck market share in Q1. From 8.5%, it's gone to 9.5%. And what explains this weakness in the LCV market, and how long do you think it will last?
I think it is temporary. If you see month-on-month numbers, already there is some improvement. There could be two reasons. One is this OBD2 impact. There has been some buying in March, because March, if you look at the March sales of light and medium duty, that was very, very strong. So therefore some impact of that could be there. The other impact which is there is due to the CNG trucks. If you go back to last year quarter one was still CNG truck sales were very high, and after which it started dropping because of the pricing. CNG pricing became not very attractive. So the second reason is the CNG truck. The earlier people were replacing their old trucks with the CNG fuel trucks. That has got slightly deferred. I think the replacements are now getting deferred for CNG trucks. And then other than that, I don't see any concern, because the economy is doing well and there is good demand from all other segments, e-commerce or fruit and vegetables or auto components. I think the other demand, other segments where the light and medium duty trucks are used, those segments continue to remain strong. The only reason could be the CN.
Okay, so we'll leave it to that. Thank you very much for joining in. By the way, the markets are climbing on, and it's courtesy HDFC Limited and HDFC Bank. Remember, the merger between the two is effective. The record date is 13th of July, and these stocks escape.
We are seeing that HDFC, those twins, they've outperformed the Nifty. The Nifty is up 4.5% odd in this month, while the HDFC twins are up between 9 to around 10% odd. On the editors' roundtable a couple of weeks ago, we put this piece out that, remember, HDFC twins have been relative underperformers in comparison to the Nifty in the last 3 months and the last 3 years. Has its time come, at least in this month so far? Perfect. That's the chart we're looking at. It's been a big outperformer in month to date, HDFC twins leading the way. But time to get back to the broader markets. Godavari Power and Ispat, well, that's the stock on our radar. Multiple trades happened on Friday's trading session. Promoter sold close to 3% stake in the company. Mr. Abhishek Agarwal, the executive director at Godavari Power and Ispat, joins us on the show. Hi, Abhishek. Good morning. Thanks so much for speaking to us here on CNBC-TV18. Well, we know you're in the silent period, but we want some further clarity with regard to this large trade that took place. 3% was sold. Does the promoter entity want to sell more in the company, or is that done? And also, if you could tell us, we have one buyer. We have, Param Capital that's bought close to 10 lakh shares. But who were the others?
Morning, Nigel. As you rightly mentioned, we have diluted some equity in the company. We have been looking to get some base investors on board, and so there was an opportunity, and we have diluted certain stake. And as you asked, what about the other stakeholders? So I would say it's Param Capital and its associates.
Oh, so the entire block was picked up by Param Capital and its associates. Is that correct?
Yep.
Okay. All right. And the promoter stake as of March was 67.5%. So now you've sold close to 3.3%. You would come down, by 3.5% or thereabouts. So around 64% is what the promoter entity holds. Do they want to sell more, or do you think that they're done as of now?
See, at the moment, I think we are done. But of course, as we said, we were always looking to get some good investors on board. So if there's an opportunity which presents later on, we might. But at the moment, I think we're done for the time.
Okay, all right. And Param Capital has bought the entire 46 lakh shares, is what it's telling us, right? Param Capital and Associates.
So I would clarify. So it's
Yes.
Mr. Mukul Agrawal and his associates.
Mr. Mukul, and they have picked up the entire block.
Right.
Lovely. All right. So we've cleared that. Your shareholders will be wondering, what does Mr. Agarwal and family want to do with this money? I mean, it's free. It's your money. So, y'all have built the company. I've seen the company in market capitalization of close to 500 crores. Today, for that 3%, you're raising more than 200 crores. So that's good work. You've created a lot of wealth for shareholders. Should your shareholders watch out for anything with regard to this money that you've raised, or do you all have your plans of your own?
See, the only reason we diluted was because we wanted to get ACE investor on board. No other specific reason. And what we want to do with the money, let's see. So nothing is decided. But eventually, if there is something happening, we'll definitely come out in the open. And we'll declare in the market.
Okay, great. What about pricing? How have pellet prices moved? Domestic realization, you were telling us that it was 10% higher than exports. So could you tell us what is the updated domestic price number that you have? I think it was around 9,000 rupees the last time we joined. So what is the updated number? Has it slipped a little bit? And getting into monsoons, is there some weakness?
No. So the numbers are still at the same level. We are still selling pellets domestically at 9,000 levels. And, I would like to mention here, so we have come out with a new product, from a 65 Fe high-grade pellets. Now we have introduced a new product called 66 Fe pellets, which also we are selling everything domestically at the moment. And we're getting a much better relation compared to a 65 Fe pellets. So that is something new which has, come on board.
Okay, all right. And you'll have not yet started looking at the export market because domestic realizations are better, right?
Yeah, the domestic market is still at least 10 to 50% higher than the export market. So we're still selling everything domestic.
Okay, just to revise, we don't want to ask you about quarter one because post your numbers, we'll ask you a lot about that. But for this year, you were looking at pellet sales of close to 1.9 million tons with margins holding around 18 to 20%. Holding on to that guidance?
Yes, we are holding to the guidance. With the market share like this, we are confident we will achieve to, perform as per the guidance.
Got it. Also, you had planned to put up a 1 million ton steel plant, but you were pending some approvals were pending and you were awaiting that. have those approvals come about? Give us a, Abhishek, if you could give us a timeline and the total capex as well that you will be incurring.
Okay, so there are two approvals pending at the ministry level. One is on the pellet and the beneficiation side, mines expansion, and second one is the 1 million steel plant. So both the approvals are under process. Things have started moving finally, and we're expecting the approvals to be in hand by end of Q3 or early of Q4. So once we have the approvals in hand, we will start the groundwork.
Okay, and for the steel plant, give us a timeline. By when do you see the light of day? Because big investors are coming in. They don't want you to be just an intermediary, maybe. They want you to start producing steel. And that's the plan you've set for the next few years. So give us a timeline. By which year should we see a steel plant come on board? And also the rough capex, if you'll have a number in mind, because it will entail a few thousand crores.
Okay, so if everything is in place, we should start the groundwork based on Q1 of next financial year. And from there on, you can consider 36 months. So we're looking at FY28 for the commercial production of the 1 million steel plant. And on the pellet side, the commercial production should be in place by FY27, Q1 of FY27. So that's the timeline we have set ourselves, to go ahead.
Okay, all right, Abhishek, thanks so much for stopping by and giving us that clarity. Post your Q1 numbers. We'll want further details in terms of how the various verticals are doing. But good on you all to raise this money, and you've got an influential investor as well that's coming in there. Pellet prices as well holding on to these levels. Good speaking to you. Well, a quick check on the markets. We continue to hold into well in the green on the headline index. The problem is the mid-cap index. I think we should pull up the intraday chart out there. The mid-cap index has almost moved into the green. So some signs of profit taking in select stocks from the broader markets. Let's pull up the intraday chart. Also pull up the advanced decline ratio. We were talking about how only 200-300 stocks were declining. That number has moved up to close to around 1,000 now as we speak. So those numbers are getting closer to each other as well. Those lines a little bit closer to each other in the last few minutes or so. For the time being, though, we'll slip into a short break. Come back. Mitesh Thakur will be back with us. He'll be giving us his technical check.
Oh, this is good.
This is H.T. Parekh, the man who brought housing finance to India. This handwritten EMI ledger is the first one used when HDFC began its business, and these are the names of the first Indians who took a formal home loan. DB Remedios was the first of this bunch, taking out a home loan of 30,000 rupees to build his own house in Mumbai suburb of Malad. This H.T. Parekh Legacy Centre has been set up here at the Ramon House in Mumbai, the house of HDFC. It pays tribute to the man behind the housing development finance company, H.T. Parekh, who not only started the company but also pioneered institutional housing finance in the country, allowing the middle class to realize their dream of buying and owning a house. In 1977, H.T. Parekh started HDFC with a personal contribution of 10,000 rupees and grew it into a juggernaut of the Indian financial landscape, a legacy his nephew Deepak Parekh has contributed to.
Although many frowned upon HTP's idea, it was the strength of his relationships with bankers and industrialists and the deep respect he garnered from this community that helped him to raise the first capital of 10 crores to start the business. He had personally contributed only rupees 10,000 at that time. When he was due to retire from ICICI, he took the idea of a new housing finance company to Mr. H.M. Patel.
Welcome back. Well, the markets continue to hold with gains of close to around 110 points. As promised, Mitesh Thakur is back with us. Hi, Mitesh. Welcome back. First hour of trade has been good on the headline index. Where do we go from here? Would you take some money off the table on the index and also fill us in with a fresh call?
Okay, Nigel, I think I would want to be a bit greedy. And the reason of that is the fact that the bank Nifty has opened the gap up and is still expanding and making new highs. The momentum in the HDFC prints is likely to continue. In the bank Nifty, I think we are now looking at targets from 45,700, 750. So there's still some more space to go. What would be a prudent way to approach the Nifty would be to trail your stop losses now at about 19,200 on the Nifty. And that's the spot level, so about 100 points lower, and hope that it head towards 19,450, 19,500 before you take some profits off. So still maintaining long bias. And on the stock side as well, Eicher Motors is something which has caught my eye early in the day. It's come off the highs, but that's a buy with the stop at about levels of 35.75, and a target of 36.80 can be looked at. And the other one is NMDC. Disclaimer, we have some positions in. That's a buy with the stop at 105.5 for targets of around 111.
Any thoughts on L&T Finance Holding, Mitesh?
I think it's run up a lot. I think we have had some buy calls earlier on the stock. Now I'm not sure to buy afresh because of the fact that if you look at the stock price, I think it was around 90 rupees way back in the last week of April, and since then it's been a one-way rally. I think if somebody is holding it out, just trail your stop to about 123.5 and hold it out. But fresh entry, I think, is not what I'm very comfortable with, given the fact that it's very overbought.
Yeah, big move. March end, the stock was sub 80 rupees, and now it's up more than 130. The stock price is now at 131. This month itself, it's seen a rally of about 26%. Mitesh, thank you very much for joining in. Let's get to our 10 a.m. stocks on the move. Mangalam joins in with Kansai Nerolac. Mangalam.
Well, it's a good day for Kansai Nerolac. It's up around 4% over the weekend. They made an announcement to the exchanges that there's been a slight modification in their earlier deal with the Hiranandani Group for real estate. So earlier in Jan, they had said that the plan was to sell almost 96,180 square meters of the land that the company had in Thane for about 655 crores to the Hiranandani Group itself. And now they've gone ahead and amended that by selling a little more than 900 square meters over and above the earlier deal as well for a little more money too. So now they will sell close to 97,100 square meters for about 671 crore rupees, and the deal has been signed. It's important in a competitive environment for a company like Kansai Nerolac to have some cash on its books as well. The market share is close to around, the market cap is close to around 25,000 crores with cash and liquid assets at around 550 odd crores. So this would help as the paint industry is currently, entering that highly competitive environment with large players and large capacities coming on board as well. For Kansai Nerolac, for the company itself, there are a bunch of triggers. The biggest one, of course, is the 316 crore capex that they've embarked upon, as a result of which their capacity will increase by about 1.5 kiloliters per annum. And they've also commenced operations at their backward integration facility, so that should help their margins. What would further support their margins is lower raw material costs. So we've seen crude cooling off, and as a result of which all the crude derivatives have cooled off as well. And this morning we're getting auto sales numbers. Kansai Nerolac has a fair amount of their business coming in from auto paints, so that doing well should aid them further as well. And in the paint industry, it's trading at a steep discount to the other leaders as well, trading at around 26 times 2-year forward earnings. So which is why we're keeping an eye out on it.
Okay, all right. Mangalam, thanks a lot for that. So that stock buzzing in trade. Ultratech Cement as well, that's holding strong in today's trading session. They came out with their quarterly update, and for the last couple of quarters, it's good they've started this. I hope when things get a little bit jittery as well, they do continue that. But these numbers are very, very good. The consolidated numbers are up by close to around 20%. And remember, for Ultratech Cement, you have the domestic sales, which is broken up into white and grey cement. Grey cement is the largest part of their entire mix. So grey cement volumes have grown by close to around 20%. And the overall volumes as well are up by close to around 20%. Now, this is good news, which means they have outgrown the industry, which could have grown by mid-teens. They have grown at 20%, so they've clearly gained market share out there. And on that sort of base, their capacity utilization levels are at around 90%. Explain why the stock is up 1.5%. Vivek, though, joins us to tell us about Mazagon Dock. Vivek?
Well, good morning. Mazagon Dock, we highlighted earlier as well, a very important deal when coming in. So, what's actually happened over the weekend is that the company and the Defense Ministry actually have gone ahead and signed a deal worth over 2,220 crore. And, this particular one is an important one because, the company has gone ahead and got a deal for a submarine named INS Shankush. Now, this particular deal actually aids the strong order book that the company is already currently sitting on. Remember, at the end of March 31st, 2023, the order book was well in excess of 38,750 crore. And now, most of the analyst eyes continue to remain on the execution. Recently, HDFC Securities too wrote a note, and they have highlighted the kind of order pipeline that the company is currently looking at. And according to them, one key trigger is going to be, the Defence Acquisition Council actually going ahead and approving the procurement of 8 corvettes, and the RFP for this particular one is expected in this particular year itself. Why is this particular, RFP important? Because the size of the contract could be worth almost 36,000 crore, and it will be split between 2 shipyards. And Mazagon also has an equal chance of getting this particular order win on its books.
Okay, thank you very much for that. Get into a break. On the other side, it's our special segment. It's the economy. Lata will get chatting with Manish Raj Singhania, President of FADA, and Prakash Diwan. Stay tuned.
Finance Minister and also a friend. He got a thumbs up to start this post-retirement venture, as no financial commitments were required from the government. At the age of 66, when most people hang up their boots, my uncle's long-standing dream of starting HDFC finally took shape.
The Legacy Centre documents not just HDFC's triumphs over the years, but HT Parikh's struggles too, right from convincing an India that frowned upon debt to avail home loans. This centre also houses snippets of Parikh's personal history, from letters he wrote to his wife and friends to appointment letters he handed out to the first employees, including Deepak Parikh and Keki Mistry.
This Legacy Centre is a humble contribution to HTP, as it showcases one of the most successful startups in an era of socialism.
HDFC will cease to exist come July 2023, and this Legacy Centre is envisaged as a beacon that tells its story. A story of how a small startup grew into a behemoth commanding revenues of over 60,000 crore rupees and has assets under management of over 7.2 lakh crore rupees, and group companies that are global brands in sectors like banking, insurance and asset management. The Legacy Centre will be open to the general public in July 2023. In Mumbai, Shilpa Rani Peta.
142 trading sessions and a 4% gain on the Nifty is what it took for it to hit a fresh record high once again after December 1st. Sensex up by that much as well. Nifty Bank, however, has been a lack of participant in this up move, 2.6% in terms of gains. But this gain really, or this move to the record high, really belongs to the small caps as well as the mid cap indices, both of them up in double digits in this year itself. And it also belongs to a lot of the domestic sectors. As you would see, the realty sector, the FMCG sector and the auto sectors have been the ones which have done extremely well, whereas the global facing sectors like IT and metals have seen a bit of a decline in this year itself. India versus the world, we've seen a big rally come by, but we've seen an even bigger rally come by.
Welcome back on It's the Economy. We stick with the theme of the morning, auto sales. Auto sales numbers for June have started pouring in, and it appears that many giants like Maruti, Hero Moto, Bajaj Auto and TVS have missed market estimates. However, companies offering premium products like Royal Enfield and Tata Motors' EV vehicles have done well. To give us a ground check on how much to worry about these June numbers and how's perhaps festival stocking picking up, I have with me Manish Raj Singhania, the president of the Federation of Automobile Dealers Association, the FADA as we know them. Also joining me is Prakash Diwan, undoubtedly one of the best auto stock analysts that we know. Gentlemen, thank you very much for joining me. Mr. Singhania, first to you. Can we start with two-wheelers? The numbers that came in, all of them, Hero Moto down 9.9% year on year. So you can't even say seasonality. And Bajaj Auto as well, lower than market expectation, down 2%. Market was expecting a 1% higher number. TVS as well, lower than market estimate. How was the experience at the auto dealers?
So yes, definitely, two-wheeler has been a cause of worry for the auto dealers as such, and we have been repeatedly seeing that compared to pre-COVID year 2019, two-wheeler segment has not been able to perform up to the mark, and in fact, it is if you look year-on-year basis, we are still down by almost 19%. But what is good about last month, we are expecting a good single-digit growth in YOY basis in overall two-wheeler segment. So yes, I think primarily we could attribute because of the stress in rural economy, the cost of acquisition going up, the cost of operations going up in terms of EMI, fuel cost, everything has gone up for that segment. So that segment really continues to struggle, and numbers are really, of all these segments in auto industry, every segment has now outperformed the pre-COVID level except the two-wheeler.
Okay. But two-wheeler, are you seeing any green shoots at all now that the monsoons are not the scare that we thought it was? Are you seeing any interest in pre-festive stocking, Mr. Singhania?
So yes, definitely monsoon would play a very critical role for the upcoming festive season, and I think we not only government has also supported in increasing the MSP. So if we do have a good crop and good rains across evenly spread across India and timely rainfall also, that will ensure a good quality and quantity of the crop, and this high MSP will ensure money in the hands of farmers. So that's a good sign. We are keeping fingers crossed for the monsoon season. That would play a very critical role for the entry-level passenger car as well as the two-wheeler segment.
Okay, so but that is still a matter of hope, and hope isn't a data point. I'll just come to you for the premium segments, which appear to have done well. Mr. Singhania, let me get Prakash in. Prakash, you've seen the rush of numbers in the morning. Are two-wheelers still a no-no for you, or are you enthused by the improvement in exports?
Lara, good morning. So, I think what we saw in terms of the numbers, now that the entire set of numbers is out, it does tell you that demand is an issue, especially in the price-sensitive segments. And that's exactly why a Hero MotoCorp is suffered significantly. And the other thing that you need to put in perspective is that the affordability of two-wheelers, which is a very price-sensitive segment of consumers, given higher interest rates having been passed on, and I was comparing the EMIs for two-wheeler loans as compared to last year, and there's a significant jump in that. So either the tenors go up or the outgo goes up, and that is something which does make people think a bit much harder to go and acquire. The monsoon is probably something that builds hope and expectation that, if I'm a consumer and I see monsoons coming on time, I would probably start planning to do it post the monsoon. I'm not going to do it during the monsoon. In fact, the quarter that we are currently starting off with will probably see even more tepid sales, especially on two-wheelers, because nobody likes to use two-wheelers in this season. And generally the belief is that you would buy it after that. So I think the numbers tell you a very realistic story. The export market has probably got both, pluses and minuses. There are pockets doing well. There are pockets that are still struggling. But I would believe that it's a domestic story that's still going to be a bit disappointing.
Okay. Well, Bajaj Auto just told us that the export scenario has bottomed out, and their key market, Nigeria, is on the mend. But as you point out, the bread and butter the bulk is still going to be domestic. Mr. Singhania, what about the luxury segment, or premium segment? Royal Enfield has done well. So would you say that, say for instance, the Triumph will come? Do you think there is situation is much better in the premium segment, even in two-wheelers?
So yes, definitely premium segment post-COVID has been doing phenomenally well, and a lot of purchase and activity happening there. Both in actually car segment and two-wheeler, we have seen this segment, upper middle class and upper class, really going out and spending out loads of money. There was this pent-up demand which we got addressed to. Then subsequently also people executed or just bought up whatever their fancy products for their holiday season went a phenomenal high, new high. So everything in this segment has been looking good. Similarly, in two-wheeler numbers for this premium segment has been doing pretty good. And month after month, I don't see any kind of downfall or any kind of. In fact, the supplies are more of an issue in this segment because the more the features in any vehicle, the higher the quantity of semiconductor requirement is there, and we definitely see the issue of semiconductor continues, shortage of semiconductor continues in overall auto segment. So I think for premium two-wheeler space, the growth story will continue.
What about cars now? It looks like the entry-level car segment also has not done well. I mean, Maruti was complaining about the entire compact size, which is about 40% of their sales, not doing well. So can you give us more color on the car segment?
So car segment, yes, definitely entry level has been struggling. Similarly, I would comment here the cost of for that entry level person, the cost of acquisition has really gone up. If you look at it pre BS4 times, the initial entry level two wheeler were around 40,000. Now after BS6 and with new norms and new compliances that have come into place, the new the entry level cost is now close to 60,000. So that is a phenomenal increase of 50% there in terms of cost of acquisition. Similarly,
what about four-wheelers? Four-wheelers?
Yeah?
Four-wheelers, cars.
Yeah. Cars also we have seen from 2.5 it has gone to close to 4 lakh. So everything is going up for that segment, and for that person, an increase in EMI, cost of acquisition, cost of operation really matters a lot. And similarly, you can see the boom in SUVs happening in passenger car segment. That segment is really going up. We really need to see when this, Bharat of India or rural India recovers, then only we could see a good growth or decent numbers coming in from entry-level passenger cars.
Okay. But you are confident of the luxury cars, I mean, not luxury, the premium cars, Tata Motors EV as well as the premium offerings from Maruti. Those are seeing, SUVs are seeing better demand?
Yeah. So, yes, this month has been doing very well. I mean, I think June, we are yet to come out with the final figures. We'll be coming on 6th. But I think June would be having the ever highest passenger car sales for the month of June. So that's the kind of volume that we are seeing. And it would be primarily contributing by SUV segment. That has really been driving this sales of this segment. The demand as well as the booking with the dealers are amply available. And we kind of strive to have this bookings addressed by the OEMs. Though we do talk about that there is a paid-up stock of almost 45 days in PV segment, that is primarily due to mismatch of models. There are models which are not selling, which are available with the dealership, and there are models which are in heavy demand, primarily SUVs, which are not being adequately supplied by the OEM. So yes, there is like a tale of two cities story.
Okay.
So we expect this growth and volumes to keep on churning in passenger car segment.
Okay. Well, Prakash, how do you translate all this in terms of stock-wise positions that you will take? Are you looking at taking a position in TAMO because the EV is doing well? Or is it that that's too small a segment and they've reported that their commercial vehicle hasn't done too well? What's the pick of the pack?
So, Lata, just let me step back and add to this premium car segment, configuration that's changing so rapidly. What we are seeing is that the price sensitive entry level or the A and B segment is getting impacted, and most of the new competition, whether it's from MG Motors or from Hyundai or from Kia, is actually in the D segment. So that's where the game is shifted, and I'm not surprised when Maruti reports these weak numbers for that segment, those two segments. But D and onwards, which is the SUV and the higher price ones. Look at the kind of bookings Toyota has for its high value products like Hyrider and things like that. There is no let up in that. So what it tells you is that the companies that are focusing on the right segment for growth That is what you need to look at in terms of an investing opportunity. And from that perspective, Tata Motors has had a brilliant run because they were the first to have launched EVs at different price points, right from 15 lakhs to 9 lakhs. But it's not that strong enough or significant enough, as you rightly said, to move the needle. And the commercial vehicle sales, I think, is a function of the BS6 implementation. A lot of deferment happens when a new norm gets into practice. So that's where you'll probably see that catch up happen. I would look at buying into Maruti for sure. And as a disclosure, I've always had this in my long-term portfolio, given the fact that their SUV portfolio is what's going to drive growth. The Fronx, the Jimny, all of those are going to lead them to the next level. I would believe M&M would face some competition on all counts, the SUV portfolio, the EV portfolio, and some of the light commercial vehicle where Maruti is making a big market share improvement. So the dynamics are very clear. You want to buy commercial vehicles, Ashok Leyland is the spot to go to. You want to buy a passenger car segment player, Maruti is probably standing out as the best. Tata Motors has had a run-up. I'm not saying there's not much of salience left, but then there are more balance sheet restructuring and debt repayment, which will drive that stock further, not just operational performance.
Okay. But just a quick word, Mr. Singhania, on CV, on commercial vehicle, we got a kind of a mixed picture. What are your members telling you? Volvo was not all that gung-ho, but he said the demand for buses were good. Tata Motors definitely doesn't look good.
So yeah, CV has been recovering pretty fast and pretty good. I think we'll see a YOY basis. We'll see definitely a growth in this segment, and we are almost close to recovering the 2019 numbers. So yes, and the economy has been moving fast and moving forward. We could see bulk buying happening in CV space. Even in fact, before pre-COVID time, there were very small operators coming in for the truck, 1 or 2 or 4 quantity being bought. But normally we are seeing now bulk buying happening in large players coming in and buying in quantity, fleet operators coming in. So that's a good sign. And overall, a very positive for the overall CV segment, especially the HCV and MHCV segment.
Okay. Well, Mr. Agarwal from Aisha was a little downbeat on the mid and the LCV segment, but very confident of the bus segment, the heavy-duty segment. But let's see how things pan out. CV is not that much a spot of bother, as is perhaps the entry-level vehicle, whether it's four-wheeler or two-wheeler. But premium cars and two-wheelers doing exceptionally well. Prakash and Mr. Singhania, thank you very much indeed for joining us and giving us your thoughts about the auto sector. We wrap up on Bazaar. Chartbusters up next.
Indices like Nasdaq, Nikkei, the German index and S&P 500, but that's also because they fell a lot more in the previous year than the Nifty itself. What are the indices we've done better than? We've done better than Dow Jones, we've done better than FTSE, we've done as good or slightly better than Shanghai as well. Even as the frontline indices are at a record high, remember the small cap index is still 9% away from a record high. So let's see where that goes. This rally picked up as we saw the FII flows pick up as well. Start from March, April, May, we had that record month, almost 28,000 crores coming in from the FIIs. And in June itself, so far, we've seen almost $1 billion come by in the cash market. What are the key triggers and reasons for the FII flows for our market picking up? The biggest one, of course, is the Indian macros doing a lot better than global macros. So that's one big reason. The second, domestic themes in India doing extremely well. The third thing that we're looking at is stable crude cooling inflation, bodes well for the Indian macros as well. And as FII flows pick up, we also see higher emerging market flows coming into India versus China. So that was one theme that played out. In terms of stocks, the topmost gainer on the Nifty was Tata Motors this year so far. ITC doing extremely well, leading the FMCG index higher, and entry-level autos doing well. So Bajaj Auto up 28%. Among the losers, we had Infosys and Hindalco among the big losers. Adani Group stocks also took a bit of a beating. So this year we saw that. In the mid-cap gainers, pharmaceutical names found some mention. So Aurobindo Pharma up 64%, Glenmark Pharma up 55%, ABB doing extremely well as well. with defense themes like HAL up 45%. In terms of losers, we had a lot of stocks which lost on account of their individual news pieces. So we had ACC lower, Z Entertainment lower, AB Fashion because of valuation, City Union Bank lower as well. But the stars were definitely the small caps. So we saw names like Balu Forge, we haven't heard of, up 160% this year. Titagar up around 125%, Zentech 124% as well. And big gains coming in for Chennai Petro and RVNL too. But with all of this, just keep an eye out on the valuations. The Nifty on a one-year forward basis currently trades at 19 times, which is pretty much in line with its historical average valuations. And going forward, a couple of factors we need to watch out for. One will be the way the global markets pan out and interest rates globally. Flows into other emerging markets versus India as they pick up is something we'll be watching out for. Monsoons, festive season, all that bodes to domestic demand recovery in the second half. Will that continue or not? And then there are a bunch of state elections in India as well, all of them leading up to next year's central election.
So this is the moment of truth. This is the moment of truth. I'm even getting my cameras wrong now. I'm that nervous to try and get started with this. But okay, so this is the button I press?
Yes.
All right, let's go.
This has already been done for you.
Okay.
So you can press the button a couple
Again.
more times. Okay, yeah. Now you need to scan this barcode in.
Okay.
All right, so you press the button a couple of more times. Yeah. Now it'll ask you numbers. You
Scan, so that's the one?
That's one. You scan the barcode, you open it and empty the entire contents. And then you can keep that on the side and press the button.
Quite literally stirring up a storm of Rajasthani paneer.
Yeah, so now you press the button.
I press the button. Add the paneer.
You need to scan it first, otherwise it won't let you proceed.
It hasn't given me any red alerts so far, so I guess I'm doing okay.
So despite all these recipes that we get to try.
Remove output, okay, that's it, it's done. Wow.
Yeah, so instead of the packaging container, since we're all going to have this together.
Yes.
We're going to put this into.
Add garnish with coriander. So this is it, it's done?
That's done.
That is my Rajasthani paneer, which I have made from scratch with a little bit of help from the cloud chef, food tech, food AI.
Holds and control as the market scales new highs for the third straight session. The Nifty opens with a gap up and is trading above 19,300. Banks surge while IT and realty see slight cuts. The mid-cap index too trades higher.
HDFC Bank and HDFC gain post the merger. Morgan Stanley resumes overweight rating on the HDFC Bank with the target price of 2,110 rupees, says that cyclical tailwinds will help the company navigate merger challenges. Ultratech rallies as consolidated sales volumes for the company surged 20% in the first quarter. They see capacity utilization of nearly 90% in the quarter gone by. Gujarat gas surges after the government increases import duty on propane for commercial use to 19.25% from 2.75% from the 1st of July. This will offset propane gas price advantage against the company's gas pricing. We have a big surge coming in on Mazagon Dock after signing nearly 2,700 crore worth deal with the Defence Ministry to refit an Indian Navy submarine. Hello and welcome to Chartbusters. I'm Nigel D'Souza and join me as always is Mangalam Malu. Well, Mangalam, we're off the blocks in style this Monday morning. The Nifty holding with good gains. The mid-cap index was threatening to move into the red, but that as well has picked up pace. So it's not moved into the red. In fact, it's up close to 0.3% as we speak. And the headline index, well, looking as beautiful as ever. HDFC Bank finding its form. HDFC Limited as well because of the merger ratio. And both those two, they are the driving forces for the markets to hold up. I think today, out of the total 130 points or 90 points is only because of both of them.
Absolutely. We have the two top batsmen doing extremely well. But the question is that after a big rally that we've seen, do we face some sort of consolidation here or not? Because there has been a lot of writing at the 19,300 call. The put call ratio is slightly overextended as well, closing in on that 1.6 mark. So is it time for consolidation, or this march towards newer highs continues for our market? Well, we have Shivangi Sarda, who joins in this Monday morning to give us that very check on the market. Shivangi, good morning.
Good morning, Mangalam and Nigel. Thank you for having me on the show. So yes, we've seen a spectacular up move in Nifty. Nifty soaring higher and touching a new lifetime high from the last 3 days. And the rollover data was quite positive. If you look at the June rollover data, which was around 76% higher than its 3 months and previous series figure. Also, we've seen a good amount of long build up in both the indices, Nifty and Bank Nifty, which is driving the up move. Bank Nifty was slightly underperforming, but then overall we've seen a good performance and good participation from those stocks as well. So overall it looks quite positive as we are heading into the July series. Now we closed the third consecutive series in positive, which is quite remarkable, and now July would be exciting to watch out for. India VIX is also at its record low levels. Now looking at stock, looking at the index specific, we've seen that Nifty has rallied a lot, and the next levels to look out for would be 19,500 levels on an immediate basis technically. Even the put call ratio, as you rightly mentioned, is near about 1.6, which is kind of clearly signifying that the put writers have clearly made a good pace and good mark at these levels. And the support would act as 19,250 on an immediate basis. Looking at Bank Nifty, this index has also, performed, and we've seen record high levels over here as well. So looking at Bank Nifty, the next levels which we are watching out for will be 45,500 and then 45,750, with 45,000 as an important support to watch out for.
Okay, all right. Hi Shivangi, always good to see you in. What about individual stocks? What are you looking at?
Individual stocks on my radar, firstly, is HDFC. We've seen good amount of short covering move from the previous series, led by fresh longs being added in the July series. The stock is looking quite remarkable, and it is holding on above its resistance levels quite remarkably. A good base formation has been seen in the stock with good volumes as well, so recommending a buy here. And this stock is expected to move above to 3,040 levels with a support near 2,870 zones. Second pick on my radar is from the metal space, JSW Steel. We've seen that this stock has, any small declines are being utilized for buying opportunity, and the stock is looking quite positive. Good volumes have been seen in the stock from the last 1 week, and we've seen good amount of rollover as well. From the previous series, we've seen around 93% rollover and 20% long build up, which as acting as a fresh trigger for a good built up over here. So recommending a buy here with a target near 825 levels and a support near 777 zones.
All right, Shivangi, thanks a lot for joining in. Before we move on, just keep an eye out on a couple of these oil marketing companies. All of them have picked up pace in the last 15 minutes or so. BPCL has surged to the high point of trade. That's the one that should come up for you, up around 2.5%. But a splendid move coming in. That's ONGC, that's an upstream oil company. BPCL has moved higher. HPCL, pull up the intraday chart of HPCL, almost 4.5%, and a clean, smooth, swift up move taking place on that counter. As you can see from the word go, it's it's been flying and now up around 4.5%. Same time, we're seeing some bit of a move coming in on IOC as well. A bit of a spike up around 2% for that counter too. So just keep an eye out on all these oil marketing companies which are surging. In fact, the energy space has been a buzz all through this morning, and now the latest entrants to that party are the oil marketing companies. But let's talk about some ideas for profit coming in from our colleagues at Money Control Pro. Madhu Chanda Day joins in with a stock.
The stock price performance of VIP Industries, which is largely flat in the past year, is in sharp contrast to its smaller peer. Although the growth and margin performance of the peer has been better, the sector tailwinds from surge in travel present itself for all companies. VIP is expanding its production capacity. The company incurred a capex of 100 crore in FY23 and has plans to incur a capex of 200 crore in FY24, of which 70% would be for soft luggage, including backpacks and duffel bags. The reliance on own manufacturing that is likely to be more cost competitive should enable the company to effectively penetrate the value segment, including the hyper-competitive backpack categories. The company is beefing up its sales channel, and this should help it in gaining market share in the value category. The structural uptick in margin due to own manufacturing, higher growth for organized players, untapped export opportunity, and finally, the strong sector tailwinds should support healthy earnings growth. We see VIP Industries closing the valuation discount to its competitor as it gradually recoups market share.
All right, Madhu, thanks a lot for that. With that, we'll step into a short break, come back on the other side. We get you more on the markets and some individual stocks which have been moving around.
With putting this together. Now the true test is going to be in the eating. So yes, we will find out if we've been a success or not. So we're going to head out. Oh, this is good.
142 trading sessions and a 4% gain on the Nifty is what it took for it to hit a fresh record high once again after December 1st. Sensex up by that much as well. Nifty Bank, however, has been a lack of participant in this up move, 2.6% in terms of gains. But this gain really, or this move to the record high really belongs to the small caps as well as the mid cap indices, both of them up in double digits in this year itself. And it also belongs to a lot of the domestic sectors. As you would see, you know, the realty sector, the FMCG sector and the auto sectors have been the ones which have done extremely well, whereas the global facing sectors like IT and metals have seen a bit of a decline in this year itself. India versus the world, we've seen a big rally come by, but we've seen an even bigger rally come by on indices like Nasdaq, Nikkei, the German index and S&P 500, but that's also because they fell a lot more in the previous year than the Nifty itself. What are the indices we've done better than? We've done better than Dow Jones, we've done better than FTSE, we've done as good or slightly better than Shanghai as well. Even as the frontline indices are at a record high, remember the small cap index is still 9% away from a record high. So let's see where that goes. This rally picked up as we saw the FII flows pick up as well. Start from March, April, May, we had that record month, almost 28,000 crores coming in from the FIIs. And in June itself, so far, we've seen almost $1 billion come by in the cash market. What are the key triggers and reasons for the FII flows for our market picking up? The biggest one, of course, is the Indian macros doing a...
Welcome back. You're tuned in to Chartbusters here on CNBC-TV18. Well, we have the Mahindra & Mahindra tractor sales numbers that are come in there, and those numbers look much better than Nomura's estimates. Nomura was penciling in a number, I think the tractor sales number. The total sales numbers have come in a wee bit better, but the tractor sales numbers, yes, it's a big number. It's around 44,500 odd, and Nomura was estimating close to around 41,000 odd. So the tractor story is alive and kicking, and that's the positive number. Manglam, these numbers look good.
These numbers look good, Nigel. And apart from that, we have big sales numbers coming in from the utility vehicles as well. So that's aiding their cause. However, in terms of a reaction on the stock, we're not seeing much because we've already seen a big move on M&M. The stock is trading close to its record high. This morning also opened up with a gain of almost 2%. So maybe some pre-positioning out there. The fact that it's not falling tells you, despite the strong rally, tells you that these numbers are extremely strong. Total sales at 62,000 above estimates, but tractors, like you pointed out, doing extremely well as well. Their utility vehicles growing extremely strongly as well. But let's talk about another conglomerate, L&T Group. That's eyeing leadership in the realty space and a berth in the top 5 companies in the IT sector itself. Lata Venkatesh joins in with the key takeaways that she's got from her exclusive conversation, off-camera conversation with the MD and CEO of the company. Lata.
That's right. The key takeaway from the conversation was more strategic. The CEO obviously refused to be drawn into numbers in terms of, order book and margins and stuff like that. But overall, the extent of the conversation that revolved around realty gave me the feeling that they're extremely gung-ho about that piece. They're expecting to become the biggest realtor in probably a couple of years or more. A few years was what he said. And they're trying to do it in a financially smart fashion, is what the MD said. He said they, as was announced last year in November, I think, they had a tie-up with Capital Land, which is a trust registered in Singapore. And Capital Land, the MD said, the understanding is that they would jointly invest in projects, in office space projects. 6 million square feet is what is the initial agreement. And Capital Land has agreed to buy out the entire thing about 2 years after completion. So, you know, L&T Realty is not saddled with the money. The money comes in 2 years and they can reinvest it in newer projects. So they don't have to put in fresh money or fresh debt or equity. The other tie-up which they had with HDFC Capital Advisory, that company is the private equity arm of HDFC. Now they have a JV with L&T Realty, and here the JV is for residential properties. So the expectation is that the land purchase will be done by the JV. Again, so fresh equity will not have to flow out of L&T Realty itself. The other big chunk which L&T Realty is constructing is in-house. Nothing less than 30 million square feet of office space for the various L&T units, you know, L&T, LTI Mindtree, LTTS, and of course even their construction units. Many of them are now sitting in hired offices. They will come into their own offices, and therefore there is an expectation that a lot of working capital will be released in the process. So Realty is the big one. They refuse to be drawn into a conversation on whether it will be listed separately, but looks like, you know, if they wanted to be the biggest company, then clearly there could be listing plans later on, but that's not what the MD said. The other part of the conversation was on IT, where they're hoping to become the 5th, at least in the top 5 IT companies. Already they are 6th. The top 5 being, of course, Infosys, Wipro, TCS, and HCL Tech and Tech Mahindra. In terms of market cap, they have beaten Tech Mahindra, but in terms of sales, they are a good 20% smaller. The expectation is to get there. The growth looks good, except that older clients are giving fewer orders, but the number of clients and orders are increasing, is the current position. The other big part of the conversation was on ESG. Remember, MSCI has upgraded L&T's ESG rating from single B to double B. But the chairman was more interested, the CEO was more interested in the fact that they are committed to ESG per se, and not because it can help them raise funds cheaply. They've audited all their factories and locations for the extent of emission and green cover, and they're formulating a plan to bring them to water neutral. That is, you don't live off the water in terms of water harvesting and stuff like that, as well as carbon emission neutral. Where I guess I will have to speak about the overall capex plan, because that's what you expect from L&T. The CEO said that there is an improvement in private sector capex, especially in the projects and manufacturing segment, which is where, you know, the private sector participates. The extent of orders has gone up from 22% to 27%. And of course, government capex is good, very triumphant about the fact that he has completed the Mumbai Coastal Road, their part, as well as the Trans-Harbour Link.
All right, thanks a lot for that, Lata. Well, let's move on then. Gujarat Gas, that's one of the big buzzers in trade after the government increased duties for propane gas imports for industrial reuse. Sona joins us to tell us exactly why the stock is higher. Sona?
Thank you so much for that. Well, Gujarat Gas is in focus because the government has gone ahead. They have increased the import duty on import of propane gas from 19.25% versus 2.75%. This will come in effect from 1st of July itself. Now, this will be important and positive for Gujarat Gas because remember, propane is a competitor gas for or competition for Gujarat Gas's product, and this will likely offset the propane pricing the impact of propane pricing competition also at Morbi. This will lead to an increase in propane pricing by 5 to 6 rupees per SCM. Now remember, before this import duty that had set in, the propane price was at 32 to 33 rupees per SCM, and Gujarat Gas's commercial gas price was at 38.6 rupees per SCM. So propane was cheaper, and that led to a lot of competition for Gujarat Gas in lower volumes as well. But now these players will have to take a hike in their propane gas pricing. That will create a level playing field for Gujarat Gas, will lead to more volumes as well, and that's why the stock is higher in trade today.
All right, Sonal, thanks a lot for that. So that explains why we're seeing a big move. But the other couple of stocks which are doing extremely well are the HDFC twins. Like we pointed out at the start itself, most of the gains on the frontline indices are on account of these two stocks. Morgan Stanley has now resumed their coverage on the stock with an overweight rating on HDFC Bank itself. Abhishek joins in with the contents of that report. Abhishek.
Well, Morgan Stanley has written on HDFC Bank. They have resumed, the coverage over there with an overweight rating and a target price of 2,110 per share. So they say that HDFC Bank is trading at 16 times one-year forward EPS, which is at a 20% discount to 15-year mean average. So strong trailing investment cycle and as well as, the cyclical tailwinds, benign asset quality and improving real deposit rates will help navigate merger challenges. So they see FY24 EPS growth of around 13%, which is expected to improve towards 17 and 18% in the coming years after the first year of merger between HDFC Bank and HDFC Limited. So HDFC Bank is now big. However, it is more powerful as it gets access to secured and long tenure retail mortgage product and a large customer base that HDFC Limited has. So direct access to insurance and other subsidiaries along with geographical reach are superior to most private banks is what they have mentioned in their note. Back to you.
Okay, lovely. Thanks a lot for that, Abhishek. Well, time to slip into a short break. When you come back, we'll continue to focus on markets and stock-specific action. Don't go anywhere.
Global macros, so that's one big reason. The second, domestic themes in India doing extremely well. The third thing that we're looking at is stable crude cooling inflation, bodes well for the Indian macros as well. And as FII flows pick up, we also see higher emerging market flows coming into India versus China. So that was one theme that played out. In terms of stocks, the topmost gainer on the Nifty was Tata Motors this year so far. ITC doing extremely well, leading the FMCG index higher, and entry-level autos doing well. So Bajaj Auto up 28%. Among the losers, we had Infosys and Hindalco among the big losers. Adani Group stocks also took a bit of a beating. So this year we saw that. In the mid-cap gainers, pharmaceutical names found some mention. So Aurobindo Pharma up 64%, Glenmark Pharma up 55%, ABB doing extremely well as well, with defense themes like HAL up 45%. In terms of losers, we had a lot of stocks which lost on account of their individual news pieces. So we had ACC lower, Z Entertainment lower, AB Fashion because of valuation, City Union Bank lower as well. But the stars were definitely the small caps. So we saw names like Balu Forge, we haven't heard of, up 160% this year. Titagar up around 125%, Zentech 124% as well. And big gains coming in for Chennai Petro and RVNL too. But with all of this, just keep an eye out on the valuations. The Nifty on a one-year forward basis currently trades at 19 times, which is pretty much in line with its historical average valuations. And going forward, a couple of factors we need to watch out for. One will be the way the global markets pan out and interest rates globally. Flows into other emerging markets versus India as they pick up is something we'll be watching out for. Monsoons, festive season, all that bodes to domestic demand recovery in the second half. Will that continue or not? And then there are a bunch of state elections in India as well, all of them leading up to next year's central election.
An absolute bouncer, I must say, by the Ahmedabad hoteliers. The World Cup schedule was out at around 12 p.m. today, and within minutes, hotels saw a rapid surge in bookings, and the unprecedented demand led to a sharp surge in rates. I went to booking.com and what I saw was unbelievable. A room for 2 adults in Renaissance Hotel in Ahmedabad for 2 nights, which is from the 14th to 16th October, is quoting at 1,81,000 rupees. The same room is available for 12,800 rupees if one wants to stay.
Welcome back. Well, we're focusing on the headline index and we're holding around 19,300. But take a look at a couple of these stocks in the last 10 days. Some of the big gainers include the likes of PFC. You know, we have had the management of REC that joined us a few days ago, and they are sounding extremely positive about money coming in from discoms, the overdues reducing as well. PFC has moved to the high point of the day as we speak. Karnataka Bank as well. I think in the last 5 sessions, the stock is up close to 20%. The management has joined us and they said that the loan book is 60,000 crores. They expect it to be 1 lakh crores in the next 3 years or so, and sounding reasonably confident on business going ahead. So that one is well up 2.5% as we speak. Let's move on. The SGX Nifty has now transitioned to GIFT Nifty index. All futures trading on the SGX Nifty will be routed through the GIFT Nifty. Yash is with us to tell us more about this new index and what it could mean for investors. Yash, take it away.
Well, it's finally time to say goodbye to SGX Nifty and say hello to Gift Nifty. But is it just the name that changes? Absolutely not. Because starting today, all future orders, trading orders, which were earlier placed on SGX Nifty in Singapore will now be routed to Gift Nifty here, the NSE IFSC Center in Gift City, Gandhinagar of Gujarat. Not just routing of trades will happen, but also matching of these trades, and the settlement itself will happen here at NSE IFSC. In fact, matching and settlement of trades is ongoing on the screen behind me, as you can see. To speak about the trading hours, 21 hours of trading will happen each day in two important shifts. The first one would be starting 6:30 a.m. Indian Standard Time to 3:40 p.m. and the second one between 5 p.m. to 2:45 a.m. What does this transition from SGX Nifty to Gift Nifty entail? As far as the transition is concerned, about $9.5 billion of open interest position will move into Gift Nifty. As far as this transition is concerned, the management told CNBC-TV18 that they expect $1.5 to $2 billion of average traded volume as far as Gift Nifty is concerned. Now let's speak about the products which will be available in the first tranche itself. As far as Gift Nifty series is concerned, 4 products will be available. The first one would be Gift Nifty 50, second one Gift Bank Nifty, third one Gift Nifty IT, and finally Gift Fin Nifty. As far as who can trade and who can not trade is concerned, this Gift Nifty will largely be available for influential investors, non-resident Indian investors, not particularly for Indian retail investors or smaller investors. But another important part would be Indian brokers and their subsidiaries registered in Gift City can sign up funds through non-resident Indians, family-owned offices, as well as wealthy Indians as clients. Trades can be taken on a proprietary basis as well as on a client level.
All right, Yash, thanks a lot for that. Before we, wrap up on the show, just an eye out on all the PSUs. We spoke about the way all the oil marketing companies were doing. They've extended their gains. HPCL is now up almost 6%, IOC up 4.5 odd%. But, it's also rising in tandem with all the other public companies. We have BHEL, which has surged to the high point of trade. PFC too has moved higher. We have a good move coming in on all the PSU banks as well. IGL doing well, Mahanagar Gas. So let's keep an eye out on this space itself. Take a short break, come back. We have trading hour as we wrap up on this edition of Chartbusters.
And the 3rd of July. That is a jump of 1400%. Then look at ITC Narmada. A room booking for 2 adults from the 14th to the 16th of October is available for 1,77,000 rupees. You can book that same room for 18,800 rupees in July. That is a 9-fold jump in rates. Welcome Hotel by ITC Hotels also has a similar surge pricing in play. 1,52,400 rupees per room around the India-Pakistan match dates. That's 10 times the 14,000 rupees that room would cost if booked for early July. Now, most of the big brand hotels are already sold out. Some of the other hotels like Pride Plaza have also increased rates. Here, a room available for 9,000 rupees if you want to stay in July would cost you 85,000 rupees if you want to stay there in October. The Ramada Ahmedabad is offering a room for 66,000 rupees from the 14th to the 16th of October, whereas that room would cost you 12,000 rupees if the booking was for July. Let me add that these rates are and the availability are as of 6 p.m. today. Prices might even jump higher in the run-up to the match. And clearly, these skyrocketing room rates and the surge in demand since the match dates were announced is a reflection of the sheer craze Indians have for cricket, especially for an India-Pakistan match. So if you want to go to Ahmedabad for the match, better hit up old friends who live there and hope they will let you crash on their couch. An absolute bouncer, I must say, by the Ahmedabad hoteliers. The World Cup schedule was out at around 12 p.m. today, and within minutes, hotels saw a rapid surge in bookings, and the unprecedented demand led to a sharp surge in rates. I went to booking.com and what I saw was unbelievable. A room for 2 adults in Renaissance Hotel in Ahmedabad for 2 nights, which is from the 14th to 16th October, is quoting at 1,81,000 rupees. The same room is available for 12,800 rupees if one wants to stay between the 1st and the 3rd of July. That is a jump of 1,400%. Then look at ITC Narmada. A room booking for 2 adults from the 14th to the 16th of October is available for 1,77,000 rupees. You can book that same room for 18,800 rupees in July. That is a 9-fold jump in rates. Welcome Hotel by ITC Hotels also has a similar surge pricing in play. 1,52,400 rupees per room around the India-Pakistan match dates. That's 10 times the 14,000 rupees that room would cost if booked for early July. Now, most of the big brand hotels are already sold out. Some of the other hotels like Pride Plaza have also increased rates. Here, a room available for 9,000 rupees if you want to stay in July would cost you 85,000 rupees if you want to stay there in October. The Ramada Ahmedabad is offering a room for 66,000 rupees from the 14th to the 16th of October, whereas that room would cost you 12,000 rupees if the booking was for July. Let me add that these rates are and the availability are as of 6 p.m. today. Prices might even jump higher in the run-up to the match. And clearly, these skyrocketing room rates and the surge in demand since the match dates were announced is a reflection of the sheer craze Indians have for cricket, especially for an
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Surbhi Upadhyay. We begin Trading Hour. It's a brand new week and the bulls are charging ahead. There is no sign of nervousness. There is nothing stopping the bulls right now. 19,300 has been conquered. We're up 0.5% on the benchmark indices. Look at the mid-cap index. There was one dip in the mid-cap index and that's been bought into, and now the mid-cap index is at the session highs. The contribution plate is quite interesting because it's 5 stocks, 5 large cap heavyweights which are contributing all of the up move on the benchmark. Those are the HDFC twins, HDFC Bank, HDFC Limited. You've got an ICICI Bank, you've got a Reliance Industries in that, and you also have a State Bank of India. That contribution plate, let's get that up. All these 5 stocks are contributing all of the 100-point gain that you are seeing on the Nifty. Also bear in mind, Asia is on a firm wicket today. So you've got gains of more than 1.5% on the Hang Seng and on the Japanese markets. The Korean markets too holding up pretty smartly with a rally of 1.3%. So there is strength across the board, green across the board.
That's true, Reema, and what a first half we've had, right? Right from the mother market itself, the S&P is up some 15%. In the first half of the year, the Nasdaq has rallied some 32%. So it's been, quite a year so far for global equities. And I think we started late. Q1 of the calendar year wasn't that great for us, but Q2 things really changed. Yeah, absolutely. I mean, calendar year second quarter was a defining one where the Indian bulls decided to join the party as well. That's continuing for what it's worth right now. And today, the interesting aspect of trade is that the so-called underperforming part of the market, and that's banks, that has come to the surface, and that was the chatter, that was the talk really on the street as well, that financials have to start playing a bigger role if this rally is to gather more steam and momentum from here. Well, today that is definitely happening. That's the Nifty Bank. In fact, if you look at the gainers today on Nifty, it's not a very wide green screen on the Nifty. It is more structured around the way the banks are moving and financials are moving. HDFC Bank, obviously, case in point. SBI, ICICI Bank are fighting for the bulls. So is Reliance. Now, you'll see on the green side of that screen, there is not much IT, there is not much auto today. It's largely the financials along with Reliance. They are the twin engines of today's rally. In fact, large parts of the Nifty are also in negative territory. Auto would be case in point. A lot of the auto stocks are cooling off after what's been a pretty good rally for autos. The numbers for June notwithstanding. Bajaj Auto is down 1.5%. Hero is down. Maruti is down. Lots of profit taking in auto. And some profit taking in the consumer side of the market as well. So you're looking at Asian Paints, Nestle, Britannia, Titan. A lot of these names are on the downside. And the mid-caps have had a subdued session so far. It's about a 0.5% increase at the index level, the mid-cap index. Of course, individual stocks continue to fly away, and we will talk a lot more about that as we go along, Rima.
Yes, absolutely. So here's what we'll kickstart the show. In fact, it's going to be about the auto sales numbers, and we would like to divide the slew of numbers that have come through from the OEMs into two parts. One is the two-wheelers, and the other is the passenger vehicles, which includes commercial vehicles. We still don't have color on the tractor numbers because M&M is yet to report numbers. But Surbhi, when we look at the two-wheeler numbers, and here there are four key players, right? There is a Bajaj Auto, there is Hero MotoCorp, there is TVS Motors, and Eicher Motors. In that, Bajaj Auto has a mix of domestic and exports. Hero MotoCorp is your traditional, rural market play, mass market two-wheeler, and you've got the premium end Eicher. But across the board, it's Bajaj Auto, Hero, and TVS Motors. All three of them have missed expectations. If you could just get up, the numbers and what the actual numbers compared to what the street was anticipating. Bajaj Auto's total sales fell by 2%. The expectations were for a 1% growth. Hero MotoCorp's total sales fell by 10%. Expectation of Nomura was that it will grow 3%.
This is a month-on-month fall that you're seeing.
No, this
Hero
is year-on-year.
Year-on-year, down 10%.
Down 10%. TVS Motors sales have gone up 3%. Estimates were 4.5% to 5%. Bottom line is all three of them are lower than street expectations. Now let's come to the individual ones. Bajaj Auto. Now Bajaj Auto has domestic and exports. Here this time the miss has actually come in on the domestic front.
Right.
So domestic volumes for Bajaj Auto have fallen 12% on a month-on-month. The management said, well, it's on account of pure seasonality. May typically has some festive seasons in North, because of which there are marriages, there's a lot of buying, etc. So we always see June and July weak. July is also, monsoon. So July, he said, will be weaker than June. But it's come in lower than what the street was anticipating. The good part in Bajaj's numbers is that exports is firing for them, and it's picked up for the third consecutive month. Now let me move on to Hero MotoCorp. Now Hero MotoCorp is also a big miss compared to expectations. It's fallen by 10% on a year-on-year basis, lower than expectations, and even month-on-month, there is a very sharp scene in Hero MotoCorp's sales numbers. And finally, TVS Motors, if you could get those numbers up for you, again, lower than what the street was anticipating. But the premium end, which is Royal Enfield, that is doing very well with a growth of close to about 26%. Now let's talk about the passenger vehicles. Here you have Maruti. Now in Maruti, the total sales again lower than what the street was anticipating, but the miss is on the entry-level market, the compact segment, which is your WagonR, your Swift, your Dzire, your Baleno. That has seen a decline in their total sales by nearly 17%. If you strip that out, the UV business, which is where Maruti wants to increase its market share and focus, that's done pretty well. Now, Tata Motors' passenger vehicles business has done okay, particularly because of its SUV presence, the leadership that it has, and in the EV segment. In EV, the company has said that volumes in Q1 have gone up, have doubled, more than 100% higher. So Tata Motors' EV business is okay, but it's the CV business which is a bit subdued for Tata Motors, where it's fallen by 8%. Some other numbers, Eicher Motors VECV sales have gone up by 6.5%. Ashok Leyland CV sales have gone up 5%. But here the broad breakup is that MHCV is done well, while LCV is a bit weak.
Okay, so that seems to be the play, the lay of the land. And I think we heard some of this as well. In fact, even when we spoke to Shriram Finance, they are into financing a lot of these CVs. Even they sort of said the same thing, that the MHCV side is doing better, but the LCV side is slightly more tepid. So let's see how that plays out. That is all about the auto space. We've been speaking to the management. So hear it out from the companies themselves, Bajaj Auto and Eicher. Eicher Motors on what really lies ahead for their respective businesses.
If you look at the industry, the growth is very good in, you can say, in the buses segment and in the heavy duty segment. But light and medium duty trucks are down a little bit. So exports are down quite a lot. So overall we have grown, and that's what is reflected in our numbers. Exports out of the country has dropped to almost 2,000 units per month for 3.5 ton and above, which used to be around 6,000. So it is 1/3 of the peak numbers in exports, and it is largely led by Bangladesh, because Bangladesh is the large market for us and for the entire CV industry. So therefore, it seems that it's at the rock bottom, and from here on, we should see some growth as we go forward.
June domestic sales in motorcycles being lower than May is inevitable because, in the north, there is a mini season of sorts during the period of May to early June or mid-June, which is driven by marriages. And therefore, there is nothing unusual about June being lower. And I would say that July, with the onset of monsoons in most parts of the country, would be lower than June. So it's as expected, actually. On a retail basis, the industry is now in low single digits. So the industry performance in quarter one has now, in this quarter, come down to about low single digit performance. Exports, like we've been saying, is going to be is now on the recovery path, but the recovery is going to be gradual. I cannot precisely pin down when we will cross 150,000, but yes, that is the next milestone to hit at. For the moment, we will try to see that July is better than June, even if it is marginally so.
Okay, so there you have it, commentary coming in from the auto OEMs on the month of June and, of course, the outlook going forward. Well, with that, we have to take a very quick break. We'll come back with a lot more on the other side. We'll touch base on some of the other trends that are key highlights in the market today.
So if you want to go to Ahmedabad for the match, better hit up old friends who live there and hope they will let you crash on their couch.
142 trading sessions and a 4% gain on the Nifty is what it took for it to hit a fresh record high once again after December 1st. Sensex up by that much as well. Nifty Bank, however, has been a lack of participant in this up move, 2.6% in terms of gains. But this gain really, or this move to the record high really belongs to the small caps as well as the mid cap indices, both of them up in double digits in this year itself. And it also belongs to a lot of the domestic sectors. As you would see, the realty sector, the FMCG sector and the auto sectors have been the ones which have done extremely well, whereas the global facing sectors like IT and metals have seen a bit of a decline in this year itself. India versus the world, we've seen a big rally come by, but we've seen an even bigger rally come by on indices like Nasdaq, Nikkei, the German index and S&P 500, but that's also because they fell a lot more in the previous year than the Nifty itself. What are the indices we've done better than? We've done better than Dow Jones, we've done better than FTSE, we've done as good or slightly better than Shanghai as well. Even as the frontline indices are at a record high, remember the small cap index is still 9% away from a record high. So let's see where that goes. This rally picked up as, we saw the FII flows pick up as well. Start from March, April, May, we had that record month, almost 28,000 crores coming in from the FIIs. And in June itself, so far, we've seen almost $1 billion come by in the cash market. What are the key triggers and reasons for the FII flows for our market picking up? The biggest one, of course, is the Indian macros doing a lot better than global macros. So that's one big reason. The second, domestic themes in India doing extremely well. The third thing that we're looking at is stable crude cooling inflation bodes well for the Indian macros as well. And as FII flows pick up, we also see higher emerging market flows coming into India versus China. So that was one theme that played out. In terms of stocks, the topmost gainer on the Nifty was...
Welcome back. L&T Finance is a stock in sharp focus today, and it has been gaining on the back of what will be a change in the management. Mr. Dinanath Dubhashi is going to be superannuated over the next couple of months, and there will be a change of guard. Stocks up almost 7% on the back of that. Abhishek is here. Abhishek, so what is making the street so excited about this change? I think it's Mr. Sudipta Roy, if I remember the name, who will come in next.
Well, change is always good, and non-performance going out and performing candidate coming in is what is getting the street excited, it seems. So, current MD and CEO, as per a press release, Mr. Dinanath Dubhashi is to superannuate on 30th April 2024. Now, Dubhashi will act as the special advisor to the chairman of the board during this period. So, Sudipta Roy will take over as the company as its MD and CEO with effective from 24th January 2024. Roy is currently serving as group head, unsecured asset, and mostly the retail part of the business, which is cards, payment solution, consumer finance, etc. Talking about the non-performance that I mentioned, under Mr. Dinanath's tenure, that is from about Q1 FY17 or Q2 FY17 to now, the ROE has moved, quarterly ROE, that is, it's moved from 9.78% to about 9.37%, and AM has grown a little under 40% in last 28 quarters for this NBFC. So Motilal Oswal has written on L&T Finance. They say that the announcement comes as a big positive for LTFH as its tandem with its endeavor to transform into a retail franchisee. So the stock is currently trading at 1.2 FY25 price to book value multiple, which is at a 20% discount to its 10-year multiple. So that can be potential re-rating of the stock towards 1.5 times and then also towards 2x. Back to you.
Yes. Okay, thank you very much for that. Do stay on, because Shriram Finance is also tied up with Paytm to boost their digital loan distribution business. This tie-up is aimed to tap the potential of the underbanked segment. Earlier today, we chatted with Umesh Revankar, Executive Vice Chairman of Shriram Finance, to discuss more on this partnership and their growth outlook. Listen in.
Overall, I believe there will be a double-digit growth for the commercial vehicle. By and large, the demand is good. Towards the second half of the year, the demand should come back if the everything goes well, like having good monsoon, infrastructure being good. I think the demand will be back. Gadkari is talking about long-haul trucks only. So most of them have the provisioning of air conditioning. Maybe it will cost around 30,000-40,000 rupees more per unit. I don't really think it will be expensive. So I see one thing, what most important thing is there will be less driver fatigue and he will be able to drive more. So his productivity will go up. If the productivity goes up by 15-20% of each of the operator, then definitely what you bring on the table is much higher. Your revenue per vehicle per day will increase by 15-20%, and that's substantially enough to recover the additional cost.
Okay, so that's a view from Shriram Finance. We'll take a quick break on that note. On the other side, we discuss market technicals and get you some trading ideas as well from Sher Khan.
year so far. ITC doing extremely well, leading the FMCG index higher, and entry-level autos doing well. So Bajaj Auto up 28%. Among the losers, we had Infosys and Hindalco among the big losers. Adani Group stocks also took a bit of a beating. So this year we saw that. In the mid-cap gainers, pharmaceutical names found some mention. So Aurobindo Pharma up 64%, Glenmark Pharma up 55%, ABB doing extremely well as well, with defense themes like HAL up 45%. In terms of losers, we had a lot of stocks which lost on account of their individual news pieces. So we had ACC lower, Z Entertainment lower, AB Fashion because of valuation, City Union Bank lower as well. But the stars were definitely the small caps. So we saw names like Balu Forge, we haven't heard of, up 160% this year. Titagar up around 125%, Zentech 124% as well. And big gains coming in for Chennai Petro and RVNL too. But with all of this, just keep an eye out on the valuations. The Nifty on a one-year forward basis currently trades at 19 times, which is pretty much in line with its historical average valuations. And going forward, a couple of factors we need to watch out for. One will be the way the global markets pan out and interest rates globally. Flows into other emerging markets versus India as they pick up is something we'll be watching out for. Monsoons, festive season, all that bodes to domestic demand recovery in the second half. Will that continue or not? And then there are a bunch of state elections in India as well, all of them leading up to next year's central election.
This is H.T. Parekh, the man who brought housing finance to India. This handwritten EMI ledger is the first one used when HDFC began its business, and these are the names of the first Indians who took a formal home loan. DB Remedios was the first of this bunch, taking out a home loan of 30,000 rupees to build his own house in Mumbai suburb of Malad. This H.T. Parekh Legacy Centre has been set up here at the Ramon House in Mumbai, the house of HDFC. It pays tribute to the man behind the housing development finance company, H.T. Parekh, who not only started the company but also pioneered institutional housing finance in the country, allowing the middle class to realize their dream of buying and owning a house. In 1977, H.T. Parekh started HDFC with a personal contribution of 10,000 rupees and grew it into a juggernaut of the Indian financial landscape, a legacy his nephew Deepak Parekh has contributed to.
Although many frowned upon HTP's idea, it was the strength of his relationships with bankers and industrialists and the deep respect he garnered from this community that helped him to raise the first capital of 10 crores to start the business. He had personally contributed only rupees 10,000 at that time. When he was due to retire from ICICI, he took...
Welcome back. One stock sulking in trade today is Apollo Tyres, down 2%. This is after Morgan Stanley downgraded the stock. Earlier, they were overweight. Now they're saying they're equal weight and they don't see too much upside in the stock. Their target price has been raised to 425. The key reason is they believe all the positives have been priced in. The positives are the company has a Vision 2026 plan whereby they want to grow their margins, improve their return ratio. They believe that's priced in. The street has already priced in that this year is going to be quite strong, and they've also priced in that the commodity costs are going to be benign. That's the FY26 target price, their Vision 2026, where they want to improve their margins to more than 15% and their ROCE between 12 to 15%. So they believe the positives have been priced in, and remember, the stock in the last 1 year has more than doubled. The 1 year return on on Apollo Tyres, if you could get that stock price up, you would see is up 111%. That's the rate today. The bull case, according to Morgan Stanley, pegs the target price at 593, and this implies very aggressive market share gains in EU and India. They have a bear case where the stock price falls quite considerably. It practically halves to 172, and this is if there is a slowdown in the domestic demand and the EU recovery does not take place or it gets prolonged. But the base case is that the target price on Apollo Tyres is 425, which means not too much upside, which is why they've downgraded their rating on Apollo Tyres to an equal weight after the 110% rally in the last 1 year all the positives appear to have been priced in. But let's do a quick check on the markets then, because the Nifty has seen a pretty sharp fall. Just half an hour back, we said that, well, there hasn't been any sign of profit booking in the last 3 days. And look at the Nifty now. I think the Nifty has slipped about 75 points from the day's high. The high today was well over levels of 19,300. The high today was 19,336. So from the day's high, we've slipped close to about 75 points on the Nifty. The mid-cap index too has seen a bit of a fall. The correction has come in quite a few names. So banks itself have sold off. The Nifty private sector banking index is a bit subdued in trade. HDFC Bank was up 3%, now is up only 1.3%. Tata Motors has dipped into the red. Bajaj Auto continues to slide. HUL, Nestle, some of the consumption names too are selling off quite rapidly. Jay Thakkar, head of alternate research at Sher Khan, now joins in for a quick technical check. Looks like the markets are taking a bit of a breather, Jay. We're seeing some bout of profit taking. Where do you think it could take the index down to, this round of profit taking, or do you think it will get bought into?
Hi, very good morning to you. I think that the profit booking which you have seen can be seen until the levels of say 19,150 range, if it extends further. But I don't see being below the levels of 19,000 at least for this weekly expiry. I see a strong support around those levels. Hence, any dip should definitely be used as a buying opportunity. And I think the range of say 19,100, 150 would be definitely because on the upside. And the short-term target of ours for Nifty is 19,500. And as far as Bank Nifty is concerned, I think on an immediate basis, 44,800 to 44,650. And that's a very crucial, important support range for Bank Nifty. Hence, I think any dip should be utilized as a buying opportunity. And keeping that in mind, I have two buy recommendations. The first one is on AU Bank, which seems to have completed a V-wave corrective zigzag in a falling channel, has taken a good support at the lower end of the channel at the levels of 730.35. So one can buy AU Bank at the current market price of 758.59 at the spot levels, with a stop loss placed below 740, targeting 785 to 800 on the upside. And the second buy recommendation is on NGL. NGL has provided a very nice breakout from a sideways consolidation above the levels of 160. It has provided a breakout from a symmetrical triangle pattern. On the upside, we are targeting around 1120 to 1140 in the short term. One can place a stop loss below 1055.
Okay, got that, Jay. Thanks very much for your calls today and the trading ideas as well. Well, the market's trying to hold on to this level of 19,250 thereabouts. But as Rima pointed out, the decline has been quite swift in the last half an hour or so. We'll just talk about some of the other losers as well that are seeing a cool-off. Tata Motors is one of them now. Technology is weak as well. Ahead of the earnings season kicking off, most of your large-cap tech names, HCL Tech, the others, TCS, etc., they are on the red side of the screen. Days low on the Nifty IT index as well. Okay, so that is the market for now, but let's focus on some more buzzing stocks. Gujarat Gas is one that's been holding out in green territory. This after the government increased duties for propane gas imports for industrial use. Sonal is here to tell us more. Sonal, I'm guessing this, hurts the competition, which is why Gujarat Gas is up today?
Well, Gujarat Gas is in focus because the government has gone ahead. They've increased the import duty on propane to 19.25% versus 2.75%. This is on import of this good. This will be effective from 1st July 2023. Now, this would mean that propane price in India will have to be increased by 5 to 6 rupees per SCM. This is positive for Gujarat Gas because propane is a competition product. Because propane prices were lower for last couple of months, it was giving a stiff competition to Gujarat Gas's commercial segment, leading to lower volumes there as well. But now there will be an offset because propane prices will have to be increased. Just to give you some perspective, before this import duty had set in, propane pricing was anywhere between 32 to 33 rupees per SCM. Gujarat Gas's commercial segment pricing was at around 38.6 rupees per SCM, which led to lower volumes in their commercial segment. And also in July, there was an expectation of a further price cut in propane as well. So for now, that has been taken care of. This would mean that Gujarat Gas will be able to do higher volumes in their commercial segment, and that's why the stock is on our radar today.
Thank you, Sonal, for that. Another stock on our radar is Mazgaon Docks. The company has signed a contract worth 2,700 crore rupees with the Ministry of Defence. Vivek brings us the details. Vivek.
Well, that's right. It's a very important deal win as far as Mazgaon Dock is concerned. There were concerns at the end of, the previous fiscal, whether, the kind of ordering activity that we saw could continue. This particular large order win gives, assuages investor concerns to that extent. As you mentioned, the Defence Ministry has signed a deal of over 2,725 crore with Mazgaon Dock. Now, this is for a medium refit with life certification, and it is for the submarine INS Shankush. At the end of FY23, the company had a very strong order backlog of over 38,750 crore. Now, going forward, what are the key triggers to watch out for? HDFC Security says that, the Defence Acquisition Council has already gone ahead and approved procurement of close to 8 corvettes. And, the RFP, the request for proposal, is likely to come out in this particular year itself. Why is this important? The size of these corvettes could be close to 36,000 crore rupees. And most likely, this particular deal would be, or this particular bid would be split into 2 defense companies or 2 defense shipyards. So that's the next key important thing to watch out for as far as Mazgaon is concerned.
Okay,
right. Okay, Vivek, thank you very much for the details on Mazgaon. Manages to be in the headlines almost every single week. We'll take a break on that note. On the other side, we discuss market fundamentals. Siddharth Bhambre from Religare Broking joins in.
A new housing finance company to Mr. H.M. Patel, the then finance minister, and also a friend. He got a thumbs up to start this post-retirement venture, as no financial commitments were required from the government. At the age of 66, when most people hang up their boots, my uncle's long-standing dream of starting HDFC finally took shape.
The Legacy Centre documents not just HDFC's triumphs over the years, but HT Parikh's struggles too, right from convincing an India that frowned upon debt to avail home loans. This centre also houses snippets of Parikh's personal history, from letters he wrote to his wife and friends to appointment letters he handed out to the first employees, including Deepak Parikh and Keki Mistry.
This Legacy Centre is a humble contribution to HTP, as it showcases one of the most successful startups in an era of socialism.
HDFC will cease to exist come July 2023, and this Legacy Centre is envisaged as a beacon that tells its story. A story of how a small startup grew into a behemoth commanding revenues of over 60,000 crore rupees and has assets under management of over 7.2 lakh crore rupees, and group companies that are global brands in sectors like banking, insurance and asset management. The Legacy Centre will be open to the general public in July 2023. In Mumbai, Shilpa Rani Peta.
So this is the moment of truth. This is the moment of truth. I'm even getting my cameras wrong now. I'm that nervous to try and get started with this. But okay, so this is the button I press?
Yes.
All right, let's go.
This has already been done for you.
Okay.
So you can press the button a couple more
Again.
times. Okay, yeah. Now you need to scan this barcode in.
Okay.
All right, so you press the button a couple of more times. Yeah. Now it'll ask you numbers. You
Scan, so that's the one?
That's one. You scan the barcode.
Welcome back. So let's just quickly go over what's happening with the market as we speak. As we pointed out, it's really the IT space which is where the selling is. IT and autos. These are the two weak pockets as of now. Bajaj Auto is now looking at a decline of nearly 2%. And then there are the others. And that's the IT index. Nifty IT is really reeling under pressure. I guess, Rima, some jitters ahead of, the truths in the earnings season. I think some of the IT reports that are already out there pointing towards how this is likely to be another subdued quarter after the Q4 disappointment, right?
Yes, so Q1 is going to be very weak. I think you're going to be getting flat growth on a quarter-on-quarter basis, and June is typically a seasonally strong quarter. And there is still no conviction that the projects which were put on hold in March have started right now. Right? The delay in decision-making continues. There will probably be new projects which could have been put on hold. The fear now is that the weakness which was there in three sectors, basically it was in banking, high-tech, is it going to spread to the other sectors, right, if the economy truly slows down? So I think the street is just a bit jittery, but bear in mind the stocks have also run up. With no improvement in pure fundamentals, from the April lows, which is when Infi came out with the numbers, these stocks are up anywhere between 10 to 17%. Right? It's not that anything has changed on the margin for the stocks to have run up that much. Kotak said, we find the resilience in the stock surprising, the kind of rally that we've seen in the last 2 months. But of course, the market itself has, rallied. But particularly for Tech Mahindra, which is leading the decline, IFL today has downgraded the stock. So just keep that in mind. But Surbhi, the focal point of the market over the last 2 days, the big driver has been the HDFC twins, right? And that's going to be your topic of focus.
Well, you hit the nail on the head. Yes, we are focusing on the brighter things, not the selling in IT. That I'm sure we'll discuss with Rima once the numbers kick in. But today on Who Moved the Market, our digital show, which goes live every day at 2 o'clock. Today we're talking about the HDFC Bank merger, this mega behemoth in the making. Boards have cleared everything. It's a complete go-ahead. And remember that the record date for the merger is 13th of July. So from 13th of July, HDFC shares will not trade anymore. But what happens? What happens to, let's say, outstanding F&O positions? When do people get their share allotments? When does the merged entity start trading? A lot of those technical aspects is what we will focus on. So do tune in at 2 o'clock. We have Vivek on all of those technicals, explaining to us what the indices will do, FTSE, MSCI, how will they look at the listed entity, the merged entity, and of course Abhishek on the fundamentals and what really lies ahead in this banking landscape, this mega merger, finally over and complete. That's today's special at 2 o'clock. We're live on YouTube and on Twitter. Who Moved the Market? Join in. Okay, so that's of course all at 2. But right now, it is time to welcome in Siddharth Bhamre, Head of Research at Religare Broking, to talk about the shape of the market. Siddharth, good to have you on the show, and hope your week has started off on a good note. But what a phenomenal rally, right? April onwards, new financial year onwards, it was like a new year, a new market. What have you made of this run up to 19,000 plus? Do you think it has more legs, more steam? What are you telling your clients? Book some profits or keep buying more?
Good morning, Surbhi. So, Rima started the show by stating that, there are only 2 or 3 names which are taking this market higher. But if you look from 1 week perspective, last 1 week has been excellent for market. And before that, Surbhi, market was just consolidating. So it's mainly HDFC twin factor and some of the IT names which is pulling market. But I have always been proponent that irrespective whether it's one stock or it's, a number of stocks which is taking market higher. Market high means market higher. So it doesn't matter how many stocks are taking it higher. Our take on market is slightly cautious at this point of time. That doesn't mean that we are saying that there is a big correction in offering or, there would be, or we are suggesting sell your equities and move out. But this kind of run up is not justified from valuation perspective and also from macro headwinds, at least global macro headwinds perspective. I want to, throw some data pointers over here, Surbhi, and especially from what's happening in US. If you look at 2-year bond yield, it is now inching towards 4 mark. If you look at 10-year bond yields, those have also moved higher. Fed commentary is clearly stating that there are 2 more big rate hikes which are in the offing. Job market there, though, has shown signs of easing, but is still, suggesting that Fed would continue to hike the interest rates. even if you look at dollar index and other aspects, these aspects are suggesting that nothing much has changed. Yes, our domestic economy is doing great, and we would probably continue to do better. But our approach in market, and especially at these higher levels where valuations are not seemingly attractive, will be very sector and stock specific. And we spaces where we are still bullish, where valuation comfort is still there, and that is the approach we are. We will not go all out and say that this is a great bull run and you should, completely invested in equity. Yes, you should be here, but as you know, it is said, Surbi, that the party is on, but you should dance near the door. That kind of scenario.
Dancing near the door, huh? Okay, let's find out what you're dancing to then, Siddharth. What kind of stocks and sectors do you think that you'd still support?
So let's go with the theme. You guys have been talking a lot about auto numbers, and here we have stocks where we have strong valuation comfort. Maruti is something which I want to talk first. Maruti is still trading at very attractive levels. We have, done valuation on this space, and our target P multiple for Maruti is around 27, and stock is trading around 22, 23, and should be the 10-year average for Maruti P is around 32, 33. So it is still very attractive from valuation perspective. We have a target price which is around 11,500 or so, and going ahead we'll revise it upward. The other stock which we are liking is Eicher Motors. Here too, I understand the market is not very upbeat and is not very happy the way auto sales number have come for this month. But I think 1 month data will not determine the trend. I think last 1 year trend has been very positive. We are seeing a lot of people flocking towards the showrooms and buying new stuff. So we are optimistic. Even on Eicher front, though, stock on price front looks that, okay, it has not shown much of correction, but the earnings have catch up so substantially in last 1.5, 2 years that it is still looking attractive. So here too, the 10-year average for Eicher is around 34. It's currently trading at 25 PE, and our valuation multiple is around 30. So we are not even going to leverage. So valuations are pretty attractive at this point of time. So auto is also one of the space which we are liking, and these are the two names. And I can dwell further on the other spaces as well. So
what we'll do is we'll take a quick break. We'll also try and get you on video. We only have your audio line right now. So let's take that break, try and get Siddharth on video, and then we'll find out the other stocks and sectors that he's fond of at this moment with markets at 19,000.
Open it and empty the entire contents. You can keep that on the side and press the button.
Quite literally stirring up a storm of Rajasthani paneer.
Yeah, so now you press the button.
I press the button. Add the paneer.
You need to scan it first, otherwise it won't let you proceed.
It hasn't given me any red alerts so far, so I guess I'm doing okay.
So despite all these recipes that we get to try.
Remove output, okay, that's it, it's done. Wow.
Yeah, so instead of the packaging container, since we're all going to have this together.
Yes.
We're going to put this into.
Add garnish with coriander. So this is it, it's done?
That's done.
That is my Rajasthani paneer, which I have made from scratch with a little bit of help from the cloud chef, food tech, food AI that's been helping me with putting this together. Now the true test is going to be in the eating. So yes. we will find out if we've been a success or not. So we're going to head out. Oh, this is good.
腕の特徴はですね、こうやって人の2本の腕以上にたくさん腕を増やせるってことだけではなくて。
Welcome back. Let's turn our attention to a few stocks. Ultratech Cement. The stock is surging after the company has seen a strong growth in sales and utilization levels. Stock up 1.6%. Nigel joins in to break down the numbers.
Well, Ultratech Cement reported their quarterly numbers, and boy, didn't they look good. For the last couple of quarters, the company has started this trend of declaring quarterly numbers. And why shouldn't they, right? Because the numbers are looking so good. Now, let's run you through how the numbers shaped up. The consolidated sales numbers are up by close to around 20%. And out of this, there's a breakup because there's grey cement sales, there's white cement, and there's the international business as well. But the big driver is the grey cement sales because that's the cement that, is widely used. Out there, the growth is 20% on a large base, which is very, very encouraging. Remember, Ultratech Cement's grey cement sales are up by close to around 20%, but industry estimates suggest that maybe the industry grew by mid-teens, 14-15% at best. So they've outgrown the market and they've gained market share. What's more heartening is their capacity has moved up from around, that 115, 120 million tons to close to 130 million tons. And on that sort of a base, they're doing capacity utilization levels of around 90%. Explains why the street likes these numbers. They've gained market share. It'll be interesting to see in the time to come at the cost of who. Back to you.
Thank you for that. Get into a break. We'll come back and discuss more on the market. Stay tuned.
これ背中のソケットでですね、外したりつけたりで、さらに別の人に貸したりということもできるようになるんですよね。
もう一回よろしい？はい。いいです。
離れているところにいるこのパペットマスターがこれを使うことになります。でこれは日本で人形文楽というその3人で人形を操作するような伝統芸能があるんですけれども、それを遠隔からもできるというところにもちょっと近い話があります。
Welcome back. As promised, let's get back to that conversation with Siddharth Bhamre. Now, before the break, Siddharth was telling us that he's still willing to be in the party, but he's going to dance closer to the exit door. And I think that's very beautifully put. Quite easy to understand the sentiment there, Siddharth. So tell us, you gave us one or two auto names that you like. You like Maruti, you like Eicher. What else are you looking at? Let me ask you, for instance, look at all these defense stocks. They've gone through the roof. Even today, something like a Mazgaon. So does this make you a little uncomfortable looking at this rally, or are you still willing to kind of wade in?
So though we don't track that space, Subi, but I would like to address that issue which you're talking about. When market goes up substantially this way, and when most of the people are anticipating correction, you will be surprised with the quantum and the pace at which market would move higher. But whether markets are moving higher or they're consolidating, I think the prudent approach fundamentally would be to see valuations. And since we are not tracking that space closely, so I won't comment on that. But mid-cap and small-cap seeing a lot of action. Yes, some of them are justifying the up moves, but many of these stocks are not supported by earnings or the growth rate. So I won't venture out too aggressively over here. At the same time, I don't want to sound as if I'm very negative on market and I'm not suggesting to take exposure. But I would suggest whether markets are consolidating or moving higher because of liquidity, or India is the only option which is left to invest, I think it would be always prudent to have a valuation approach.
Siddharth, unfortunately not got you in a great line. So we'll have to leave the conversation here, but look forward to chatting and getting your views in on the other sectors like technology, the asset management companies, which skyrocketed on Friday, but today have come in for a bit of profit taking. This conversation for another time. Let's move on. The SGX Nifty has now transitioned to GIFT Nifty. All futures trading on the SGX Nifty will be routed through the GIFT Nifty. My colleague Yash spoke to the MD and CEO of NSE, Ashish Kumar Chauhan, and the MD and CEO of NSE International, LV Balasubramaniam, about this major development for the Indian markets. Listen in.
In a way, SGX has local brokers, they have clearing members, but they also allow direct market access through to people across the world. So they have literally millions of customers who are investing into products in which SGX trades. And so all of them now are eligible to trade on this product. And of course, the NSE IX has its own 60 members and their customers. We already have 40 more members in pipeline. So by this year end, we should have around 100 local members at the NSE IX.
I mean, a very natural question which sort of pops up is that would retail investors, Indian retail investors, be allowed to trade or not? What's going to be the mechanism around that? And who otherwise would be the eligible participants who would be allowed to trade as far as GIFT Nifty itself is concerned?
Now, this is a dollar market, and in some ways, it's home away from home. Indians, because we have capital account convertibility, Indians can take out money for investments only through liberalized remittance scheme. And that's where basically there are restrictions of investing or trading in speculative products like derivatives. This being a derivatives product, especially for the Nifty, GIFT Nifty, it's a pure derivatives products, and that's where the retail investors may not be able to trade. But the depository products, that is the depository receipts of Microsoft and many other US companies, the investors would be able to directly invest. Of course, they'll have to tab with the brokers who have set up in GIFT City and members of NSE, and that's where Indians would be able to actually directly own a depository receipt of companies like Google or Microsoft or Amazon, which they have always wanted to do through the GIFT City.
Bala, before I let you go, I have a couple of questions more for you. As of now, today, we see 4 products being introduced under the GIFT Nifty series. What's the plan going forward? What new products are you brainstorming right now? Would we see other such, parallel products also coming up? And importantly, do we see individual stock futures also trading as far as this particular platform is concerned?
Yeah, so in terms of the product offerings, I think apart from the Connect arrangement, we are looking at a lot more offerings which we directly give to our members. So single stock futures which are traded in India, single stock futures and options, all of them are available at our exchange. And I think this year in the budget there has been an announcement about allowing offshore derivative instruments in the GIFT City zone. So I'm sure a lot of international brokers will be excited with that as soon as that gets operational regime. So I think a lot more liquidity is expected even on the single stock future side.
Okay.
And in terms of other product offerings, in terms of what are the products in the pipeline, I think we are clearly looking at some DRs on Indian stocks. We're also, apart from the DRs which are there on the global stocks, which Ashish Bhai just talked about, and that is something which the Indian stock DRs is actually targeted at international participants, not the other way around, while the foreign stocks is targeted at the local retail participants from India.
Absolutely.
And we are also looking at listings of REITs, InvITs, In fact, we already have a very vibrant debt listing market. Out of the external commercial borrowing which Indian corporates have done, close to about 130 to 132 billion, almost 70 billion is now happening through the GIFT IFSC jurisdiction.
Today, of course, we made the transition to GIFT Nifty. Now, before this, what is the kind of open interest which sort of migrated from the closing to today? And what is your internal expectations in terms of average daily volume that you expect on GIFT Nifty itself?
So, just to give you a sense, today on the Indian market, the open interest is around $2 to $2.5 billion in terms of open interest value. So, yesterday with the switch happening, between the futures and options, we have got close to about $9.3 billion of open interest, out of which 8.1 billion is the futures and almost 1.1 billion is the options. So that is basically the size which we have already got. In terms of the volumes, I think on an everyday basis, close to about 1.5 billion to 2 billion transacts on the SGX. So we think that will definitely happen, but that is already their existing liquidity, which I think will get captured here. Additionally, since we are bringing a new set of players from the Indian zone who are in the IFSC, so I think the liquidity will start growing.
Okay, so there you have it. The GIFT Nifty has come to life. With that, we're out of time on this edition of Trading Hours. So it's a wrap from this entire team that puts the show together. But don't go anywhere because Halftime Report takes the action forward.
腕の特徴はですね、こうやって人の2本の腕以上にたくさん腕を増やせるってことだけではなくて、実はこれ背中のソケットでですね外したりつけたりで、さらに別の人に貸したりということもできるようになるんですよね。
もう一回よろしい？はい。いいです。
離れているところにいるこのパペットマスターがこれを使うことになります。でこれは日本で人形文楽という3人で人形を操作するような伝統芸能があるんですけれども、それを遠隔からもできるというところにもちょっと近い話があります。
So this is the moment of truth. This is the moment of truth. I'm even getting my cameras wrong now. I'm that nervous to try and get started with this. But okay, so this is the button I press?
Yes.
All right, let's go.
This has already been done for you.
Okay.
So you can press the button a couple
Again.
more times. Okay, yeah. Now you need to scan this barcode in.
Okay.
All right, so you press the button a couple of more times. Yeah. Now It'll ask you numbers. You
Scan, so that's the one.
That's one. You scan the barcode. You open it and empty the entire contents. And then you can keep that on the side and press the button.
Quite literally stirring up a storm of Rajasthani paneer.
Yeah, so now you press the button.
I press the button. Add the paneer.
You need to scan it first, otherwise it won't let you proceed.
It hasn't given me any red alerts so far, so I guess I'm doing okay.
Stocks scale new highs, riding on strong gains in the US on Friday before pulling back. Metals, energy and financials lead gains while IT and auto drag.
Stocks of HDFC and HDFC Bank gain as their integration becomes effective on July 1st, and the HDFC shareholders on July 13th look forward to receiving the bank shares. Analysts see room for gains and a bigger and a stronger HDFC Bank.
Two-wheeler majors see sales dip or rise at slower than expected pace, while passenger vehicle players record a decline. Commercial vehicles is the one segment showing growth.
Trade in the SGX Nifty derivative shifts from Singapore to the NSE IFSC in Gift City as Gift Nifty contracts. This will see open interest of almost $7.5 billion shifting to NSE IFSC in the Gift City, where 4 products will be available for trade. Those are Gift Nifty 50, Gift Nifty Bank, Gift Nifty Financial Services and Gift Nifty IT. Good afternoon. You're watching us here on Halftime Report. It's halfway through the trading session, and it's been a strong trading session. There's been smooth transition of power through today's trading session from one index heavyweight to the other. We are talking about HDFC Twins and Reliance. Nifty holding at that 19,300 mark. I'm Manglam Malu, with me Sonal Pudra. Hi, good afternoon.
Hey Manglam, good afternoon. So at the day's high is where we are looking at Nifty right now. Sensex passed that 65,000 mark. So another day to cheer for the bulls as well. Friday was a strong trading session, and that has continued after that small dip that we saw. That has been bought into as well. We'll have to see whether that continues or not. But a lot of chatter in the broader markets as well, though the mid-cap index is underperforming the benchmarks right now as we speak. But of course, Maruti Suzuki's June sales numbers came in below Nomura estimates. Senior Executive Officer Marketing and Sales Shashank Srivastava joins us to discuss that with us. Shashank, good afternoon. Thank you so much for joining us today. You know, you had earlier indicated some weakness in consumer sentiment at the entry and affordable levels. We see that in the decline in compact segment this time. What's the outlook going forward?
Well, I think you made the right observation. The share of hatchbacks, the small cars, have been coming down over the years. At one point of time, just about 3.5 years back, they were about 45% of the industry. And this quarter, they are around 33% of the industry. Marginally less than last year's, whole of last year, which was about 34%. Now, we did see a good growth in this segment last year. Last year, it grew from about 11,60,000 annually to about 13,40,000. That's a 20% plus growth. However, when you compare it with the peak that this segment had reached, which was in 2017-18, it was around 15,60,000. So yes, the segment has been coming down, largely because, as we discussed earlier, it is the affordability factor, the income levels in this segment not rising as high as the prices. For various reasons, prices have been going up, including commodity price increase and regulatory stringency. And we would expect this to be a flat numbers this year overall. That is around that same 13.25 to 13.4 lakh is the annual volume in this segment. And yes, regarding the June numbers, there is a decline, but we have to see it with respect to the fact that the Alto 800, which notched up about 13,000 numbers last year, was not there this year. It has been discontinued. And the numbers have been made up with Alto K10 to some extent. And that is one of the reasons why you see the larger decline in June.
All right, that explains the larger decline in June. However, you're confident of ending the year flat in that segment itself, Alto Kate, and making up for all the losses that you saw because of Alto 800 in the base itself. Shashank, you did briefly speak about softening commodity prices. Just wanted to understand, is margin expansion on the cards during the quarter?
There has been some amount of volatility in the prices of the commodities, but generally speaking, they have been softening in the last couple of quarters. Steel prices have been fluctuating. A mixed bag, I would say, but clearly the commodity prices remain at a very elevated levels compared with the last what they were 2 years back, and that was one of the main reasons why the OEMs had to increase prices. But I think we are very watchful about the commodity prices going forward. And I think if they remains softened, then you could expect the profitability to be better, because 75% or 75 to 77% of the cost structure of any auto OEM is actually dependent on material costs, which is clearly hugely dependent on the commodity prices.
Okay, so Mr. Srivastava, how do you see the UV segment going forward? At what levels do you think this particular segment will stabilize and then sustain as well?
I think with the improved production of the Ertiga and the Sensex, which we expect starting from this quarter, that is July onwards, I would expect the numbers to be around that 50,000 mark from the current levels. We, of course, have these 4 SUVs, which is the Brezza with the improved supply around 15,000 numbers, and also the Vitara, which is doing around 10,000 numbers. Fronx, which is we have some limitation of supplies, about 8 to 10,000, and Jimny, which did about 3,500 3,500 plus last month, plus Ertiga, which does about 13,000, and an XL6, which does about 4,000 or so. So I would expect with increased production, with the semiconductor situation getting better for these models, I would expect to be in that range of around 50,000.
All right, around 50,000 from closer to 43,000 in this month itself. And could you throw some light on the way forward for both the exports and the CV segment? I mean, relatively smaller parts of your business, but what's the way forward for that?
So export numbers, as you see, for June declined about 17%, but that has to be also looked with the perspective that there were some shipments that we missed, some ships which got delayed because of the hurricane Biparjoy, and that actually delayed the arrival of some of the ships. As you know, we export vehicles from the Gujarat ports. So Gujarat ports were badly affected by the Biparjoy hurricane, and that's the reason why you see some of the shipments couldn't happen by the end of the month, and hence the decline that you see. Overall, although we still maintain that we will show growth in exports over last year's number. Last year's number were 259,000, and we expect a growth over these numbers in this financial year.
You know, analysts are estimating 19 to 20% volume growth this year. So are you on track for that number?
I don't think we have made any projections of 19 to 20% for this year. So I'm not sure what analysis has led to that sort of projections by the researchers. However, for this quarter, of course, Maruti Suzuki has grown at around 12.5% in passenger vehicles, which is, I think, a good growth. All we have said so far is that our projections for the industry in this financial year is that it would grow around 5 to 7% to reach about 41 lakh or so from the levels of about 38.5 lakhs last year. So, and that Maruti Suzuki will grow faster than that industry growth. So we are still very much in line with that.
All right, you are in line with that. I mean, this morning itself, we got a note from Motilal Oswal expecting 19 to 20% volume growth this year. So that's the basis of the analysis that came in and the genesis of the question. But your market share in the SUV segment, I mean, you had a target of 25% share by the end of FY24. You had guided for that. Where does it stand at right now?
So we are now at June was about 21% plus. Overall, for the quarter, it is just above 20%. Last year, it was 12.5%. So we seem to be in the right direction because it has been progressively increasing from March, which was about 17%, 19% in April, 20% in May, 21% in June. So I think we are getting there. Of course, it's a very competitive segment, but we still maintain that we should be number one in the SUV segment also this year. And that's our big target and objective for this year. And happy to say that for the quarter, we reached the number 2 position, just behind Mahindra by a small margin. In fact, June numbers were almost similar with both of us at a 21% market share.
Okay, so tell us about the launches that you have planned for the remainder of the year, something that the customers can look forward to.
So we are going to have a launch the 5th of July. That is day after tomorrow for our premium MPV, the Invicto. We've already started the bookings for those for that vehicle. And yes, we have always been very strong in terms of launches, and this year is going to be no different. We've already launched the France and the Jimny and the Invicto day after tomorrow. So yes, we have a strong plan for products going forward. And hopefully we should do our volumes that we started targeting at the beginning of the year.
All right, and the coveted EV launch from Maruti stable, how far are you from that?
We have announced that we will be launching our first electric vehicle, the EVX, which we showcased in the Auto Expo in January. And the preparations are on. So we are actually well in advance of the plan, actually. And we should be launching it sometime in the next financial year.
Okay, Mr. Srivastava, thank you so much for joining us today and discussing the monthly sales for the month of June. We'll be speaking to you soon again. But for today, we'll take your leave right now. So that's Maruti up. The stock is down around 1% in trade. With that, we'll slip into a short break. Up next, we'll be joined by Robin Rena, chairman at Ebix Cash, to discuss their upcoming IPO plans and the impact of tax collected at source and foreign payments and the new FAQs that had come in for authorized dealers as well. Stay tuned for that.
So despite all these recipes that we get to try.
Remove output. Okay, that's it. It's done. Wow.
Yeah. So instead of the packaging container, since we're all going to have this together.
Yes.
We're going to put this into.
Add garnish with coriander. So this is it. It's done.
That's done.
That is my Rajasthani paneer, which I have made from scratch with a little bit of help from the cloud chef, food tech, food AI that's been helping me with putting this together. Now the true test is going to be in the eating. So yes. we will find out if we've been a success or not. So we're going to head out. Oh, this is good.
This is H.T. Parekh, the man who brought housing finance to India. This handwritten EMI ledger is the first one used when HDFC began its business, and these are the names of the first Indians who took a formal home loan. DB Remedios was the first of this bunch, taking out a home loan of 30,000 rupees to build his own house in Mumbai suburb of Malad. This H.T. Parekh Legacy Center has been set up here at the Ramon House in Mumbai, the house of HDFC. It pays tribute to the man behind the housing development finance company, H.T. Parekh, who not only started the company but also pioneered institutional housing finance in the country, allowing the middle class to realize their dream of buying and owning a house. In 1977, H.T. Parekh started HDFC with a personal contribution of 10,000 rupees and grew it into a juggernaut of the Indian financial landscape, a legacy his nephew Deepak Parekh has contributed to.
Although many frowned upon HTP's idea, it was the strength of his relationships with bankers and industrialists and the deep respect he garnered from this community that helped him to raise the first capital of 10 crores to start the business. He had personally contributed only rupees 10,000 at that time. When he was due to retire from ICICI, he took the idea of a new housing finance.
19,300 on the Nifty. There's a bit of a tug of war going on. On the way up, we have support coming in from a couple of heavyweights. Reliance has moved to the high point. We have ITC, which too has moved to the high point of today's trading session. So those are supporting the index on the way up. On the way down, we are seeing some bit of profit taking in the FMCG space. It's down to the low point of trade, and the IT index too is off highs, currently at the low point. But a bunch of stocks buzzing. Gujarat Gas is one of them. This after the government has increased duties for propane gas owner.
Oh yes, so it is a positive for Gujarat Gas, and that's why the stock is on our radar. Now, just to put the news into perspective, the government has gone ahead. They have increased the import duty on propane gas, that is to 19.25% versus 2.75% earlier, and this would mean that propane pricing will be higher in the country, and it was already expected to go higher, and with this notification there would be an impact of around 67 rupees per SCM. Now, why is it important for Gujarat Gas? Because it is a competition product for Gujarat Gas in the commercial segment, and because of the lower pricing that we have been seeing in the propane segment, Gujarat Gas was facing a lot of competition. It was having an impact on their volumes as customers in the commercial segment were shifting to propane as a source of their gas as well. Before this import duty, propane was priced as 32 to 33 rupees per SCM, and the Gujarat Gas's pricing was 38.6 rupees per SCM, making it more reasonable to buy propane versus Gujarat Gas. But after this, propane prices will go up, creating a level playing field for both the sources of gas, and that is the reason why Gujarat Gas could see higher volumes. In the anticipation of that, the stock is higher in trade, up around 3.5%, because this does come as a relief for the stock.
All right, so that's about Gujarat Gas. The stock doing extremely well, up around 3% in today's trading session. But let's talk about, the TCS rules, the announcement for that, which came earlier as well. And at the same time, we have a bunch of things that we need to discuss with eBixCash, which is the company, of course, which operates in the areas of payments, travel, technology, and also looking to raise almost 6,000 crores via the IPO. We have Robin Reiner, who's the chairman of the company, with us in the studio. Robin, thank you for joining in. A bunch of things to speak with you. So let's start with one of them at a time. The TCS. I mean, it's told that the rules are a little cumbersome, and especially for authorized dealers. What do you make of them?
Look, Mini, I think the government has already put them back by a few months, so I think I'll just stop at that. I think I'm hoping that the government will again relook at it and reconsider what they intend to do on that side. It is a regressive step in my view, but I think markets will handle it, whichever way ultimately the government decides. I think the markets will handle it, and people are not going to stop traveling just because, it is a higher tax on something.
Yeah, there has been some relief on the limit as well, to 7 lakh rupees. But generally, there is an FAQ for authorized dealers as well. They will be held responsible if proper papers are not submitted or more disclosures are not made. Do you think that is something which would be a setback for some of the authorized dealers that will increase more compliance? Anything that you've discussed in the industry as well around that?
Look, I think the first step, you talked about the 7 lakh amount, the relief that has been given. That's a pretty material relief because that's where majority of the market lies. And when you go beyond that, of course, it impacts the market a bit. But I'm not sure that it is such a big step that ultimately it will impact travelers or the overall forex industry per se. Having said that, it's something that I think the government still has to relook at it, right. And I'm still hoping that the government will reconsider their thoughts with regards to that.
You didn't see an impact of that on your business, did you?
Forex business has been growing pretty substantially across the industry, and some of it is because of the tailwind of COVID. Now that the COVID is a thing of the past, the Forex industry and travel industry are booming right now.
It has come back with a bang, right? So let's talk about your IPO plans. First of all, can we expect IPO from Ebix Cash in July? How much are you planning to raise? What will it be used for? Is it for some debt repayment you are looking at? Will it be for working capital requirements? If you can give us a sense there.
So look, we're going to be filing our UDRHP pretty soon. And once we file the UDRHP, then it will be up to the regulators, the Securities and Exchange Board. Accordingly, whenever we get our approval, we will launch our IPO hopefully in July, but we'll follow whatever SEBI tells us to do. Having said that, this is 100% primary. There's no catches to it. There's no secondary. Nobody wants to get out. It's 100% primary. We are trying to raise, we'll be raising 6,000 crores in the issue.
And what will that be used for?
Mainly, there are 2 or 3 different uses of it. Some of it is utilized for repayment of debt with the parent, and then there is a part of it which is going towards working capital, and there's a part of it which is going towards organic and inorganic growth.
All right. I'm looking at your previous comments as well. $350 million would be looked at in terms of repayment to your parent. You'll be losing almost $400 million for organic and inorganic growth for the company itself. 6,000 crores is what you're looking to raise. Could you tell us what's the kind of equity you're willing to dilute for something like this? Just trying to understand the valuations here.
Look, it's a loaded question. Within the preview, within the SEBI rules, I'm not allowed to honestly answer that. But soon, once we announce a price band, you'll get a better picture about it.
The reason why
now I can't comment about it.
I asked that largely because the international parent, currently the market cap of that is close to 800 million USD, and you're looking to raise similar amounts in terms of an IPO. So suffice to say that obviously the Indian business will be valued a lot more than the international parent.
Look, you have to also remember that the international business actually, before we stepped into India, had a market cap of 3.2 billion. And most of the international business took a little bit of a hit as we started investing in India, simply because we are a giant in the US and other countries in the field of insurance, and they didn't understand what we were trying to do in India. As also there was a little bit of a debt overhang that the parent had. The parent intends to be a debt-free company this year, so you can't first of all relate those two events in any view. From my perspective, because look, the market cap is a function of many different things, and we're comparing apples and oranges here.
Okay, so that's about the valuation bit, but before people would like to invest in your company, when you come out with an IPO, they would want to understand what is really the revenue profile looking like. You do have a number of businesses. Can you explain that to us? What's your business model exactly?
So look, our business model, we're a platform as a service company. Okay. Primarily our focus has always been on providing platform as a service products, but we have 3 main divisions in the company. There's the fintech technology division, which is close to 52% of our revenue. Then you have the payments division, and then you have the travel division. Payments is the second largest division. And when you consider these 3 pieces, 2 of these pieces are based on technology based, which is the fintech and the travels division, wherein we provide technology to various players. Sometimes our own competitors we provide technology to.
For which you get a take rate.
We get a transaction fee, we get a subscription fee. There's different models for different products, but it's a who's who customer base that we have across the world in 60 plus countries on fintech and so on. In payments, we do Forex, we do inward remittances, and we're one of the leaders in the market, in outward and inward remittances, we're a big name. But here the model is of convergence. We are actually converging all the processes. We're trying to make sure that we take care of the digital journey of a consumer, and while powering the technology of the back-end players, the front-end players. So I call it creating an airport. What I mean by that is that when you can either be in a product business wherein you're like an airline, or you can be in airport business where you act a little bit more non-aligned, and you create a platform and you converge everybody and you bring economies of scale to everything. And that's what we're trying to do.
Is there any money that you make in the data sharing business? I mean, do you monetize the data that you generate?
No, we don't. our industry has, we don't get to see the data. Our industry has very strict rules regarding privacy, so absolutely not.
Okay. So, you know, one of the other things that potential investors would like to know is some of the litigations that you mentioned in your DRHP as well. What is the status here? Because there was something that happened with the parent company as well when the auditors had resigned because of the business in the Indian entity. That was the gift cards business. Is there any update on that? Is that undergoing?
Look, I think the first thing is proof lies in the pudding, meaning we are right now, what you talked about is a pretty old scenario. You're talking about 2 years back, basically. And since then, meaning, look, we have had, that's, first of all, that happened in the parent, it didn't happen in India.
Right.
But more importantly, since then, we've basically had, we have 2 auditors today. We have, we have 2 very big named auditors in India. We also have a who's who independent board that comprises us. We have the who's who of Big Four who does our SOX compliance and those many things, and everything has come out absolutely clean. So what you're talking about is fairly old news. Today, when you talk about, for example, you talked about some litigation. I think the most important thing to understand is that, first of all, everything that is out there is in the DRHP.
Right.
Anything if something is sub judice under the SEBI rules, I'm not allowed to talk about it. So unfortunately, I can't answer that question.
All right. Finally, before we let you go, your listed subsidiary in India, which is Delphi World Money, it has a promoter holding of almost 90%, 89.95%. By when do you bring it down to 75%? Because that's the minimum public shareholding norms.
And look, I actually, you're asking me a question that actually I don't have an absolute handle on right now, because that's not a highly traded stock. I know that we would be more than happy to bring it down to 75%. At the same time, it's a question of the volumes that exist in the market. So that's pretty much the answer to that. So within the rules and because there are volume rules on how we can sell, and there has to be enough volume in the market to be able to sell. So we can only do what the market allows us to do.
Okay, so last question before we let you go. Your revenues, they have been increasing to 2,400 crore rupees in FY23, margins to at 40%. What is the growth rate looking like going forward? Of course, you can't give the exact answer before the IPO opens, but is this something that you'll continue?
Look, I never give guidance in my career, so I'm not going to talk about the future. All I can tell you is if you look at the DRHP and the addendum that has been filed, it shows you a CAGR growth of around 53%. That's what I would focus on. That's where we have been. What happens in the future, I can't right now comment on.
All right, Robin. Thank you for joining in. Thank you for your comments on the current scenario with regards to TCS, and also important commentary coming in ahead of the IPO filing itself. We'll speak to you, of course, and expect you to join us when the IPO itself opens. All right, with that, we'll take a short break. On the other side, we have Ruchir Jain, who is the lead research at 5paisa.com, joining in with some trading strategies.
To Mr. H.M. Patel, the then finance minister and also a friend. He got a thumbs up to start this post-retirement venture, as no financial commitments were required from the government. At the age of 66, when most people hang up their boots, my uncle's long-standing dream of starting HDFC finally took shape.
The Legacy Centre documents not just HDFC's triumphs over the years, but HT Parikh's struggles too, right from convincing an India that frowned upon debt to avail home loans. The centre also houses snippets of Parikh's personal history, from letters he wrote to his wife and friends to appointment letters he handed out to the first employees, including Deepak Parikh and Keki Mistry.
This Legacy Centre is a humble contribution to HTP, as it showcases one of the most successful startups in an era of socialism.
HDFC will cease to exist come July 2023, and this Legacy Centre is envisaged as a beacon that tells its story. A story of how a small startup grew into a behemoth commanding revenues of over 60,000 crore rupees and has assets under management of over 7.2 lakh crore rupees, and group companies that are global brands in sectors like banking, insurance and asset management. The Legacy Centre will be open to the general public in July 2023. In Mumbai, Shilpa Rani Peta.
142 trading sessions and a 4% gain on the Nifty is what it took for it to hit a fresh record high once again after December 1st. Sensex up by that much as well. Nifty Bank, however, has been a lack of participant in this up move, 2.6% in terms of gains. But this gain really, or this move to the record high really belongs to the small caps as well as the mid cap indices, both of them up in double digits in this year itself. And it also belongs to a lot of the domestic sectors. As you would see, you know, the realty sector, the FMCG sector and the auto sectors have been the ones which have done extremely well, whereas the global facing sectors like IT and metals have seen a bit of a decline in this year itself. India versus the world, we've seen a big rally come by, but we've seen an even bigger rally come by on indices like Nasdaq, Nikkei, the German index and S&P 500, but that's also because they fell a lot more in the previous year than the Nifty itself. What are the indices we've done better than? We've done better than Dow Jones, we've done better than FTSE, we've done as good or slightly better than Shanghai as well. Even as the frontline indices are at a record high, remember the small cap index is still 9% away from a record high. So let's see where that goes. This rally picked up Welcome back. You're watching us here on Halftime Report. Let's take note of what's taking place in the market from an F&O lens. To start things, we saw the rally being led by the HDFC Twins. So if you just take a look at the contribution chart, you would see that HDFC Twins, of course, both HDFC Bank and HDFC Limited have been supporting the market in terms of most amount of gains coming in for the Nifty itself. But increasingly, after that dip, we saw Reliance take over. So Reliance is now the topmost contributor on the Nifty. And the other one, which is lending its support, is ITC. So Reliance, ITC and HDFC Twins are the star batsmen for today's trading session. However, just keep an eye out on the mid-cap index, which is underperforming. And from the highs, we've seen a bit of a dip on both the Nifty as well as the Nifty Bank. So the Nifty Bank high today was close to around 45,353. The Nifty high today, 19,336. Let's see whether we go ahead and are able to cross past that as well or not. The mid-cap index currently at the lower end of today's trading range. In fact, at the low point of trade, up just about 0.25%. And we have the advanced decline lines also coming rather close. So we have close to around 1.5 stocks which are gaining for about one stock which is declining. Just keep an eye out on a couple of these parameters which tell you that maybe there's time for consolidation. The first one is the put call ratio on the Nifty, close to around 1.5 now. It's near stretch zone. And secondly, the India VIX, which was quite feeble over the last few trading sessions, has seen a bit of a spike, and it's spiked after a long lull period. So those are a couple of factors that tell you that maybe the upside could face some congestion. Where is that congestion? 19,300 straddle writers are extremely active. So the 19,300 call has a premium of 75 rupees. Were we to cross today's high, 19,350 to 19,375 could see some resistance. Support, however, comes in around 19,200. That's what the 19,300 put is indicating. So those are a couple of factors that we'll have to watch out for.
Okay, that is the F&O space at 12 p.m. But let's get in Ruchi Jain, lead research at 5paisa.com for some technical check on the markets again. Ruchit, what are the charts suggesting now? It's another good day for the bulls.
Yes, hi, very good afternoon. I think definitely there is no doubt about the trend for the market that that uptrend is still getting continued. But what you can see that some of the stocks or some of the indices such as mid-cap index is now in overbought zone. So we may see some shift of momentum from the mid-cap space to some of the large-cap space which have seen a relatively consolidation of late. So we are still positive on the market, but we would advise to go with a very stock-specific approach. And as far as levels are concerned, usually whenever indices hit all-time highs, we take retracements of the previous corrections to see the next resistance levels for the market. And 127% retracement of the previous corrective phase which we had seen in the market is coming around 19,450. So I think we would see another at least 140, 150 points up move from here on in next few trading sessions before we see any kind of correction within an uptrend. So we are advising to continue with a positive bias for probable targets around 19,450 in next few days.
Okay, and what would your individual technical picks be, Ruchit, in that case?
Yeah, so a couple of buy recommendations. First is the buy call in Grasim. So ideally, as I said, we are focusing on those stocks which have not moved yet and now are showing signs of some breakouts from consolidation. So Grasim is one of the name which we have seen forming a support base around its 89 EMA, and the volumes have started increasing now. So we expect some good momentum in July series in Grasim. So one can go long in Grasim at current levels with stop loss below 1730 for probable targets around 1840. And I think PSU banks, after some consolidation, are witnessing a good momentum. In fact, we have seen a good consolidation breakout in the Nifty PSU bank index as well. So PSU banks are likely to do well, in which Bank of Baroda we are expecting the outperformance to continue, because last 2 or 3 weeks when the entire PSU banking witnessed some consolidation or some price-wise correction, Bank of Baroda stood out during that consolidation phase. So relative outperformance during corrective phase usually continues at outperformance when the uptrend resumes. So Bank of Baroda can be bought at current level with stop loss below 187. Possible targets are seen around 205 to 208.
All right, Ruchi, thank you so much for joining in. With that, let's take a short break. On the other side, we tell you about the stocks that are gaining in trade today. FII flows pick up as well. Start from March, April, May, we had that record month, almost 28,000 crores coming in from the FIIs. And in June itself, so far, we've seen almost $1 billion come by in the cash market. What are the key triggers and reasons for the FII flows for our market picking up? The biggest one, of course, is the Indian macros doing a lot better than global macros. So that's one big reason. The second, domestic themes in India doing extremely well. The third thing that we're looking at is stable crude cooling inflation, bodes well for the Indian macros as well. And as FII flows pick up, we also see higher emerging market flows coming into India versus China. So that was one theme that played out. In terms of stocks, the topmost gainer on the Nifty was Tata Motors this year so far. ITC doing extremely well, leading the FMCG index higher, and entry-level autos doing well. So Bajaj Auto up 28%. Among the losers, we had Infosys and Hindalco among the big losers. Adani Group stocks also took a bit of a beating. So this year, we saw that. In the mid-cap gainers, pharmaceutical names found some mention. So Aurobindo Pharma up 64%, Glenmark Pharma up 55%, ABB doing extremely well as well, with defense themes like HAL up 45%. In terms of losers, we had a lot of stocks which lost on account of their individual news pieces. So we had ACC lower, Z Entertainment lower, AB Fashion because of valuation, City Union Bank lower as well. But the stars were definitely the small caps. So we saw names like Balu Forge, we haven't heard of, up 160% this year. Titagar up around 125%, Zentech 124% as well. And big gains coming in for Chennai Petro and RVNL 2. But with all of this, just keep an eye out on the valuations. The Nifty on a one-year forward basis currently trades at 19 times, which is pretty much in line with its historical average valuations. And going forward, a couple of factors we need to watch out for. One will be the way the global markets pan out and interest rates globally. Flows into other emerging markets versus India as they pick up is something we'll be watching out for. Monsoons, festive season, all that bodes to domestic demand recovery in the second half. Will that continue or not? And then there are a bunch of state elections in India as well, all of them leading up to next year's central election.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, a lot of stocks are buzzing around in the broader markets. But let's talk about one from the Nifty pack, because we're talking about L&T Group as a whole. It is eyeing leadership in real